Delegates, welcome to the first day of 3-day workshop on GST. Before we move on, let us rise for ICA motto.
Yaesha sukteshu jagrati Yaesha sukteshu jagrati Kamam 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 pursho nirvimana Tadeva shukram Tadeva brahma Adeva mritamuchyate Tasmin lokaha shataha Sarvyatanunatyavyakashyanatyapi Etadvaita 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 Etadvaita
Thank you, delegates. This is the 21st batch of workshop on GST. So far, SARC has conducted 20 batches and trained more than 3,000 delegates, which includes members, non-members and students. This is the 21st batch. The agenda for today, we have post-lunch session, returns under GST, law and GST on job works will be handled by Renuka Murli. And the morning session, GST overview and levy, provisions relating to scope of supply and time of supply. The session will be handled by P.T. Rajiv sir. May I request the speaker to occupy the dais. Please put your hands together to welcome the speaker. P.T. Rajiv is a fellow member of our institute and is a partner in a leading firm at Chennai. He is qualified both chartered accountant and company secretary, and he has also completed his bachelor's degree in business administration with first rank from University of Calicut. He had also secured scholarship from ICI throughout his chartered accountancy course for his merit in academics. He ventured into professional practice after successful employment stints in the audit and assurance department of a Big Four firm. He has specialized his practice in GST and is providing GST advisory services to some of the big business conglomerates in India, having over rupees 50,000 crores annual turnover. He is a regular speaker in the in-house training of the firm, and he has also presented papers on GST in various business forums and MSME association. He has conducted many corporate trainings on GST to impart the knowledge of the biggest tax reform in India. With this prelude, I present before you the speaker. Over to Rajiv sir.
So very good morning to one and all present here. I need some response. Yeah, very good. So today, ma'am, if you can come to the front row, it would be better. Yeah. So thanks, Raman, for a wonderful introduction. And I'm happy to stand in front of all of you for the 21st workshop on GST, which has started way back in 2017 end or something, and I'm fortunate enough to be part of this successful program for a long period of time. And we could train a lot of chartered accountants, a lot of students, a lot of people from the industry to impart the knowledge of GST. So mainly what we are trying to do in this particular program is to transfer the fundamental concepts of GST to all the participants. That is what we are trying to do. And the one step we are going ahead, bringing all our practical exposures so that it would be very easy for you to understand the theoretical knowledge, which you can easily grasp once you have the practical knowledge. And let me tell you very honestly, GST is one of the biggest tax reforms which is seen by the Indian history. And you can see that though everybody is giving that kind of hype, let me tell you, it is very simple. I would put it this way, it's a very simple tax. The reason why is, unless if you get one practical exposure into these areas, you will find it very interesting. I felt that it is very, very interesting when you bring up some points, when you discuss across the table with the industry people, and the way they are coming up with their observations on these particular topics and our observations is fabulous. You will find it very interesting, because when you say that this is not as per the law, they will come up with an alternative. They will not trigger the fact, they will not trigger the provisions of the law, but they will trigger the facts of the case and then see that it is in line with the provisions of the law, which was a very wonderful aspect which I could appreciate from the industry. And it is not illegal. They are just trying to see how they can come out of the issues without compromising on the provisions of the law. And nobody, I feel that that is another interesting aspect which I could find is, wherever we have been advising the clients, they are telling one important thing. Rajiv, you tell me whatever the issues, because this is the first year of audit which we are going to do, and we are all in the first year. So you tell me what are all the issues which we have to improve, and what are all the issues which you come up. You give us a solution also. That is another interesting aspect which I could find. Normally, they will say that you do the audit, give the audit report, or they will say that you advise, and at that time they will not come in an official manner. Whenever they have an issue, they will ask us for the opinions. But here the interesting fact is, they are all little proactive and saying that you understand, you study our structure, business models, you understand the business thoroughly, and tell us what are all the GST issues which we may have at future point of time. So which was an interesting aspect for me, because GST cannot be advised. You cannot just read the GST laws and advise the clients. You have to have an understanding of the business, which we learned from our initial days, that understanding of the business is very, very important. But for the GST, let me tell you, without understanding the business, you will not be able to appreciate, or you will not be able to advise the clients. The reason being, GST is not one act which cannot be advised or which cannot be used from the financial perspective. It has a lot of non-financial aspects. Say for example, stock transfer, which you cannot see it in your financial statement. Can you see that? You cannot see, because if there is a branch transfer, the liability alone will be booked, and invoice also will be outside the book. It will not be, I am talking about the financial books, not for the GST books, it will be part of it, but generally these are all transactions which are outside, and there are cross-charge mechanisms where if one branch is providing service to another branch, whether the invoice has been raised. So for all these things, you have to understand their business, where their administrative office is located, where the marketing team is located, what are all their business, whether they have a canteen, because then you have to rely on some of the fundamental concepts like scope of supply, whether the supply will be applicable to that particular transaction. So hell lot of things. So let me just tell you, within this short span of time, we are very fortunate enough to advise some of the big companies, and we are fortunate enough to complete almost 50-55 audits within this short span of time, because that is what I said few minutes back. Most of the clients are not reactive now, they are very proactive now. They told me very clearly somewhere in August, September 2018, they said, Rajiv, I want the audit to be completed. Some of the companies, they approached me even in April 2018, said that financial year is over, tell me what are all the issues. So we gave a lot of suggestions to them, we did the audit. It's not like a GST audit, It was more of like an advisory kind of audit. And now, before 20th of April, the last date for availing the input tax credit, all companies came and said, tell me what are all the issues, let me freeze my liability, whether it is interest, whether it is tax liability, you tell me what are all the liabilities. You won't believe, even the biggest companies in India, they are not in line with GST. I can tell you very honestly, because I have seen such big companies where even cross charge has not been done. They are still under the impression that VAT and service tax both got merged. The new law has come into effect. No, that is absolutely wrong concept. What is GST? GST has to be learned completely after unlearning whatever you learned under the old indirect tax laws. Because I could see one small example I will share you. One company, they are having office, their administrative office is in Express Avenue. They are occupying, I'm just changing the floors, they are occupying second floor and third floor. Second floor is occupied by the one registered person, and for the administrative office, they have taken one more registration and they are occupying the fourth floor. So both the floors are occupied by the same company but by the two registered persons under the eyes of GST law. Now the rent is paid by the branch office, not the administrative office. Now what happens? They are saying that these agreements are under the old executed 4-5 years back, where we agreed to pay the rent for both the floors. We agreed to pay that amount. What is the big deal? It is from the same bank account. It is for the same company. Then how does it matter? But they have to understand one important thing, that you are paying the expense of another registered person. So if you are doing that, it is absolutely wrong. What is the issue here? Your input tax credit, to the extent of that rent will be blocked, to the extent of whatever they have paid for the fourth floor, it will be blocked, because it is not for the purpose of your business. So section 16 will come and hit them, and then the ITC will be blocked. Another aspect is, they found that one company, after the GST, introduction of GST, they decided to close down their operations in Pondicherry. They have branches across the country, and in the state itself they will be having plenty of branches because they are into FMCG products. So what happened? In the Pondicherry, after introduction of GST, they felt that if we maintain the Pondicherry branch, which is hardly 120 kilometers from the city, there will be a blockage of working capital. So they literally closed down their operations in Pondicherry, both in terms of human beings, second in terms of stock. They cleared everything. Rented premises, no office, nothing. But very unfortunately, they had an input tax credit of 18 lakhs which was lying in their input tax credit ledger. So first is, we were the advisors for the company. So first question is, how to utilize this 18 lakhs? Very unfortunately or fortunately, the company's head office is located in Noida, where this company is having almost 10 chartered accountants sitting in Delhi, and some other finance professionals as well. So finally they have taken a call that we will do a cross charge. We will simply raise an invoice from Pondicherry to Chennai for 1 crore for provision of service. So credit, what will happen there? It will be charged, the credit will be adjusted, it will come to Chennai. Very good, excellent proposition, very good. Normally there is a habit, everybody will consult you only after the damage has been done. I think everybody also, all of you sitting here would have faced this issue, that they will take decision. After that, just for confirmation, they will tell you that we have done like this. Now what is the real issue here? The real issue here is, they told us that we have raised an invoice, all these things. I said it is absolutely absurd. You are not eligible, Chennai is not eligible to take credit. They asked why. I said under section 16 subsection 1, it clearly says that the recipient should have been received the goods or services. Have you received the goods or services? They said no. They said, it is a service, how do you prove? I said, do you have any employees there? No. Do you have any stock there? Then who is providing the service? How can you substantiate it? It is very difficult. Then second question, typical Indian question. Sir, already done. It is, turnover is in crores and crores. How are they find out this one small 1 crore? I said, nothing doing. These are all questions which you have to answer as a professional. I can tell you that they can easily find out. They can easily find out, because there is no, so far in the history of that company, there is no cross charge from Pondicherry to Chennai for the services. Suddenly there is a 1 crore invoice, 18 lakhs. They can easily find it out. Whether they will find out or not, that is none of my business. Because you made a crime and you are saying that will I be get caught? That I don't know. It is up to your luck. If you get caught, you are gone. That's all. Then you will have interest under section 50, subsection 3, where interest will be 24% per annum. Second, you will have 74, which will be coming into the picture. That is another aspect where 74 clearly says that equal to the amount divided and all, then that will be there. 122 will come into the picture because you are deliberately evading some input tax credits and all, so penalty will come there. All these issues are there. Do you want that to be taken or not? They asked me, can you give it in writing? I said, very good, I can give it in writing. I gave it in writing. They forwarded to the head office. They all discussed. Finally, they have reversed the credit along with the 24% interest on this. Now the second question, can you take refund of that? No. 54 subsection 3 clearly says you can go for refund only in two circumstances. One is zero rated supply. Second is your inverted duty structure. That is, my outward liability comes to 12% and inward comes to 28% or 18%. That means you always, that consistency is there. For your inputs the rate is higher and output the rate is lower. In such cases the accumulated input tax credit you can go for a refund. So these are a couple of things which I have observed from the industry, and there are plenty. I can give you plenty of practical examples which you have to observe from the company perspective. Let me just tell you one important point, that we are all going to do audits. My humble request is two things. One is, the client will always say, sir, this is just a reconciliation. I have already reconciled, everything is absolutely matching. This is the first point they will say. In one company case, I could see they told me that everything is reconciled. Where we are not the auditors, we are advising, so there is an independent concept, so we are not doing the audit for that company. There, the unreconciled input tax creditors alone, I am talking about 200 crores. They are matching with the 3B versus 2A. 200 crores, they are still reconciling. So, but that is a risk which we are carrying. The only thing is, you can take the credit, but as an auditor, your job is not only restricted to reconciliation. Reconciliation, one company I could see, perfect means perfect, superb reconciliation. You don't have to do anything. Before you go, they have already reconciled it, they have given all the reconciliation. Three-way match they have given to us. We requested for three-way match, they gave it to us. Three-way match is what? 3B versus books, 3B versus GSTR 1, books, GSTR 1 versus your your books. That means that three-way, you have three concepts, right? Books, GSTR 1 and your 3B. So these three things you have to always cross-verify. 3B versus books, 3B versus GSTR 1, books versus your GSTR 1. So if you do this reconciliation, you can easily find out whether there is any difference or not. This is for your outward. And inward also you have to do the same three-way reconciliation. Books versus your 2A, books versus your 3B, 2A versus your 3B. If you do this reconciliation, 99% of your reconciliation will come out. Subject to the declarations which they have made in the subsequent 3Bs, which will be a reconciliation item. But don't go with the reconciliation point, because reconciliation is not GST audit. I will put it that way. Reconciliation is only a 5%, which constitute only 5% to the GST audit. But mainly the clients will say, sir, it's all reconciliation, sir, we have already done. And second thing is, for the fees, charging and all, they will say that no, don't charge too much. But let me tell you very honestly that GST is not a small audit where you can charge small amount. To be very honest, some of our clients, the GST audit fees are much higher than the statutory audit fees. because there is a quality which you are providing to the client, and they will also appreciate it once you do the audit properly. Now let's come to the fundamental other topic, that is GST supply, scope of supply, and second is the levy, and third is the time of supply. So two things before I get into the topic. I want this to be very, very interactive, because otherwise it will be very boring. And I'm not going to show you all my PPTs, because that will be running into pages. If you go with the PPT, nothing will be done. Okay, you can see beautiful PPTs, because the problem is if I show the PPT, people will be looking at that and answering it. So what we will do, we will close the PPT, we will discuss. Now, first thing is, I'll just get into the topic directly. Scope of supply. Scope of supply. The first point is scope of supply. See, please understand, if there is a supply, then only levy will come into the picture. Section 7 is not satisfied, section 9 or 8, 9 or for that matter any subsections for that matter cannot get into the picture. If there is no supply, levy cannot get into the picture. So please understand, don't directly jump into the rate finding or time of supply or place of supply. No, first you see whether there is a supply. In the previous regime, tax regime, we used to call manufacture, sale, etc., etc. These were the keywords. But supply is much wider than those two words. Manufacturing. If you go to section 2, subsection 17 of the CGST Act 2017, you can see the definition of business, where manufacturing is one of the business activities. Manufacture, trade, profession, commerce, wager, these are all the words which they have used in the definition of business for the matter. Now, in the scope of supply, it starts something like this. Section 7, 1A. It starts like this. Scope of supply includes, that's very, very important, supply includes, it's only an inclusive definition, not an exclusive definition. Or it is not, they are not using the word means. So, it can include anything at later point of time. I will give you fantastic examples for that matter. So, supply includes all forms of supplies. All forms of supplies. They are not excluding anything. Such as, they are giving some examples, such as sale, transfer, barter, exchange, lease, license, rental, disposal. 8 keywords they are using. 8 keywords they are using. And they are further going down and saying, provided or agreed to be provided by a person in the course or furtherance of his business for a consideration. Very, very important, for a consideration. So I used a couple of words, I will just repeat it for that matter. Inclusive definition, no problem. It can include anything for that matter. Second point, I used 8 keywords, right? Could you observe that provision of service is not there in that particular word? Did you notice that? Provision of service is not there in that. So do you mean to say that services provided are not supplied? Could you observe that? It's only 8 keywords they use. One is sale, transfer, then barter, exchange, lease, license, rental, and disposal. These are the key 8 words they have used. Provision of service is not there. So can I say that service is not there in the definition, so it is not taxable? Can anybody throw some light on this? Yeah, why? Just tell anything. Even if you are saying wrong things, I like wrong things, because all creative things will come from the wrong thing only. So tell me whether provision of service, is it a supply? You are all chartered accountants here. Most of them are, I saw the list, and then most of them are members. Now you are providing supply of service. You are charging GST. On what basis you are charging GST? Tell me. You already charged GST. Because the word used for the act is goods and service tax. and previous service tax law got merged, subsumed with the new law. So obviously it is deemed that, so I have to charge GST. That is what, right? But you tell me technically, why are you charging GST on your services? Why? Yeah. Outward supply, correct, sir? Absolutely outward supply. But my point is, why on services you are charging GST? If it is a sale, disposal and all, you can do. But on services, why? On your professional services, why are you charging GST? Sorry? Supply includes, where is the inclusive definition? Services are not there, only lease, license and all services, but that is different services altogether. But your professional services is not there in the definition. I'll just tell you, it is only inclusive definition. First point which I told is inclusive definition. It can include anything. Anything includes everything. So, they can include anything under the sky for that matter, for the purpose of supply. If you look at, now you have to compare it with the other, country GST laws. See, if you look at other country GST laws, say for example, for that matter, our Singapore law or Australian laws and all, they in the supply definition, they clearly define the word provision of service. Supply includes provision of service. So when you compare, you can understand that that word could have been brought it into this definition to make it more clarity to this particular definition, because such an important definition. But when it doesn't matter, anyway, that inclusive definition, they know all these things will happen, so anything can be captured in this. Sale, disposal, all these things, Now, made or agreed to be made. So if you are agreeing to provide some services also or sale also, it is a supply. Now, two important points which I have to say, which you have to be very, very careful. For a consideration. Second, for the business or for his furtherance of his business. Very, very important points. 7.1a clearly says that all these things are there. Consideration should be there and it should be for his business or his furtherance of his business. This is very, very important. Assuming that I am making some sale of 1 lakh and which I am not charging to an unrelated party, then my consideration, there is no consideration, so no GST. Very simple. Second example, I am a chartered accountant. Assuming that I am a proprietor, I register, but I have some personal movable assets, purely personal movable assets. It is not there in my balance sheet or it's not part of my business asset. If I am selling that, it is not in the course of my business, so GST will not be applicable. So I said these two things. Now, let's come to 7.1b, where it clearly says import of service for a consideration whether or not in the course of your business. Very, very important. If you are importing, first point 7.1a, there are two elements, consideration and business. Both were present in 7.1a. 7.1b, business is not there, only consideration is sufficient. Assuming that I am unregistered, I am downloading some music from Sony Music, which is assuming that they are located in Japan. I am downloading some music, then I am liable to pay GST. How many of you have downloaded movies? Not the pirated movies. I am talking about the genuine paid movies. How many of you have downloaded it? And such cases from a foreign website, or for that matter, assuming that I have to construct a house in Chennai, say for example in ECR, where I am taking the service of an architect who is from US. Now I'm not at all into the business. I am just located in Tamil Nadu and constructing a house for my personal use, where I am taking the service of a US architect. He is charging 1 crore for the architecture and the design, everything. Now the person who is receiving the service is liable to pay GST under reverse charge mechanism, and he has to get it registered, he has to do all these things. But how many of us are aware of this particular point? Even if it is in the course of, even if it is not in the course of your business, it is required to be discharged. Now, why all this online, LinkedIn or Facebook, all these things? Government understood that it is very difficult to go behind all these individuals. So they said, I'll bring a concept called online information database and retrieval system, where all these companies are required to be registered in India and they have to discharge this liability. So actually the liability has been shifted to them instead of from you. So this is 7.1b. So import of service for a consideration. If there is no consideration, no RCM or no liability. If there is a consideration, irrespective of whether it is for business or not, applicable. 7.1c, which says any transactions which are mentioned in schedule 1, irrespective of whether there is a consideration or not, I'll tax you. Very simple. First thing, 7.1a, business and consideration was present. 7.1b, only consideration is present. Third, consideration is not only present. That means, irrespective of whether it is for your business or not, I will tax you. Very simple. So these three components you have to keep it in mind, because the general understanding in the industry is, if there is no consideration, no tax. It is not in the business, not taxable. No, that is you are referring to the 90% of the transaction which falls into 7.1a. 7.1b is also there, 7.1c is also there. Now, 7.1d, which was introduced in 1st July 2017 when the CGST Act got introduced. They made a blunder there. The lawmaker did a blunder. What they did, they said all these conditions. 7.1d, they said all transactions, activities or transactions which are mentioned in schedule 2 will be considered as either supply of goods or supply of services, which was a very dangerous provision. You know why? It was a charging section. Whatever you told in the first 3 lines are fundamentally correct, but the 7.1d was fundamentally wrong, because if you go to that item, you can see around 18 transactions, out of that 5 for goods and 13 for services. All these things, irrespective of for your business or not, irrespective of whether there is a consideration or not, it was taxable, which was a very dangerous provision. They understood this mistake. They amended it recently by giving a retrospective effect. So what they did, 7.1d, they removed it, they inserted 7.1 capital A. They introduced and said, if transactions are falling into 7.1 A, B, C, if it is falling into that, come to me for classification. I will tell you whether it is a goods or whether it is a service. Very simple. That was the intention of the act also, but when they drafted, they made a mistake. So now, schedule 2 is purely a classification schedule. Don't look at that as a charging schedule. Now, I will give you some examples. Software, is it a goods or service? Aha, very simple answer, no? For this case, we have gone up to Supreme Court, madam. We have gone up to Supreme Court, and Supreme Court only gave the verdict. By simply asking, you gave the answer. So, that is what I said. Whether the software is a goods or service, we fought in the case of TCS in the state of Hyderabad. They have gone up to Supreme Court, and Supreme Court gave the verdict whether software is a goods or service. They said if it is in the CD form, then it will be goods, and if it is otherwise, if you are doing some sort of development and other things, it will be considered as a service. So judgment came. Now second question, works contract. In construction industry, you have something called works contract. Both goods and services will be provided together. Is it a goods or service? See, GST, from where are you saying that it is a service? Because cement will be there, and my labor cost will be there, all these things will be put together. How are you saying that it is a service? It is from Schedule 2. Second, you are going to restaurant. How many of you have gone to restaurant? At least raise your hands now. Nobody has gone to restaurants. Sir, you have not gone to restaurant. Okay. Everybody has gone to restaurant. Restaurant, you are taking a dosa. Is it a goods or service? You tell me. Huh?
Service.
Sorry?
Service.
Sandwich.
Service.
Service. Okay. See, I'll tell you this way, sir. If, what is a goods definition? We have to go back and then see what is the definition of goods. You are absolutely correct, sir. I will come to that. Goods definition is very simple. Any movable kind of property. Okay, any movable kind of property is a goods. Other than money and securities. So, it is movable. My laptop, it's a goods. This mic is movable, it's a goods. So, this building is not movable, so it is not goods. What is service says? Service is very simple definition. Whatever not goods is a service, excluding your monies and securities. Very simple definition. Correct? Now, we have a lot of issues in that. I'll give you a funny incident. See, if you go to 17.5 blocked credit, I'm not moving to my thing, but I just wanted to tell you how beautiful these cases are evolving from this particular point of time, particular section. They clearly said in 17.5, if you are using the motor vehicle for transporting the goods, you can avail input tax credit. Very good, absolutely. There is a company called CMS, which is a cash carry management company, which will take the cash from the bank, will go and then offload to the ATMs. Now the question came to the advance ruling authorities, can I avail the input tax credit on this vehicle? Your money is not a goods, correct? Which clearly not defined under, which is excluded from the definition. Now it came to advance ruling authority. First of all, professions got confused. Yes, that's why they went to the advance ruling authority. There, advance ruling authority also gave a divided opinion. Then it went to the appellate authority also. Finally, the amendment has come now, where they modified 75. Now they can avail it. But previously it was a big disputable one. Now, I will give you one more AR ruling of the same company, where, that is why I correlated both, where they sold their cash carry vehicles. That vehicles they sold. Now the question is, I am not selling this in the course of my business. Do I need to charge GST? Correct? All your companies, all your clients will have a company where they will have some fixed asset motor vehicles, which will be disposing at a later point of time, or they will be selling it. Question is it a supply? Why it is a supply? It is not in my course of business. That's not my business. Permanent disposal of business asset, very good, Schedule 1, where I have taken input tax credit, okay, fine. Otherwise, but it is not in my, first of all, Schedule 1 will come into the picture only if it is in my furtherance of business or not. But Schedule 1 is absolutely right, that need not be business or otherwise, assuming that I purchased these motor vehicles before GST era, I mean before 1st July 2017, what will be the impact? You cannot apply Schedule 1. Now tell me, is it a supply or not? See, if you have to look at the definition of business for that matter. Section 2, subsection 17, clause B clearly says any activity incidental or auxiliary to the above. Above is what? Manufacturing, profession, trade, commerce, etc. etc. If it is incidental to that, if you are doing anything, that will still be considered as a supply. So, with this, you would have understood that business can include most of the items in your balance sheet. Not most, everything will be considered under business. You have to analyze whether it is actually business or not. Now we have come to 7.1a, 7.1b, 7.1c, 7 capital 1 capital A, which is there referring to Schedule 2. Because of time limit, I will not be handling schedule 2, because schedule 2 is not a charging section. Once you decide what is supply, go to schedule 2 to identify whether it is a supply of goods, supply of service. What is the meaning? Works contract, I don't know whether it is a supply of goods or services, because 90% of my supply out of works contract is goods, 10% is service. Can I consider it as a goods or service? But they clearly said, if the works contract falls into 2 subsection 119 of the CGST Act, it will be considered as a service, irrespective of the combination. So that is given in schedule 2. So schedule 2, if you have any classification issues, whether it is goods or service, go to schedule 2 first. Schedule 2, what is the impact of it? If it is a schedule 2 item where they are saying goods, then what are all the implications? First, you have to apply HSN, not SAC classification. 2, your time of supply, you have to take subsection 12, not 13 if it is goods. Go to place of supply, you have to take 11 and 12 of the of the IGST Act, not 13 or 10 and 11 of the IGST Act. If it is a service, you have to take 12 and 13 of the IGST Act. So for all these things, and if it is a supply of goods, then for the rate HSN is applicable, and for the rate you have to go to 1/2017 CGST rate notification dated 28 June 2017. If it is an exemption for the particular goods, you have to go to 2/2017 central tax rate notification dated 28 June 2018. And if you want to see whether it is a service, for the rate you have to go to 11/2017 central tax rate notification dated 28 June 2017. If you want to see whether there is any exemption for that particular services, you have to go to 12/2017 central tax rate notification dated 28 June 2017. If you want to see whether there is a reverse charge mechanism applicable on these services, go to 13/2017 central tax rate notification dated 28 June 2017 as amended from time to time, obviously. So please be very clear. Goods 7, your notification number is 1/2017. For exemption of goods, 2/2017. And for services, taxability rates, go to 11/2017. And exemption of services, go to 12/2017. And if it is an RCM, go to 13/2017. As amended from time to time. Now, we have taken supply completely as far as 1 is concerned. 7.1 is concerned. Now we will go to 7.2. 7.2, they are saying that if there are some goods or services which are considered as neither a supply or nor as supply of goods nor as supply of service. Before getting into 2, we will go and then see what is schedule 1. Because schedule 2 we said we are not going to deal. Schedule 1 we will go and see. Okay, because we said 7.1c clearly says any action, any activities or transaction which are prescribed in schedule 1, irrespective of there is a consideration or not, I said I will tax you. Correct? So we will go to schedule 1 and understand what are all those transactions. There are 4 transactions which are listed out in schedule 1. Number 1, any transfer or disposal, permanent transfer, the wording starts like this: permanent transfer or disposal of business assets where input tax credit has been availed. I will repeat: permanent disposal or transfer. So the word permanent underline. Permanent transfer or disposal of business asset. It's very important. Business asset where input tax credit has been availed. So I can put it this way: there should be a permanent transfer. It should be a business asset. Business asset means what? Is it only a stock or capital goods? Anything which is there in your balance sheet is a business asset. You will not bring any of your personal assets into the business balance sheet. So all your business asset, it doesn't say stock. It says business asset, includes everything. Now third is where input tax credit has been availed. What is input tax credit? You go to section 2 subsection 63 where they are saying what is input tax credit? Input tax credit means credit of input tax. Very simple. One line, easy definition. Now input tax is defined under 2 subsection 62, where they are saying input tax means CGST paid for inward supplies, RCM paid on inward supplies, and your IGST paid on inward supplies, your UTGST paid under and so basically all GST paid for your inward supplies, including your RCM. Assuming that you have availed some input tax credit. I'm just going to 2 subsection 63 for ITC is very, very important, because including the input tax credit includes your RCM also, because 2 subsection 62 clearly says what is input tax. RCM paid on your purchase is also considered as a input tax credit, because 1st July till 12th of October 2017 you would have paid RCM under 9(4) for capital goods also. So in such cases, if you had availed input tax credit, you have to be very careful. You should not feel that no, invoice doesn't have any input tax credit, so I'm not supposed to reverse my input tax credit. So now comes, I will give you an example. Okay, what is permanent transfer? Assuming, not assuming, actually it's happened in our office. We bought a laptop. Okay, we bought a laptop which was purchased, I think, somewhere in August I think. August we purchased, 2017 we purchased a laptop. See, during we are having some trust clients actually. So the trust clients, their main objective is to promote education for the students who are in the remote places. I am surprised to see that many of the remote places, they are not even aware of this computer. They don't have a proper computer literacy, or they don't have access to the internet and all. So they said, they sir, can you give some donation to our trust? So what we decided is, anyway, what is your objective? We don't want to pay you any donation. We will give you a laptop which we purchased very recently, which is 1 month old or 2 months old. You take it and you use it, for your for teaching the students. Anyway, we are also having some corporate social responsibility. You take it, and they take it. Now what happens is it a permanent transfer from my firm? Yes, that laptop is permanently transferred. Second point, is it my business asset? I capitalized in my books of account. Is it a business asset? Third, did I take input tax credit? Yes, I availed input tax credit. So now when you are giving it off to a trust, what happens? You disposed of your fixed asset. Now here there is no consideration which they are paying to me, right? It's a free. But GST section 7(1)(c) clearly says that you gifted to him, no problem, I will tax you. Very simple. I will tax you. You give it at free of cost, I will tax you. So 7(1)(c) very clearly says that I will tax you. Understood? Understood? Second example, I can give you plenty of examples like this, where you have a fixed asset, or you got some stock. You got some stock. Assuming that I am a dealer of, I don't want to give you multiple examples and confuse you. I will just give you another same example. Assuming that I am a dealer of laptops, the same scenario happens. I am giving it off from my stock. Will it make any difference? Will it make any difference? Will it make any difference for the valuation purpose? I mean for the supply? It won't make any difference. Whether it is my capital goods or my stock, both are my business assets. Very correct? True? Okay. Now, understood 7(1)(a), 7(1)(b), 7(1)(c), read with rule 1, schedule 1. It is very simple, don't get confused, It's a very simple concept. I am just making it in line with, for your better understanding. So I will make it very simple to the extent possible. Para 2 of schedule 1. Para 2 of schedule 1 says, which is a very, very important transaction, activities which are listed. Any transaction between a distinct person or a related person. Okay, but in the schedule they are using only the word related person, not the distinct person. That is there in the rule 28 only. But they can always come back and say that branches are related. Now, they are saying related person or distinct person, where there is any transaction happens between them, irrespective of consideration, I will tax you. Very simple, I will tax you. By using 7(1)(c), I will tax you. This is generally called in the industries stock transfer. This is not a stock transfer. This section, Schedule 1, Clause 2, everybody is using for the purpose of stock transfer. So stock transfer GST is applicable because Schedule 2. It's not for the stock transfer alone. That is a misunderstanding, because mainly in the industry, they are still carrying the old words which they have used. So everybody will have an understanding that, oh, it is only for stock transfer. No, any transaction, not only for stock, there are plenty of other transactions. Now, that clearly says that if there is any transaction between related person, I will tax you, irrespective of consideration. What is related person? Related person is defined under explanation to section 15 of the CGST Act 2017. Section 15 is the only section under CGST Act for the purpose of valuation for GST. Valuation for GST. Their explanation is given. There you can see employer-employee relation, both are related, partners of the same legally recognized partners. They have given list of items where family is also there. They have talked about all this subsidiary holding company relationship, everything they have mentioned. Distinct person is defined under section 25, registration section 25, subsection 4, 25, subsection 5. Distinct person is nothing but your own branches. Okay, whether it is registered branch or unregistered branch, that's all. So I don't want to complicate, I will just make it very simple for you. Now I will give you a lot of issues which you are going to come across. These transactions are very, very important. You will not be able to see it in your financial statements. I'll just tell you. A company, okay, I'll just start with a simple example. I'm located in Chennai. My manufacturing unit is located in Sriperumbudur. I'm transferring my stock from Sriperumbudur to Bangalore. Okay. I'm just transferring it. Is there any GST liability for that? For transfer from Bangalore to, from Chennai to Bangalore, is there any GST liability? Please say yes or no. Yes. Okay, very good. If you say that there is a GST applicability, supply is there, please note these 4 keywords. One is, what is the rate of supply? That is classification you have to identify. Second, value of supply. What is the value to be given? Place of supply. What is the place of supply? What is the time of supply? These 4 keywords are very, very important. As a professional, you should always look at for this. If you miss, then you will miss something. All these are very, very important. Classification, that is rate of supply, time of supply, place of supply, value of supply. Value of supply will be handled by another speaker. Section 15 is the only section which talks about value of supply. Time of supply I will be handling 12 and 13, 12 for goods, 13 for services. And now, what is the value to be charged? I am just taking, because without giving these examples completely, I am not moving to other topics, but I have to, because first session is mine and then it is on supply. Supply includes everything. So I have every liberty to go to every topics and come back. So tell me, what is the value of supply? This value of supply, they are saying that assuming that I am transferring this laptop from, assuming that my manufacturing laptops, they are saying rule 28, because if you are related, section 15 says that I will not give you value, sorry boss, you go to rule 28. Rule 28 clearly says that, first proviso clearly says that, no, it says open market value. First proviso says, at the option of the supplier, you can supply it at 90% of open market value. Second proviso clearly says that you can, whatever, if the other party is able to take full input tax credit, whatever value you mentioned in the invoice, that is perfectly okay. That will be considered as an open market value. Now you got the value, you got the rate, you got time of supply which we have to discuss, and then fourth is place of supply which will be handled by another speaker. Now, this is the area where most of the GST liability is going to come up as far as outward supply is concerned. I will give you an example. Under GST, each branches which are registered separately in different states or within the states are within the state with a different registration. If it is one state, one registration, another state, another registration, both of them are considered as a separate, distinct person. I will put it this way. These two are two independent companies. You have to look at from that perspective, otherwise you are going to make mistake. Assuming that the company which is located here is X, the company located Bangalore is Y, though it is both are your own branches. Now, if the Chennai branch, Chennai company, the branch, if it is providing some administrative services, the CEO will be sitting here, your HR head will be sitting here, your bank guarantee charges would be paid from here. All things would have happened in the central office, that is your head office. So don't you think that the Chennai office is providing some service to other party? Do you agree? It is my own branch, but that is what there is a clear-cut case, assuming that it is an entirely different party altogether. It is a XY, X company and Y company. Will you do anything for free? No, right? So that is what the government says. You charge to him. It is based on consumption based. The place of supply is there. You charge to him. This is being discussed in one AR ruling called Columbia Asia Hospitals Private Limited, which is a Karnataka AR ruling, where they said how this charges will be applicable. Their case is very simple. Their case is like this. They are a group of hospitals which is from outside India. They came and set up their hospitals in Karnataka. In and around Karnataka, there are 4 hospitals in Karnataka and outside the state also. Their IMO office, Indian Management Office, is located in Karnataka. So their question is very simple. I am providing some service to all other hospitals also. Do I need to raise an invoice? AR ruling said, yes, it is required. No, I am not going with AR. AR, I know that it is applicable and then it is only binding only on the party who sought for AR ruling. But the principles laid down in the AR, that is how you have to see. Many of the people will say, AR is, don't rely on AR. I am also saying don't rely on AR. But look at AR and what is the principles laid down in AR. Whether is it convincing to you, is it as per the GST law, then you take it. There are many AR ruling where I am also against it, where principle laid down is not correct. But do you think that AR ruling is a good source of information for you to understand and predict how the going forward, how the cases are going to come up? Because tomorrow the government will come, department officials will come, they will show you this AR ruling and say that AR ruling said like this, so you have to pay tax. Because these are all commissioners who are giving AR ruling. So these are all the sources of litigation which are coming up. So there they clear. Yes sir, please.
In relation to hospital,
Yes.
health care services are exempt from services.
Yes.
Then you said hospital.
Yes, yes.
Charging bills from one hospital to another hospital or from one head office to branch. How does it arise?
He is raising a valid point. There will be always blockage of credit. Absolutely right, sir. I really appreciate his point because he is going little ahead. See, healthcare industry is exempted, right? His question is, in the hospitals also, there are 2 kinds of services. Taxable supply is there, exempted supply is there. If you look at our inpatient services, all services are exempted. Outside the hospital, you have some pharmacy, which is for the outpatients, not for the inpatients. Outpatients are not taxable. Okay, outpatients are not taxable. Now what happens is, this hospital IMO office, they will be raising a cross-charge invoice to the other party. Whether they will be able to take full input tax credit? No. As he rightly pointed out, the other party is providing both taxable and exempted supply. So what will happen? You have to reverse your input tax credit. You have to reverse your input tax credit based on Rule 42 and Rule 43 of the CGST Act Rules 2017. Absolutely, very good point, sir. Thank you so much for bringing that point. So, in such cases, I will add one more point to it. Valuation. Second provision cannot be used because you are not able to take the full input tax credit because the other side, some exempted services are there. So, this is one aspect. Second aspect, which I come across, because all these are, what happens is, the same thing happened to some of my companies also. Their office is located in here, right here in MRC Nagar. They are into bearing manufacturing and they have branches across the country. Now, we told them, you have to take cross charge. They said, what? Why do I do it? It's the same company. Then we had to sit, explain to them, convince them to raise a cross charge invoice. They did it. Now just look at yourself and see how many of your clients have done this cross charge if they have a more than one branch. Tell me honestly. Big companies are also not aware of this. They have not done it. Some companies have done it. But most of the companies have not done it. Cross charge. It is going to be a big issue tomorrow. Because the department will raise all these points. If I am training some department officials for the revenue leakage aspects, I will give all these points to them. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 20. 20 points I will give it to them. Very clear, easy point. See, because you have to be both the sides. Sometimes you have to be part of the government, sometimes you have to be part of the client, sometimes you have to be part of your professional colleagues, sometimes you have to be part of your office team. Within the state, if you are providing, I give you one example, right? They are sharing both the premises. So it is based on the registration numbers. It is not based on the state. Generally, everybody will have one registration, one state. I am going with that assumption. If it is based on registration numbers, that's all. Registration numbers, and if they have not registered, distinct person, some places they would not be registered. But still it will be a branch office. So it's based on the branch and then the cross charge. How to value that, what is the value to be charged, and how this has to be done, when it has to be done, AR is silent about it. That department will come and decide it. Before that, you advise your clients, at least now if you pay, you have to pay 18% interest under 50 subsection 1 of the CGST Act. If the department will come and find it, as I said few minutes back, you have to pay interest, 50 subsection 1, you have to pay, it will be like a concealment, and then 74 will come into the picture, 122 will come into the picture, all these issues will come into the picture. At that time, you can again pitch in as a litigation consultant and then solve the issues. Anyway, we are all going to have a lot of good time with the department. So yeah.
Because you are a company based in Tamil Nadu,
Yeah.
and you are having an idea of this across the country.
Yes.
And accounting services provided to Tamil Nadu.
Yes.
How will it identify? How will it cross charge?
See, what is the base for cross charge is something to do with the valuation. Okay, what is the value to be charged in that cross charge? So you have to go to section 15 of the CGST Act. In the 15, they are saying that if they are related, go to 28. 28 says open market value. Can you tell me, if you are an employee, what is your open market value? Can you tell that? It is not possible. It is not possible. You are different, I am different, she is different. So there is no open market value for you. Same like, kind and quantity. You cannot compare with the next person sitting next to you. Not possible. Then 28 clearly says that if you don't get the value from 28 or 29 for agents, come to 30. 30 clearly, 30, 31 and all, there 30 clearly says that what is the cost of provision of that service? Add 10% to it and then apportion it. That's all. So cost plus 10 would be the ideal method. And 31 clearly says if none of these are working, just go to whatever the generally accepted, whatever you feel, you do it. That is what 31 says. So valuation, anyway that valuation another speaker will be handling it. Now I will give you one more example. Canteen services. In my client case, all these things were there in my client's case. The same company, bearing manufacturing company, they have a, manufacturing unit in Sriperumbudur, Oragadam, where there, as per the Factories Act, if there are more than 250 employees, they have to have a canteen. The point is they are collecting 1 rupee per employee from almost 600 employees. They are collecting it. Out of the 600 employees, 300 employees are payroll employees. 300 employees are non-payroll employees. That is contract employees. Now, question is, we said there is a supply. They asked why. They said read section 7, 1, C, come to schedule 1, para 2. Based on that, employer are related. So even if there is no consideration, I will tax you. They said there is a consideration. I said very good. If there is a consideration, as per section 15, whatever the value which you charge, 1 rupee per employee per day, it is 26 rupees. That is not the transaction value. Because if they are related, section clearly says that go to 28. 28 they are saying for the food, open market value. What is the open market value for that food? Very difficult to identify, not at all possible. Then we came to 30, cost plus. So we got canteen services. The outdoor caterers were charging 15 lakhs per month. So we got the cost. 15 lakh into 12 or I think it was 9, and whatever the value, that 15 lakhs plus 110% of that. So 110 means maybe 16 lakh or 17 lakh, whatever the 17.5 it came, and that has to be, on that you have to pay 5% GST. Now the issue is further complicated. This was discussed in Caltech polymer, there was an AR ruling long back. But when you read that AR ruling, you don't understand all these intricacies involved in this transaction. What does that AR say? Canteen services taxable. Fine. When you go inside, I will tell you the intricacies. How to tax it? Your cost plus 15 lakhs plus 10%. You took the value. What is the rate? 5% you have to charge. If you charge 5%, can you avail input tax credit? No. Outdoor caterers, how much they are charging? 18%. So the issue is, they got a blockage of credit and they have to pay 5% additional. Now the finance director asked me, Rajiv, I will do one thing. I will charge 18%. I will take, anyway I am paying the tax. I will avail 18%. I will charge 18% credit. I will take the credit and interest will be my cost. I said it's a good idea. But I said it is not possible. Why? Because when there is an actual rate which is prescribed for your service, you have no option to select whatever you feel beneficial to you. This was also dealt in Cafe Coffee AR ruling, where Cafe Coffee applied for a AR ruling saying that I wanted to charge 18% instead of with the input tax credit, instead of 5% without input tax credit. They said no, it is not your prerogative, it is what we are giving, you take 5% only. So there again blockage of credit. Now second argument in the same example. Director said, Rajiv, your problem is I am charging now. You consider that I am not charging for the supply of food. I am charging for the maintenance of the canteen facilities. I said, sir, you are inviting more problem. It is not that they are charging. Now there are two supplies. One is food supply, second is maintenance of canteen facilities. Again open market value, you need one more taxable service, the other one is another taxable. Which one you want? No, take it back. It is only for the food. So this is a beautiful, that is what I am saying. GST is very, very interesting when you discuss with the clients. They will come up with these kind of arguments where you have to put a full stop within the legal framework. So you understood all this transaction? Yeah, yes.
The maintenance of canteen by the company itself, one issue.
Yes.
Supply of food by outside caterer. Supply of food by outside caterer, it is taxable at 5% as per the very recent GST Council meeting was decided.
Yeah.
Is it correct?
No, 5% was there from the beginning, sir. 5% was there from the beginning. Since you asked, I will
Formerly outside supply or outdoor catering was taxable at 18%.
Yeah.
Then it was reduced 5% in March or February GST Council meeting.
No, I am talking about 17-18. These issues are there when we are going for audit. All these issues will be there for 17-18. My case is for 17-18. 17-18, I will give you further. Since you asked, I will give you further discussion which we had. I gave you the facts, yeah.
If the company itself maintains the canteen,
Yes.
what is the situation?
Again, you will have cost of purchases, no, sir? All cost of materials, everything will be there. That is your cost. So cost plus. Now, I'll give you one more. See, if I discuss, it will keep on going, these case studies. I started with an example saying that 300 employees are payroll employees, 300 contract employees. Director said, what is your problem? If it is related, contract employees are not my related person. They are not my employees. There is no employment contract. I have contract with the contractor. He supplies the manpower. So, 15 lakhs you take only 7.5. And some, they also argue that auditors like you GST consultant, you people are coming, having the food from the canteen. So I said, sir, can you give me pakka statistics, how many people are there who came other than this employer? He said, no. Then leave it, sir. We'll take statistics exactly. This is little litigation prone area because employer-employee relationship is there, and but contract employees, there is no employer-employee relationship, but department can take a view that both are related. They are also employees because they are paying PF, etc., etc. So it can be a litigation prone area, but still you can take a chance. So we have taken 7.5 plus 10% of that. See, that is what I said. If I discuss further, it will go down. The case study will go like anything because I am stopping because of loss of time. Because these are very, very interesting, lively cases. There is not like what you think, sit at office. You cannot get all these points. You have to discuss with all these directors, people. They will find it very difficult. They will also stop us, and then they will come up with their argument. They are also educated, very highly. They know their business very well. Next, yeah.
Supply of food to the employee
Yes.
by the company itself. I think there is some exemption has been given very recently. Is it correct?
See, that is as per the First Amendment Act. First Amendment Act, the proviso is not exactly under the canteen, food and beverages. It is just below that, just after the leave travel elements and all, after that only that proviso is there. So it is little, we are just still looking into whether it can be extended or not, because we are not very comfortable with it. Though the intention is given in the GST council meeting, but still we are just thinking whether we can extend it. That is anyway, it is a prospective one, so we are just analyzing it. And next point is Schedule 1, third para. Agent and principal. Supply by agent to principal, principal to agent, that's all. So in that, they are clearly saying that if there is any transaction between principal and agent, then GST is applicable irrespective of whether there is a consideration or not. Clear? Same like branch transfers. Now the fourth one is import of service. Import of service, we already discussed this issue, but that is not for there should be consideration, they are saying. Here in para, schedule 1, para 5, they are saying, irrespective of consideration, I will tax you. When? If it is from your own related person. If you are importing from your own related person, then I will tax you. Irrespective of whether there is a consideration or not. Your own establishment outside India. Say for example, I have a branch office outside India, and I am getting some services from my branch office in Dubai. The reverse charge mechanism, the tax will be applicable. It is a supply. Say for example, my own related party abroad, he is providing some service. No consideration charged. Still, I will tax you. So, I am just summarizing scope of supply 7. 7.1a we discussed. 7.1b we did, that is with the consideration business. 7.1b only with the consideration, no business is required. 7.1c we clearly said that business or consideration, nothing is required. Go to schedule 1, there are some transactions which are listed out. Schedule 1, transaction number 1, permanent transfer or disposal of business asset where input tax credit has been taken. Point number 2, transaction between related or distinct person. Transaction number 3, agent principal transaction. Transaction number 4, import of service from a related or the establishment of the same entity outside India. These are all the 4. So we covered by and large 7 scope of supply we have covered. Now we have schedule 3. After that we will stop. In the schedule 3, I have some brainstorming sessions and all, but I will just tell you this. 7 subsection 2, where they are saying there are some transactions which are neither supply of goods nor supply of services. They said, I will give you a list of items which are neither supply of goods nor supply of services, which are given under Schedule 3. Schedule 3. Schedule 1 we know, Schedule 2 we know, Schedule 3 they are saying neither supply of goods nor supply of services. Item number 1, there are 8 services which are being provided. Item number 1, services provided by an employee to the employer. Underline the word services, not goods. Provided by employee to employer. Please underline, it's not from employer to employee. I hope you understood. Option number 1, employee sold his car to the company. Employee sold his car to the company. Obviously not in the course of business, 7(1)(a) will not be applicable. Assuming that any goods supplied by the employee to the employer, possibility of being a supply is applicable. You cannot say that it is neither supply of goods nor supply of services by using the word, using item number 1 of Schedule 3. You can take the shelter of 7(1)(a). Okay. Now, second point, employer providing any services to employee, taxable. Any goods given by employer to employee, taxable. Schedule 1, I forgot one particular point. There is a proviso where they are saying up to 50,000 gift, up to 50,000 provided by the employer to employee is exempted. That is inclusive of tax value. Please note. So it may come to maybe 40,000 or something. With the tax, it should not cross 50,000. Now, if I am providing canteen services, can I call it as a gift? Because gift is not defined under GST, but gift has its own nature, right? Will you give daily basis, will you give gift? It will be provided on a particular occasion. So you cannot take the shelter of this particular proviso saying that, no, canteen services were less than 50,000, it is a gift. No, gift has its own characteristics. So assuming that you become the best performer, you got a laptop which worth less than 40,000, no GST. If you are getting some flat, or if you are getting some other, goods, say for example, movable property, some car, GST is applicable. You know that in Gujarat there was a merchant diamond owner, he gave flats and cars to the employees. GST is applicable. GST is applicable. Now, there was a circular which is issued, any transaction which is falling within the employment contract, no GST is applicable. No GST is applicable. I will come across one important case very recently. What happened is, he is the director of the company, he is getting 1 crore salary. Perfectly okay. Normally what will happen, at the year end, based on the performance, you will get a bonus. Correct? Bonus. No problem, it is part of your employment. But in another company I saw, 1 crore is the salary, he got 1.5 crore commission. 1.5 crore commission. Not as per the agreement, not as per the employment agreement. And what the company did, it is a service received from the director. They paid it under reverse charge mechanism based on 13/2017 notification. Any services provided by director to the company, they paid RCM on 1.5 crores. They discharged their liability, they came out. After that they came to us after 6 months or 1 year, I think 1 year later only they came to us, first time. When we started analyzing all the transactions, we found that 1.5 crores RCM has been paid. Very good, excellent. What actually did you do, the finance team? They actually trapped the director. What happened? You paid it under reverse charge mechanism. Taxable supply exceeded 20 lakhs. Director has to get it registered. His services are RCM liability only, like advocates. But section 22 will come into the picture where 20 lakhs exceeds. You have to get it registered. You have to file the returns. You have to disclose in the 3B where there is a column where you have to disclose this 1.5 crores where RCM is payable by the recipient. He has to issue an invoice based on rule 46. Nothing has been done. Now the company finance team is asking, give me a solution to this. because he cannot take this point to the director. Director will scold him left and right. So director is in trouble now. So we are discussing how to mitigate this within the legal framework, not outside the legal framework. So please be careful. Whenever you take any transaction, don't think that we are over smart, we are just complied with the 13 subsection 2017, 13 by 2017. There is another hurdle which is hanging on the director, which will in turn will come back to you. Whoever is taking the decision will get the hit. So be careful with this. Third point. So these are all the issues which in the schedule 3, neither supply of goods nor supply of your employment contract. Second point, any services provided by the court or tribunal. Okay, I'm just not getting into it. Third, any services provided by MPs or MLAs. I'm not getting into it. Fourth one, you understood, right? MP, MLA, Member of Parliament, Member of Legislative Assembly, if they are providing any service to you, they are exempted. Fourth one, any funeral, those kind of activities, they will be providing supply, no GST applicable. And the fifth one is any supply of land and building, no GST, subject to schedule 2 para 5 B of the CGST Act 2017. That is nothing but when you are selling the building, that is when you are doing some flat constructions and all, when you are selling the land along with the, as part of your agreement, the normal flat constructions and all, at that time when you are selling land, I will tax you. That is only exception which they have given. And the last one is actionable claim. The sixth one is actionable claim. Actionable claim means what? This kind of lottery, betting, all these things are, they are saying that actionable claim, they use the word other than lottery, betting and all. So lottery, betting and all still taxable. There is a problem actually, because actionable claim is a goods. Okay, actionable claim is a goods. But what happened when they notified the rater? They notified it under SAC for service. So they made a blunder there. Nobody has noticed it so far. So there is no hues and cries. So I hope that the government will rectify all this kind. Once you classify the goods or actionable claim as goods, how can you notify SAC code? My simple understanding. It is not possible. It has to come in HSN. 1 to 98. That's not possible. 99 cannot come. Okay, whatever. We will leave that. Now, schedule. So, actionable claim other than these lottery, betting and all. Then, sixth one. Seventh and eighth one are the recent additions with effect from 1st of February, which is very, very important. First is merchant trading. What is that? I am located in Chennai. I am buying the goods from China. I am selling it to, I am asking my vendor to send it to US. Very simple. I am sitting here. I am asking, send the goods from China to USA. It is not even coming to Indian territory. The transaction has not happened in Indian territory. It is an exempted. It is neither supply of goods nor supply of services. Very good. Eighth one includes two things. Eighth point, the last one, inbound sale. What is inbound sale? I will ask my China party to import the goods. It will cross my custom frontiers. I will keep it in the bonded warehouse. There is a Madhavaram, there is a bonded warehouse. I will keep it there. The beauty of it is, if you are keeping it in bonded warehouse, you don't have to pay IGST or import duty. Customs duty you don't have to pay. Whoever is filing the bill of entry, they only need to pay GST. I'll give you an example. My client, they are importing, say for example, laptops. And the laptops is meant for Sundaram Fasteners, which is located in SCC's area. Now, if I release the goods, I have to pay IGST unnecessarily. There will be working capital blockage. What I will do, I will keep it there. I will say, Sudham, I will sell you this laptop. You go and file the bill of entry. When he is filing, he is in SCC, he need not pay tax. So that is why this mechanism has been made, that there is a bonded warehouse. It is nothing but a normal warehouse. You can also visit Madhavaram. I don't know whether they will allow you, but I've been there. They will allow you. They can, you can see that, and then they will release the goods whenever you file the bill of entry and etc. This is one where it is considered as It is neither supply of goods nor supply of services. The last one is high sea sale. What is high sea sale? I will ask China to send the goods. The ship is coming and I am asking, no, I got a buyer in Sri Lanka. You send it to Sri Lanka. It's not something like ship is coming and I am asking, ship is taking U-turn and going. No. Actually, ship will go to Hong Kong. Hong Kong, it will go to Sri Lanka. It will come to India also. So, India they will not offload it. They will just they will send it to Sri Lanka. So, these are all transactions which are happened in the high sea, which is exempted. Now, the beauty is, one more point which I have to add is, the big relief is, 17 section says, input tax credit, where they are saying, if you are providing exempted and taxable supplies, you are not eligible for input tax credit. You have to reverse your input tax credit based on Rule 42 and 43 of the GST Rule 2017. There is an explanation which is inserted now, where they are saying, all Schedule 3 transactions need not reverse input tax credit, which is a good initiative, except they told again, except land and building, which is other than Schedule 2 5B of the CGST, Schedule 2 of the CGST Act 2017. So basically what is that? For that you have to understand what is exempt supply. Exempt supply includes non-taxable supply. You go to 247 of the 2 subsection 47 of the CGST Act, which clearly defines what is exempt supply. Exempt supply includes, they are saying, all nil rated, all wholly exempted under section 11 of the CGST Act, and includes non-taxable supply. Non-taxable supply, you go to 2 subsection 78 of the CGST Act, which they are clearly saying that not leviable to GST. All the Schedule 3 transactions are not leviable. So, indirectly they are falling into exempt supplies. That is what the government has said, no, you don't have to reverse your input tax credit. Now, we are done with the supply. We will break for tea. If you have any points to be raised or if you have any doubts, please ask me. I will just repeat for the sake of everyone. 7.1a, I want you to answer. We have some case studies also. If time permits, we will take you through the case studies also. 7.1a is very clear. Consideration should be there and business also should be there. 7.1b, consideration should be there, need not be, business presence need not be there. 7.1c, it should be if the transaction falls into Schedule 1, whether there is a consideration need not be there, business also need not be there, I will tax you. Now, there is a 1A which is added recently for the classification referring to Schedule 2. And the, what else we said? 7 subsection 2, where they said any transactions which is falling into Schedule 3 are neither supply of goods nor supply of services. So, that we have taken. And there is one notification. They also said that they have the power to notify. They notified one service which is not applicable to you. There is a panchayat and all those services. One service notified, but that is not applicable to you generally. And Schedule the 713, they are saying that I have every right to notify any goods, supply of goods as supply of services, and any supply of services as supply of goods. I will repeat. 7.3 says any goods, supply of goods, I can later notify that as a supply of service. So, for example, I am supplying this water bottle. Tomorrow, government has the power to say that this is not supply of goods, it is a supply of service. They have the right given under 7 subsection 3 of the CGST Act 2017. This is all about our scope of supply. We are any doubts? I think I made it clear for all of you. Yeah, please. You have canteen?
Yeah.
Very good.
Here, of course, we are providing food.
Yes.
Apart from that, there are some add-on items like juice, then fruit, and fish. Always we are collecting money. Can we take the input for that?
No, you cannot, because food and beverages you cannot. But unless otherwise you are in the same business. If you are in the same business, you can avail it. See, you are in the business, if you are in the same business, if you are considered as a business vertical altogether, you can avail it, input tax credit in my view. Food and beverages, if you are in the same line of business, okay. See, what happens is, if you do one transaction, say for example your turnover is 1000 crores, your turnover from this particular sale of snacks and all comes to say 1 lakh, it is irrelevant. It is still a business, because 2 subsection 17 clause C clearly says that volume, frequency, regularity, continuity are not at all relevant for the purpose of business definition. If you do one transaction, sufficient for to qualify business. So you can take input tax credit in my view. And canteen you cannot, because it has a different provision altogether, because your outward supply is taxed at 5% with a blockage of credit in the condition itself. That is why you are getting blocked there. Yeah, any other doubts? Shall we break for tea? Okay, thank you. We will break for tea and then we will come back after 10 minutes. Okay, thank you. We have discussed in the first session. Now, in the scope of supply we have completed. We have one more component to be discussed, that is section 8, which is nothing but composite supply, mixed supply. Composite supply means 2 or more taxable supplies, because composite supply has been defined under 2 Lakshman projector 2 subsection 3030, where composite supply means 2 or more taxable supplies, and which are naturally bundled. I am just underlining, highlighting the keywords. 2 or more taxable supplies which are naturally bundled, out of which one is a principal supply. What is principal supply? Principal supply has been defined under 2 subsection 90 of the CGST Act, which says if there are 2 more supplies, the one which is predominant in that particular supply will be considered as a principal supply. Assuming that I am supplying the laptop along with the laptop bag. What is the principal supply as per section 2 subsection 90? Laptop, not the laptop bag, right? If I am supplying a laptop and a printer, which is the principal supply? See, that is my point is all about. You're absolutely right, but I have a different point. See, for composite supply, one can only be the natural, predominant supply. If there are 2 or more predominant supplies, it can never be called as a composite supply. That's all my point is. Assuming that your laptop and printer both are predominant supplies, that cannot be considered as a composite supply, because composite supply ultimate objective is to find out what is the predominant supply. We will take the HSN of that particular point, HSN or SAC of that predominant supply, and then we will give it the same HSN to all other things. That is what we generally do. Now, so composite supply we have defined. Now mixed supply. Now I will give you some examples for composite supply. So for example, hotel accommodation with breakfast, composite supply. You are sending goods where you are charging insurance charges or freight charges, composite supply. You are going for a, this example is very, very beautiful because I am deliberately bringing it. How many of you have car or bike? Any motor vehicle for that matter. You give it for service. What is the predominant supply there? You are giving it for service for the component. They will also supply components. They will also provide the service. Correct? What is the predominant supply there? Service. Agree? So how much he has to charge? 18%, including for the components. But what are they doing? They are charging 28 for components and 18 for services. But it is not as per law, GST law. Actually they have to charge 18%. But the issue came up later. What happened? Actually this is the fundamental concept which is absolutely right. My predominant supply is service only. I have to charge 18% of the entire components. government is losing the revenue. What they did, they cleverly issued a circular in June 2018, 47/2018 circular number, where they said if goods and services, if the in the composite supply, if you are showing the services as a separate line item in the invoice, then the respective taxes will be applicable, which is completely contradictory to the fundamental concept of GST Act 2017, which is in violation with the Section 8. But they issued it because they get the revenue, na? So, the circular, in my view, is ultra vires to the Act. Okay, anyway it is there. Now, if there is any benefit, we can use it. Now, what happens is some of the companies, freight charges, they are in dilemma. In one of my companies, the construction company, they are supplying from the yard is located in Chennai. So they will be sending big construction machineries from Chennai to Gujarat or Telangana, wherever they have project, they will be sending. They will be sending the worth of that machinery. It's a specialized machinery, sophisticated technology which they are using for the ground engineering. So when they are sending it, they will be sending 2 or 3 big machines such like that. And they will also charge the GST, freight. What they are doing, they are taking the highest rate and then charging it. Now what is government says? No need, because their principal supply 3 machines, all are principal supplies. Now government is saying no need to charge 28. You charge whatever your freight charges, 18%, whatever you discharge and then close it. Actually that in some way the clients can take the benefit of that circular. Now department cannot go back because circular is binding on the department, not on us. But because it is binding on them, they cannot take their stand back. So it is some ways it is beneficial, some ways you see where you can take the advantage of this circular. There are many circular, many notifications, I will tell you, open forum, which are ultra vires to the Act. Government or the department has no power to issue such notifications, but they are still issuing it under 148 and all, which is completely in violation, because only the party who can write the law is the parliament, not by the department. But department is writing the law by issuing some notifications which are ultra vires. I can see that. I don't want to get into all those aspects. We are making representation to it. Yeah, yes.
Services is the predominant one in case of motoring vehicles. Because if the value of the materials company uses more,
Yes.
how is the services the predominant one?
Absolutely right. See, if we get into that topic, we'll discuss for 1 hour. Now, his question is absolutely right. How did you say that service is the predominant? Is it based on your utility? I'll confuse you further, sir. Is it based on your utility? Is it based on your need? Is it based on the quantity? Is it based on the value? What? His point is correct. 90% quantity, 10% value is only service. Say for example, 1000 rupees service value, 35,000 goods, sir. Which is predominant? If you go by value, it is goods. If you go by utility or your need, it is service. So what is that predominant is all about? Sir, yeah.
Another thing is, for example, you reported a vehicle.
Yes.
When you say that predominantly you are taking it for service.
Yeah.
It so happens that while servicing, they find that it is only incident.
Correct.
So the main objective is service. So it's like that.
Yeah, that is what we are taking an argument like that, but this gentleman's question is also very well valid. Why I am saying is GST law is silent about it. Now, we professionals are taking a call. It is based on our requirement, our objective, as sir rightly pointed out. We are taking a call. It is nowhere in the GST Act it is mentioned that it is based on your utility. It's a very well valid question, sir. So, tomorrow also the department can litigate saying that no, quantity is more, so you charge 28% even on the services. So, moving forward, so mixed supply. What is mixed supply? So the other one is naturally bundled. What is naturally bundled? Naturally bundled doesn't mean that Naturally bundled, you have to look at from the normal course of business. See, hotels and the food, breakfast, it is not, if you look at from outside, it is not naturally bundled, but in the course of hotel industry, that is a composite supply. Correct? It is a composite supply. So you have to look at from the normal course of business. Now mixed supply, what is mixed supply? Mixed supply means two or more taxable supplies which are supplied for a single price. Say for example, toothbrush kit. Toothbrush kit, you have toothbrush, you have paste, you have shaving kit, etc., etc. All these things, multiple items will be there. Assuming that that toothbrush is falling into 28, toothpaste is falling into 18, and tongue cleaner is falling into 5. Then you have to take the highest rate taxable. In case of composite supply, you have to take the predominant component, that rate only you have to take. Say for example, predominant is 18, you take that. Irrespective of the other goods are falling into 28%. But in mixed supply, they are saying that you take the highest rate. Okay. This is all about mixed supply and composite supply. Now we will go to levy. Once the transaction falls into section 7 and 8 for that matter, we will go to section 9 to find out what is the levy. Before getting into that, I have to understand what couple of things. We'll do a small brainstorming session. I will ask you, you correct me. Only supplier is liable to pay GST. Correct me if I am wrong. I am making a statement. Supplier is only liable to pay GST. How many of you say yes or no? Only supplier. I am supplying. I am only liable to pay GST. Recipient also has to pay. What basis? Reverse charge mechanism. How many of you agree? So agree? So I will put it this way. Only supplier or recipient is liable to pay GST. Only supplier or recipient is liable to pay GST. I am transacting with you. Can you ask third party to pay tax? Forward charge is there, reverse charge is there, where recipient will pay. Is there any other situation where third party will pay? I will tell you. There is a case, section 9(5), where electronic commerce operators, in such cases, supplier would be, I would be the supplier, you would be the recipient, but the transaction will happen through e-commerce operator. There, e-commerce operator has to pay tax. There, section 9(5), they notified, they said, I will notify such services. 3 services have been notified. 1, transportation of passengers. Number 2, accommodation services. Transportation of passengers, you have Ola, Uber, all this. 2, accommodation services, you have all this Oyo rooms, etc., etc. 3, household services, you have something called urban club. All these parties are falling in. So these 3 services have been notified where neither supplier nor recipient liable to pay tax. I will tell you one example. I want some carpenter at home. I am calling. I am the recipient. Carpenter is the supplier. But GST will be charged by the e-commerce operator. When the invoice comes, he will charge 500 plus GST. Do you think that the carpenter is registered under GST? No. Am I registered? No. Who is paying? E-commerce operator is collecting. So, with this introduction, let me tell you, section 9(1) is a forward charge where supplier is liable to pay GST. 9(1). 9(2), they said some products I will notify at later point of time. I will charge GST on that at later point of time. Petroleum products. 9(3), reverse charge mechanism where I am liable to pay GST. 9(4), reverse charge mechanism again when you are transacting for some notified services and all. 9(4) and 9(5), neither supplier nor recipient, e-commerce operator has to pay GST. That is exclusively for e-commerce operator. That is not applicable for all the transactions. It is only for e-commerce operator. 3 services have been notified. Clear? 9 is clear. That's all. 9 we have done away with that. Now we will go to the intricacies of 9(1). 9. So you have understood supply. You have understood levy also. Very good. Done. Now we will go to 1. Section 9(1) says, I will just break that definition I will break it into multiple points. If it is a supply, the rate at which you have to tax is not more than 20%. But do you feel that that is wrong? Because in automobile, cars and all, they are charging 28%, correct? But they are saying that it should not be exceeding 20%. But this, they are talking about the CGST, because the word starts like this: all intra-state supplies where CGST is applicable, the rate shall not be more than 20%. So, at any particular point of time, your GST rate put together cannot exceed 40%. 20 CGST, SGST 20. It cannot be more than 40. But they have another weapon to compensate it. What is that? Compensation cess. There they have no limit. 200%, 300%, whatever. If you take tobacco and all, they are charging. You take your vehicles also, they are charging. Correct? Compensation cess. So, all intrastate supplies, I will just put it this way, all intrastate supplies, tax called central tax, will be taxed at the rate specified. So all your rate notifications, I will repeat, all your central tax rate notifications are under 9.1, where they are notifying the rate, not all central tax rate notification, but wherever they are notifying rates, product rate is 5%, it is all coming from 9.1. Further going down, they are saying, will be taxed on the value determined under section 15. So, value you have to go to 15 to pick it up. Okay. So, these are all the things not exceeding 20% and all. This is what generally 9.1 talks about. There are plenty of notifications which they have issued. Coming to the second one, 9.2. 9.2 they are saying, and 9.1 they said two more points. One is they said, other than alcoholic liquor, they used one word for human consumption, I will not tax you. Second is, subject to section 9.2, I will not tax you. What is 9.2? 9.2 says, 9 subsection 2, petrol and petroleum product will be taxed at later point of time. What is petrol product? Petroleum crude. Then high speed diesel. Then you have motor spirit, that is our normal petrol. Then natural gas. Then fifth line item is aviation turbine fuel. There are 5 items which they kept outside GST. At any point of time, they can notify by way of notification. Because 9.2 gives a power to notify at later point of time. Okay. So 9.2 is done. Clear? Okay. Come to 9.3. 9.3 they are saying that there are some transactions where I will notify you paid under reverse charge mechanism. You paid under reverse charge mechanism. So there, two things are very, very important. One, notification is important. There are 7 goods. 7 goods which are being notified. Please understand, under the old service tax law and all, we had only services. Here in GST, 7 goods which are being notified under reverse charge mechanism. If you are transacting in that, the recipient has to pay tax. 14 services. The latest one is security services, the 14th one. But in between 5A, B, C, they added 3 more. So effectively, if you look at the number, it is 14 plus 2, 16. The 2 which they have added is very recently on 29th of March 2019. Nothing but when there is a TDR, transfer of developmental rights. That being the case, the promoter has to pay GST. Okay. So floor index pays and all, that being the case, the recipient has to pay tax. We will come one by one. Now, so if you look at the serial number which is prescribed in the notification number 13 by 2017, it is actually 14, but 5 alone, 5A, 5B, 5C. So if you want the actual count, it is actually 16. Okay. Now, what are all the services? I will take only the major one, not all the one, because say for example, direct selling agent for the bank, NBFC, there are 3-4 items which are mainly for banks and insurance companies and all. So I will not be touching, I will take the general ones. Number 1, GTA services. GTA services, if you are receiving it, then you are liable to pay GST. I will repeat, GTA, Goods Transport Agency, if you are receiving any service, you are liable to pay GST. The fundamental question is, what is GTA? Goods Transport Agency. What is the difference between Goods Transport Agency and hiring a vehicle and bringing the goods to me? The fundamental difference is a Goods Transport Agency will issue a note called consignment note. If he is issuing it, he is a Goods Transport Agency. Okay. So, Goods Transport Agency, if they are supplying any services to me, I have to pay it under reverse charge mechanism. Point number 1, what rate? 5%. Number 2, can I avail the input tax credit? There is a misconception in the industry that I cannot take input tax credit. Wrong. That is only for the GTA services. Because you have to understand why that has come. See, when the service tax law came, GTA is a very strong lobby. If they say that I am going on strike today, gone. No vegetables, no rice, nothing will come to our place. So what happens? Government will negotiate. Now what happens? Under service tax, they said I will not pay GST, service tax. You ask the other party to pay. When the GST got introduced, they said the same thing. I will not pay tax. You ask the other party to pay. But they misunderstood one important point. Under GST, you can take the credit of goods also. All these GTA services, they will have minimum, say for example, big companies and all, they are having 100 vehicles, 50 vehicles. All on this, they can take away input tax credit. Under service tax law, they cannot. So they said, we will not pay tax. Later they understood, no, it is a mistake. I can take huge credit is lying. Truck, say for example, 1 crore. 28 lakhs lying in my credit ledger. Why should not I use it? So they said, no. We want with the input tax credit. They said, then 12% with the input tax credit if you are availing. If you are not planning to avail input tax credit, charge 5%. This is for the other party. But if I am paying at 5%, I am eligible to take input tax credit, whatever I paid. Okay. And RCM is applicable. They added a word. They said, if the other party, if the GTA is not charging central tax at the rate of 6%, what does it mean? If the GTA is charging 5%, you are still liable to pay reverse charge mechanism. You are still liable to pay reverse charge mechanism. If he is charging 12%, then only you are not liable to reverse charge mechanism. Go and read that notification very, very carefully. Doesn't mean that he is registered, he is charging 5%, doesn't mean that you are escaped from the reverse charge mechanism. But that is actually not required. That 5% is not required. Anyway, I have no benefit. I cannot take input tax credit. I am collecting from you. You have to also pay reverse charge mechanism, but you can take the credit. 5% you can take 5%, again you have to pay 5%, 10%. Why? Unnecessarily. So, the point is, what is the practical industry point? They are either charging 12% or they are not charging. That's all. Okay. So, GT is done. Second, advocate services. All advocate services are coming under reverse charge mechanism. Initially they said representation, blah, 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 blah. But they said now all advocate services provided to business entity, reverse charge mechanism is applicable. So what happened to other than business entity, which has come under 11/2017 12/2017 notification for exemption. Assuming that I am going to an advocate getting a legal advisory services, exempted because I am doing it in my personal capacity, it is not a business entity. So advocate services will have two services. One is exempted, one is completely under reverse charge mechanism. Clear? So advocates are done away. So advocates they are using word advocate, senior advocates.
Previously it was senior advocacy.
No, it was advocates, senior advocates, form of advocates. That is how they have used it, still continuing. Now, third is director of a company. Director of a company. I gave you a few minutes back example, right? Director, yeah.
Here, business entity means that suppose an individual practitioner, advocate practitioner, carries on the business in some firm name. Then
Business entity is the recipient, not the supplier. Advocate is providing service to you. Are you a business entity? Are you a company or are you doing any business? If you're doing a business, then you are liable to pay reverse charge mechanism. If you're going in your individual capacity, assuming that you have a personal dispute on your property, you're going and approaching advocate, they will not charge you GST. They're not supposed to, because 12 part 2017 will come into the picture and say, no, it is nil rate. If you are a company, assuming that you are a company, you are going and approaching an advocate. Advocate is providing you service, and GST you have to pay it under reverse charge mechanism. Now third one is director services. What is director service? Assuming that a director, I give you a few minutes back, I give you an example. Commission, which is not out of his employment. Point number one. Point number two. We have a football club. They are our clients. The football club means what happens? All directors, everybody will be football players. They will be. It's a foreign company. So their director itself is a coach. Director is a director. He is drawing salary out of his employment. Over and above, he is drawing some salary in the capacity of a coach. That being the case, reverse charge mechanism is applicable for the services provided by a director to the company other than out of his employment. Clear? Assuming that I am a chartered accountant, not assuming, I am a chartered accountant, and I am a director of a company, I am getting some salary out of my employment, and tomorrow they are asking me in my individual capacity, Rajiv, you know GST very well, so you do one thing, you give me an opinion, GST opinion service to me. So if I am doing it in my individual capacity, then assuming that I am charging say 1 lakh, then the company has to pay GST at the rate of 18% on the services provided by me to the company. Clear? And fourth one is the sponsorship services. I'll give you an example. My client is an IIM alumni and he is running one share broking company. Okay, share broking company, PMS, etc., etc. It's a big company where he is advising. Suddenly he is also faculty in IIM Bangalore. So what happened? When he is visiting frequently, the IIM, there was some program happening. They asked him whether you can sponsor. He said, okay, I'll give you 5 lakhs, you sponsor. 3 months later, they came to me and said, I sponsored that service, out of casual talk. He said, I sponsored that event. I asked him, did you go to IIM Bangalore? He was telling all the story. When we were discussing, he said, I sponsored that program. I said, what? From whom? In your individual capacity or from the company? From the company only, I didn't pay. I can claim expenditure. I said, then you are in trouble. Have you discharged it under RCM? He said, why should I? I paid it. They have to discharge. No, you have to discharge. If you are providing any sponsorship services, on that 5 lakhs, you have to pay applicable GST. So for fifth one, the major, artist, music, singers, this kind of artistic capability people, where if you are purchasing anything from them or if they are providing any service to you, then you are liable to pay GST. I will give you an example. We have a client who is an artist. I don't want to name his thing. There are 3-4 artists, because once he came, all other big artists came. See, you won't believe their pictures and all, they are charging 10 lakh, 15 lakhs, which is very minimum. More and more, if you, that artist passed away means, the value will go 3 times or 4 times. So one day he gifted me one picture. It is still in my cubicle. He gifted me one picture, and because he's a big man, okay, so I thought, the picture meant something. I understood nothing out of it. So daily morning it is exactly in front of my chair. So every day I will see this, I understand nothing. So one day he came to my office. I asked him, sir, if you don't mind, I'm not degrading you or I'm not insulting you. I am poor in this artistic work. Please explain me what it is, because it is troubling me every day. Then he told me that, Rajiv, it is some word he used. He said, it is a pregnant lady holding the baby in her womb. I understood nothing. Sir, it is look like a cat. It actually looked like a cat actually. And the lady, he said, the lady is turning to the other side and all. I understood, sir. Enough is enough. I understood what it is. So they are in a different world altogether. So if you tell him GST, do you think that he will listen to me? The only thing which he said to me is, Rajiv, you take care, whatever want, you do it. That's all he will say. He will never, you cannot even ask him any opinion. Sir, can I pay tax? You tell me what is the amount, I will transfer to your account. Sir, how many, he will tell clearly how many paintings he has done, how many paintings he sold. That he will tell. That's only information which you can get it from him. That too he will not give it on time. He will be in his own world. Mobile is switched off. You cannot reach him out. One day he invited me to his house. I went there. I asked him, sir, one picture 10 lakh. Then you can draw 10 pictures in a month. No, then you will get 1 crore. That is not possible. He's saying he will get a mood sometime. That mood will come once in a month or something like that. I asked him, what is that? When it will come? He said, maybe in the midnight it will get. It will get in the morning 3 o'clock. You should go to his room. It's full of paintings. And you will go mad. So these kind of people, they are ready to pay interest, but they are not ready to compromise on the legal aspects. You cannot teach them. So government understood this. Government said, no, you are buying the painting, you pay tax. Because you are in the business. This Focus Mall and all, they are buying the pictures from him. So they will pay the tax. Singers, all these things, they are all not. So they just said, whoever is the recipient, they have to pay tax. Next is security services, which has added very recently. Security services, which they say, if the security services are received by a registered person from an entity other than a body corporate. I will repeat, if security services are received from an other than body corporate, received by a registered person. GT and all need not be registered person. Here they clearly use the word registered person. So assuming that I am registered, I am getting some services, security services. Assuming that my office there are 2 securities which are supplied by a partnership firm, which is not a body corporate. Then GST is applicable on me under reverse charge mechanism. Some people ask me, LLP, is it a body corporate? I want your answer. LLP, is it a body corporate? Because it is registered under Companies Act. I mean LLP Act. Is it a body corporate? See, body corporate has been defined under the Companies Act 2013, where they said company which is registered under this act or foreign company. So LLP is not a body corporate to my limited view, because considering or relying on the definition which is given in the Companies Act. Now, next one is, so these are all the services where the recipient has to pay GST under reverse charge. Then some insurance agent and all, they said, the company has to, that LIC agents and all, they are not so organized, where they said whoever is receiving the services, they have to pay GST. Now anything which I missed out, I think fairly the big things which we discussed. Now let's come to the new addition to it. New addition. That transfer of developmental right. See, this is a common practice in all the major metros, major cities. I have a land in Nungambakam. So this land, building will be there, maybe an old house. So one promoter will come, will say, I will demolish it, I will construct a new flats, I will give you 4 flats to you, I will retain 4 flats. Basically in this transaction, there is a transfer of my developmental rights to the promoter, which is a supply under GST Act. So what has to be done? The landowner has to get it registered, he has to discharge his liability, but you have to rely on 4/2018 notification, which is issued under 148 of the CGST Act. I said few minutes back there is no power. This is one notification such that, where they said time of supply can be at later point of time. After the completion certificate is obtained or you've taken the possession, at that time you discharge the liability. Okay. Now anyway, you have to discharge your liability. Now they came back and said, it is very difficult. See, you see in metros, you can see many. Assuming that I have a land, you are asking me to get it registered, discharge my liability, filing the returns, what? I cannot do it, I am a common man. Then the department said no. If the promoter, anyway promoter is a businessman, you pay it under reverse charge mechanism. When you do it, at the time of the same condition. At the time of completion certificate or something after 2 years, whatever the completion certificate, at that time dues charged. This is very clearly given. So this is one item which they have added. Okay. And leasehold land which is for more than 30 years. I have a land in Nungambakam. I am just asking you, I am a landowner, I am saying that you take it for lease for 50 years. I am a normal common man. The other party will be taking it for lease because for his business purpose. Government said, you pay it under reverse mechanism. Clear? More than 30 years, the recipient has to pay tax. This you have to be very, very careful when you are going and procuring land from Sri Perumbudur Sipcot and all. 1 acre you will get it for 1 crore. But that will be for 90 years, sometime it will be for 50 years. The recipient has to pay GST. Please note.
GST on what?
On the value.
Rental value.
Not the rental value, leasehold value. That 1 crore which you are paying. So for example, sir, I will give you a practical example. One of my client has got land allotted in Sri Perumbudur. 1 acre, 1 crore value. 1 acre, 1 acre, that is 100 cents for 1 crore. Now the value is defined, value is given, and this is an unrelated transaction, so transaction value is 1 crore. On that, you have to pay GST at the applicable rate. That's all. Next is, so we have covered by and large 9.3. Now let's move on to 9.4. 9.4, from 1st July 2017 till 12th October 2017, GST was applicable provided your transaction from unrelated party exceeds 5,000 rupees in a day from all unregistered party supplies. This was suspended on 13th October 2017. So GST under 9.4 RCM is applicable from 1st of July till 12th of October 2017. 9.3 continues from 1st July till today. Only addition to the numbers, that's all. So please don't misunderstand that RCM. Many people are said to me that RCM is not applicable. No, 9.4 RCM is not applicable. What is the difference between 9.3 and 9.4? 9.3 for the specified notified services or goods. 9.4 from all unregistered parties. That's what they said, unregistered parties. Any transaction by an unregistered party with a registered party. Now, hell lot of amendments have gone in that. First they said they postpone. Fine, because it is not practically possible. Second, they said on 1st of February onwards, they amended the CGST Act 9.4 saying that, no, it is not for all transactions. We will specify the transaction with an unregistered party. We will notify at a later point of time. Till 28th, no notifications. On 29th March 2019, notification number 7/2019, Central Tax Rate Notification dated 29th March 2019, they issued a notification. 3 things have been notified there. 1. Cement. If you are purchasing cement from an unregistered party, you pay it under reverse charge mechanism. Number 1. Number 2. There is a subclause, I will just tell you. Number 2. All capital goods which you are purchasing, RCM is applicable. Point number 1. Actually it is the first number, but I just wanted to remove these 2 and then bring to the last one. They say all inward supply of goods or services other than 1. Transfer of developmental rights, FSI, floor space index from any party. Then they said, these 2 are they mentioned. Other than this, you have to pay RCM under 9.4. Now, if you read this notification, you will get confused to some extent. You know why? This notification is not a standalone notification. They are using the word minimum purchase. In the same notification, no minimum purchase has been mentioned. For that, you have to refer to 3/2017 notification dated 29th March 2019, where construction services have been undergone a change. What is that? 9954. 9954 is the SAC code for construction industries, where para 3, 1A, 1 small a, 1B, 1C, 1D, 1E, 1F, all these have been inserted by way of 3/2019 notification. What is this? There was a GST council meeting where they said, for affordable housing, we will charge you 1%. If it is a non-affordable housing, we will charge you 5%. Basically, they notified that by way of notification 3/2019, where they said 0.75 is what they have notified. 0.75 means how much? SGST 0.75, it will be 1.5. But basically, if you come to the bottom of the notification, you can see that value will be 2/3. So 2/3 of 1.5 is 1. Correct. Like that 7.5 also 2/3 is 5. Applicable rate, perfect. In only I said that 9.4 is applicable. I'll repeat, because you are not supposed to take input tax credit. So they are saying, if these 1A, 1B, 1C, 1D transactions, where if you are having a project, for these kind of transaction, not for all construction, I will repeat, it's the 9.4 is not applicable for all cement purchases. Assuming that I am a chartered accountant office, I am purchasing cement from an unregistered party, this is not applicable. That is what they cleverly used to specify the transactions. So this is applicable only for 1A, 1B, 1C, 1D and all, where these kind of lower rate has been prescribed. So what will happen in the industry? I know that anyway I will not get the input tax credit. Why should I go to a registered person? Correct? Assuming that if this provision comes, will I go to a registered person? He is charging anyway, I will not be able to take the credit. Why should I go? So they said, no, you have to purchase 80%, 80% from a registered person. Then they said that 80%, even if you are paying it under reverse charge mechanism, that will be considered as purchase from an unregistered party for the purpose of this 80%. So only assuming that I am developing a project, and they clearly said you have to maintain books of accounts on a project basis. I am constructing a project here, ABC project, there, Pinnacle project, 3. So they are saying each project you maintain books of accounts. Each project you identify 80% of the value, excluding couple of things. I will tell you that what is excluding. Excluding that, your total expenditure comes to say 1 crore, 80 lakhs should be purchased from registered party. If it is not, you pay it under reverse charge mechanism. But the beauty of this concept is, they said, you identify these kind of transactions by end of the financial year or completion date, completion certificate date, whichever is earlier. Part of the financial year also, you have to do it if the completion happens in the middle of the year up to that particular period. You calculate it, you have liberty to calculate up to June of the subsequent month. Within that 3 months, first quarter you have to discharge your liability. Identify the shortage of 80%, pay 18% on that. I will repeat, pay 18% on that. This is little different for us, because under old 9.4 we were discharging based on the goods and services at the applicable rate. Here it's not based on applicable rate. Cement applicable rate, capital goods applicable rate, but other than cement and capital goods, it's not applicable rate. It is 18%, which clearly given under 3/2019 notification dated 29 March 2019. Clear? You have to maintain books of accounts project wise. Phase 1, phase 2, phase 3, all project wise you have to maintain books of accounts. 9.4 is clear. 9.4 is clear. Little different from the old one. First is, it is not applicable for everything. It is applicable only for the construction. That too, not all construction services which are listed out under 13, 14 line items are business, not for all. It is only for this 1A, 1B, 1C, 1D, where lower rate has been prescribed, it is applicable only for that, and rate is 18%, not for all, up to 80% we have to discharge. I'll just take one small example, then it will be more, it will be clear to you, because without that if I go, because the example is given in the act itself, in the notification itself, schedule 3. So schedule 3 of this, Lakshman, because this example I cannot tell you. Has it been switched off? Was it working for you? Yeah. Yeah. This is the 3/2019 notification, central tax. Go to the end. You can see schedule 3. Annexure 3. Go to annexure 3, annexure 3, annexure 3. Yeah, they have given with examples. Annexure 3. This is the best illustration which is given. 3 illustrations have been given. We will go through this. A promoter has procured following goods and services other than capital goods and services by way of grant of development rights, long-term lease land or FSI for construction of a residential estate project during the financial year. They said, first point, input of goods and services, percentage of input goods and services, sand, all are from registered parties, so no RCM except the cement. Cement they said yes, on 15 you pay RCM. Very simple, straightforward. Second example, here you can see paint is purchased from an unregistered party and aluminium window is purchased from unregistered party. But what is the percentage put together? It is coming to 20. It is coming to 20% of the total expenditure. Total expenditure for that particular financial year. This is the total expenditure incurred for that particular financial year. 15 plus 5, how much? 20. So it is within the limit of 80%. 80% from registered party. If you look at the right hand side, all you put together, it is 80% from registered, 20 from unregistered. But doesn't matter. No RCM under 9.4 is applicable. Why? I met the minimum purchases. Clear? Now, third one. This is little complicated but very simple. Here if you say 10, 15, 15, 10 are from unregistered party, right? You can see in the right hand side, you can see no. NN means not unregistered party. 1, 2, 3, 4 are from unregistered party. So if you look at that, cement, anyway RCM is applicable. Cement, so I will pay 15%. So on 15% I will pay RCM at 28%, whatever the applicable rate. So it will become 15, 20, 30, 35, 40, 10, 50% is from unregistered party, right? 50 plus 50, how much? 65, because I paid RCM on cement. 55. Now how much is shortage? 25%, correct? I will pay or 30%, I think. I think my computation is wrong. So 15 I pay under reverse charge mechanism. So that will be considered as a purchase from registered person. Now, the 10% and 10% on if you take the first one and last one, it is put together 20%. So that I can exclude. So on cement and aluminium I have to pay RCM. But you don't have to do individual item wise, you don't have to find it out. What is required? Total value you add 900 rupees, say for example 100 rupees. On that cement is 15, so you have to anyway pay. So after putting cement, it is coming to say 75%. On balance 5%, you don't have to identify all this. Anyway it is 18%. Take the value, multiply 18%, pay it under RCM 94. Very simple. Not complicated. Go through this annexure, which is very simple. So now 9.4 also done. 9.5 we have already discussed with it. Sponsorship, all this director, recovery order. I think we have done with 9.4 and 9.5 also we have covered all this. 9.4, what are all the things which are not covered under that? Grant of developmental rights, long-term lease or lease of land, FSI, electricity, high-speed diesel, motor spirit, natural gas, 20% of the value of input and input service from unregistered party excluding above. I told up to 20 it is exempted. Correct? Capital goods applicable at the applicable rate. GST 94 is applicable. See, this is not for all capital goods. I am repeating, it's not for all capital goods. Capital goods purchased for that particular project. What is that particular project? They said 1A, 1B, 1C, 1D against serial number 3 in turbine notification number 11/2017. Only for that. That is, I said, affordable, non-affordable housing projects. So, if I am creating a project here for 1 crore, that project alone has to be taken separately. Okay. So, 9.4 is done, and we have already dealt with 9.4 is done, 9.5 already we discussed. Any doubts in RCM and this levy? We are done with that, that's all. Not to complicate, made it very simple for you. Any doubts? Only for construction industry, on the specified construction works. For the, I would put it this way, for the, you take one project, see housing projects. So for example, one builder is constructing a house, okay, no, not house, flats. Say for example, the flat has 1,000 projects, 1,000 apartments. That project it may be applicable. Not for assuming that my client is a ground engineering company. Okay, they are not into the housing construction at all. They are into works contract. It is not applicable to them. It is not applicable to them. If they are purchasing any capital goods from unregistered party, not applicable. Cement they are purchasing from unregistered, not applicable. It is applicable only for that particular category of goods and services which are provided 1A, 1B, 1C. Now last one is time of supply. Any other doubts? I think we will take some quick case studies also if time permits, so that we can get the grip over or get a hangover on all the concepts. Now, we don't require PPT, right? You want PPT? If I go through the PPT, then it will take too much of time, because all sections, PPT I created mainly for circulating to all of you. See, the advantage to you is, when you are dealing with one practical exposure, practical cases, you would have already gone through it. So all the section numbers, all these issues would be in your mind. So that will give you a better presentation than going through the PPT in most of the cases. In my case, I would put it that way. Because if I go through PPT, I felt that I'm taking too much of time. Because PPT has a lot of points, and this PPT itself will be having 37 slides. This alone I am talking about. So anyway, there is no lack of any kind of missing points. We are covering all the major topics with the section numbers, so no problem. Now, time of supply. If you read time of supply and all, you will get confused. Why? I got confused. Mainly because there was no clarity. They made some mistakes in time of supply, and in construction, having some construction companies as our client, we found it very, very difficult to interpret the time of supply, because continuous supply of service, time of supply was not mentioned properly in the section 13 of the CGST Act 2017. So there was a residual method which is nothing but 13 subsection 5. We were adopting it, but fortunately now they have amended it. Now 13.2 is applicable to everyone, including continuous supply of service. Now, what is this time of supply? So we understood supply. We understood levy. Okay, I have to charge GST at the applicable rate, value prescribed under 15 of the CGST Act. Now, at what time I have to pay tax? Can I pay after 1 year? Can I pay after 2 months? Can I pay 2 days later? When should I pay tax? You tell me, when should I pay tax? I told you in the beginning, rate of tax, time of supply, place of supply, value of supply. Out of this, time of supply is what we are going to discuss now. When to pay tax, which is a very critical point. Now, time of supply is based on, there are two things. Time of supply for goods, time of supply for supply of service. I'll take both parallelly for your benefit so that it will be very easy. 12.1, they are saying 12 subsection 1 of the CGST Act says time of supply means the time at which you have to pay the tax. That's all. They are saying that time of supply of goods means time at which you have to pay tax. We will take both parallelly so that it will be easy. 13.1 says for supply of service, I will tell you what is the time of supply. So 12.1 we have taken, 13.1 we have taken for services. Both are nothing but they are saying that time of supply means when to pay tax, liability to pay tax. 12.2 says it is for the forward charge of, forward charge, what is the time of supply? I'll repeat, forward charge of goods, what is the time of supply? 13.2, forward charge of supply, what is the time of supply? For service. Forward charge of supply of service, what is the type of supply? Forward charge supply of goods, it is very very important, this is major. 12.2 says the date of invoice or whatever the date which you require to be raised invoice, within whatever the prescribed period you have to raise an invoice, whichever is earlier, it's the other way because there was an amendment out, so I'll put it that way. I'll split it into two boxes. First box, 1st July till 12th of October, or I will put it not 12 because there was a 2 notification which has come, that is why I don't want to confuse you because both are for payment of advance. GST is exempted for goods based on notification number 40/2017 dated 13th October 2017 and later 66/2017 dated on 15th November 2017. So that is why there is a slight confusion in goods, but I will make it very clear for you. I'll just tell you the standard first. What was the initial position? They said date of receipt of payment. If you receive the payment, that date or date of invoice or the date within that prescribed date, you have to raise invoice under section 31.1, whichever is earlier. I'll make it very clear. I'll give you an example. I got 1 lakh rupees for supply of laptops. That date will be the time of supply for goods. Second option, I got payment on 1st of January, but I raised the invoice on 2nd of January. What is the time of supply? Whichever is earlier. I received the payment on 1st of January, but I invoiced it on 2nd of January. What is the time of supply? First, correct? Clear? Because I want you to be with me. Otherwise, because it's little confusing in that particular 2 notification, that is why I am just making it. You have to participate. Otherwise, you will not get a proper understanding. This is the only complication. Rest of all, nothing. We will finish it within 2 minutes. So, what is the date of invoice that you have to consider? Second, assuming that you supplied goods, sir, but you are not at all raising invoice, he is not at all giving payment. Do you think that government will take that such kind of thing? Government clearly said your date of invoice or date on which you required to be raised invoice. You raise whenever you want, but required to be raised. That means, assuming that I supplied laptop, neither received payment nor raised invoice. But government clearly says, 31.1 says, before removal of goods you have to raise invoice. Or, if there is no movement, making the goods available. to the other party. So, assuming that scenario 1, I am a proper guy, registered person, I am raising invoice on time. So what will happen? I received a payment after raising invoice. Then if you have raised invoice within the time limit, then your invoice date will be the time of supply. Okay. Option number 2. You are not a tax compliant at all. You are not at all raising invoice. Government says, have you supplied? When did you supply? 1st of January. When did you remove the goods? When did you remove the goods? I removed the goods by 15th of January. You should have raised invoice. So I'll take 15th January as your time of supply. If you have, so this is the second scenario. Now, this payment alone has moved. Payment as alone has moved, removed because of notification number 40/2017 and 66/2017. What is 40/2017? They said advance received by a registered person whose turnover is up to 1.5 crores and all, no need to pay GST on the receipt. So, for the people whose turnover is less than 1.5 crores, with effect from 13th of October till today, no GST on advances. Subsequently, on 15th of November 2017, notification number 66/2017, they said, no, I will extend this privilege to everyone, irrespective of your turnover. So, now, time of supply post 15th of November 2017 is purely based on your invoice date. If you are raising it within the legal framework, because you have to raise before the removal of goods. If you are removing the goods, if you are raising within that, you are invoice date. Assuming that you are a tax compliant person, you don't have to look at anything. If you are raising your invoice before the removal of goods, your invoice date is the time of supply. Clear? Clear? Now, second point. Now, this is over. Okay, so you have to look at these two perspectives. One is up to 15th of November, 14th of November. It was based on both receipt and invoice date. Here, post 15th of November, it is purely based on your invoice date. Now, let's come to the services. Services, they are saying, time of supply is nothing but your invoice date or provision of service. Provision of service. If you are raising invoice within 30 days from the date of invoice, if you either you raise an invoice, receipt of payment is there, first point. Second point, the invoice, same invoice point, where they said, if you are raising invoice before provision of service or provision of service on the date of provision of service, or by max, I will give you 30 days from the date of provision of service. If you are raising within this particular prescribed time period, your place of supply shall be your invoice date or payment date, whichever is earlier. Is it clear? Is it clear? Subsequently, there is another provision which clearly says that I gave you 30 days for raising invoice, but you are not following it. You are raising it after 31st day. You are raising after 31st day. Then government said your time of supply will fall back onto the date of provision of service. The 30 days grace period is not available to you. I'll give you an example. We will sign audit reports. Audit reports, we are signing it on 1st of September 2019. Signed, service is completed. Now you have to raise invoice within 30th of September. Correct? If you are raising invoice in July 2019, that will be the date of supply. Assuming that you did not receive the payment. Assuming that it is a good to client, they paid the money in advance. Say for example in August itself, then that receipt date, August date, or assuming that I am going to raise after providing service. What is the date of provision? 1st of September. Then that date I am not raising. I have time or I have liberty to go up to 30 days. So I will raise it on 30th of September. Then my time of supply will be August date because I received the payment. Assuming that an actual scenario where after raising invoice only client will make payment. That is a general scenario. In that case, they gave you time up to 30 days. your time of supply shall be 30th of September 2019. Assume that my admin team has not raised invoice. They have raised it on, say for example, 3rd of October. 30 days time is over. Now, the time of supply will fall back onto 1st of September, not onto, the interest has to be calculated from 1st of September, not from 30th of September. So please be careful with this. That's all about the time of supply for services. Any doubts? Any doubts? Very clear? As on date, if you ask me, look at only one component as far as goods is concerned. Date of invoice. If you are raising invoice before removal, very simple. Services, look at receipt or invoice date. If you are raising within the proper date, then that will be the time of supply. That's all. No need to confuse. Third one is 12 subsection 3, 13 subsection 3. 12 subsection 3, they are saying reverse charge mechanism for supply of goods. What is the time of supply? They said, here there is a little problematic. One is, they said 30 days from the receipt of goods. I'll repeat, 30 days from the date of receipt of goods, or not the other way. It is actually 30 days from the date of invoice of the supplier. I'll just repeat, 30 days from the invoice date of the supplier or date of receipt of goods or date of payment, whichever is earlier. There are 3 conditions for goods, 2 conditions for services. What is this? I'll repeat. I want you to be with me. Very, very careful. First is lunch time. Already 1 o'clock. So many people are all yawning. So I want you to be very, very participative. This is the last major concept. After that, we are just going through case studies and then within 15 minutes we'll close it. All of you are with me? I want a loud yes, sir. Sure. So the problem is, I don't know whether you are sleeping. Some people are very good at sleeping by opening their eyes. They will be looking at me as if I am listening. But when you are all kids, now what we will do? Teacher is asking some questions. We'll suddenly turn to the other guy. As if teacher would have asked you only, but you will turn to the other guy. So I want you to be very participative. As far as reverse charge, forward charge we have completed. Reverse charge, it is very simple. Please be careful. Date of invoice, 30 days from the date of invoice or any other document which he has issued, or date of payment by you to the other party, or receipt of goods, whichever is earlier. The risk is here. Assuming that he issued an invoice, I come across an issue in services, I will tell you that. What happens? I am the supplier. I have issued an invoice to you. Okay, I have issued an invoice to you for the goods, but I did not send it to you. I did not send it to you. I just raised it in my books of accounts, but I did not give it to her. 30 days elapsed. I am giving the invoice after 31st day, or say for example 60 days after that I am giving the invoice to her. Point number 1. Point number 2, I am supplying after 60 days from the date of invoice. Third, I am making payment after 60 days only. So what is the date? What is the time of supply for this? 30 days from the date of my invoice. How do you know when I am raising the invoice? It is a very, very difficult, which is a lacuna in the GST law. You cannot expect the date of invoice of my books of accounts. I would have raised, but I would not have sent it across. Now, 2 arguments we can take. One is invoice means invoice is defined under the CGST Act. Invoice means what is given under Rule 46, but not required. They have used one more word there, invoice or any other document issued by the supplier. So, need not be an invoice. It can be other than invoice also. So, this is a little risky proposition. Then let's come to the services. Services, date of receipt of service is not there. That's all. Only goods is not there. Corresponding thing is not there. Here they are using the word 60 days from the date of invoice or other document issued by the supplier, or date of payment, whichever is earlier. I will give you a practical example. One of my clients is located in Sriperumbudur. They got a case, actually, tax case. So they approached me, and after all this tribunal, all these things got over, it went to the Supreme Court. So they asked us, can you refer a Supreme Court advocate? So we have a panel there, Supreme Court advocate. So he's a very senior advocate. So we referred him. So he's close to our firm. So we referred him. We won the case in the Supreme Court. We won the case. But the issue not ending there. There was another case. What was that? This advocate, he sent, it was happened in somewhere in, I think it was in October end or something. I will take it for the time being, October 1st. The completion service has completed. He raised an invoice on 1st of October 2018. He sent the invoice to the factory, which is located in Sriperumbudur, to the CFO of the company. CFO was, they will close their factory for rehauling and all, 10 days off. Invoice came, went back. Again they sent the invoice, CFO was not there, they will not accept it, again it went back. Then this advocate also did not follow it up. Okay. In March 2019, company called me and said, Rajiv, advocate invoice has come, this is for 10 lakhs. I said fine. He asked me, RCM is applicable? Sir, hold on, RCM is applicable. So I will discharge it along with my March month liability. I said no. From the date of invoice, you calculate 60 days. Why should I calculate 60 days from the date of invoice? I said that is a provision as per section 13 subsection 3. Now if you calculate 60 days from 1st of October, 30th of October, November 30 days, 29th of November they should have discharged the liability. Now they have to pay interest from 29th of November or 30th of November till March 29th. It was received on 29th. They have to discharge the liability till such time. Now the company asked me, is there any shortcut? He said there is no shortcut, it is as per the law. Either you ask him to cancel his invoice, if he agrees, he will not agree because he is also a registered person. He will not do that. There is no other way, you have to pay it under reverse charge mechanism. Then obviously we only referred this advocate. So obviously the case came to us and I talked to him. Finally I said, sir, it is not advisable to revise the invoice. You pay the reverse charge mechanism, whatever the interest you pay, if you want you adjust it along with his invoice or whatever you do it. I don't want to get into it, but this is the position as on date. Did you understand the case exactly? With this advocate example. His invoice, this company doesn't know when he raised the invoice. Correct? Now, because of that, they are paying interest. It's a huge interest they are paying. It's an unnecessary thing. So this is what I said, this is one area where we recommended to the government for revising this. Had they maintained the word invoice without other document, invoice is defined under GST. So only GST invoices can come as an invoice, but since they have used other documents, they are falling into it. Now, any other document, that is why. So you are, see what is invoice? Invoice means GST invoice. You are an unregistered party. So assuming that you are an unregistered party, your document, invoice, is not as an invoice as per GST law. Because you are not registered. So that is why they are using other document, any other document. So if you issue a slip also, that is a document. So reverse charge mechanism is over. You understood time of supply. Fourth one is I will not handle it. 12.4 and 13.4 both are for vouchers. I will not be handling it. See, assuming that, that's a good point, thanks for reminding. Assuming that you are not able to find out any of this, assuming that in goods or services, you are not able to find these dates or invoices or anything for that matter, the date on which you enter this in your books of accounts, that will be the time of supply. That anything is not possible, entering in the books of accounts, that will be the time of supply. That's all. In your books of accounts. In your books of accounts, not in their books of accounts. Yeah, with if you are debiting and crediting the party, yes. Not the general provision. General provision, see for example in construction companies and all what they do, They will just mention that provision for material, provision. That is not a general, that is a general provision. If you are maintaining saying that audit fees to ABC and Co, that is an actual provision. Okay. Now, next is voucher, I am skipping. Fifth one is residual provision. Residual provision means what? If you cannot find any time of supply from any of this 12, 1, 2, 3, 4, 13, 1, 13, 1, 2, 3, 4, 13, 13, 1, 2, 3, 4. I think mic is also requiring some. It's called for lens, it seems. So 12, 1, 2, 3, 4, 13, 1, 2, 3, 4. If you are not able to find time of supply, they are saying that come to residual provision, that is nothing but 12 subsection 5 and 13 subsection 5. What is 12 subsection 5? Where they are saying that if you are not able to find out the time of supply, come to me, your due date for filing the returns, that will be the time of supply. Or if that is also not possible, when you are paying the tax, that is your time of supply. Okay. Now 13 also, subsection 5 clearly says the same thing. Same thing. Now, can you give me an example where this falls into the picture? Can you just imagine any transaction which falls into this? I will give you a practical example which we come across for the construction industry. So construction industry, we were looking for the time of supply. Time of supply for construction industry is different because that is falling into the continuous supply service, where the invoice is raised not under 31 subsection 1. It is under a different section. Hence, by looking into it, we understood that continuous supply of service will fall into section 12.5 or 13.5 till such period of time, because now that has been amended. Now the time of supply has been amended to bring all this continuous supply of service also into 13 subsection 2. Now, the last one is 12 subsection 6 and 13 subsection 6. Last one. Be happy.
No, in this continuous supply, there is no example because if I am supplying IT involved by first Jan 2019,
Yeah.
but my revenue is eligible to take a credit only last supply has been settled.
Not like that. See, continuous supply of service is an entirely different concept altogether. That comes mainly in the construction industries. Okay, not mainly I am saying. See, what is the definition of continuous supply of service? Continuous supply of service means that service which take having a duration more than 3 months. Even your AMC contract can come as a continuous supply of service. So for example, in construction industry where we analyzed it, that's why I'm sticking to that particular provision, where projects will go more than 3 months. My company was into ground engineering, so some projects will be completed within 2 months. If it is a residential apartment ground engineering, they will finish it up within 1 month or 2 months. If it is a Chennai Metro, Cochin Metro, Delhi Metro and all, they took long time. Because all this ground engineering, that means their work will not be shown outside. It will be there in the ground engineering, that means under the ground only. So they will test the soil, they will ensure that the foundation is strong, they will do the pillars there. So all these things they will do. So for that, if the project is more than 3 months, then continuous supply of service will be applicable. If the project is less than 3 months, then normal supply of service will be applicable. So there were 2 types of supply for a construction company. Till the amendment came. Recently only amendment came, now only 1 type of supply. So any continuous supply project which takes more than 3 months. Okay. And when to raise an invoice for continuous supply service is given under 31. It is not under 31.1. That is what the problem, because in time of supply they started saying that if you are liable to raise invoice under subsection 31 subsection 1, so that excluded my continuous supply of service. That is why I went to 13.5. Otherwise I would have stick to 13.2. So anyway, so last one is 13.6 and 12.6. 12.6 what it says? It clearly says that any
interest, fee or penalty for belated or delayed payment of consideration. I will tax you, but at the time of receipt of such money. This is the only concept, I will tell you, this is the only concept where GST is payable based on receipt. All other places, GST is payable based on accrual. Do you agree? GST is payable on accrual, right? GST is payable on accrual, but this is the only section, 12 subsection 6 and 13 subsection 6, which is the only section where the GST Act says you can pay based on receipt. I will give you an example. You would have seen invoices on the bottom, they would have mentioned that if you don't pay me within 30 days, I will charge you 18% interest. Correct? Now, this party will not pay within 30 days. They will pay after 90 days. So 60 days interest is accrued if that provision, but generally they will not be paying the interest. Assuming that this time of supply is not there, you just imagine the litigation which is going to happen in the industry. Because you put this clause, you are in trouble. Because department will say it is accrued. Collected or not is not my point. You collected from him. Fortunately, 12.6 and 13.6 coming into our picture, and for the rescue, they are saying that no, if you have collected, pay me the tax. Okay, now, what happens is, I could see some clients where after 90 days, they are raising a debit note saying that this is the interest, additional interest which you have to pay as per the PO signed, and on that they are charging say 18%. Now, is it correct? Is it correct? Because money has not been received, but they raised invoice. Is it correct? They have every liberty to raise before. Government has given you a right to pay tax at the time of receipt. If you are doing it based on your invoice, no problem, because the practical problem which I have seen is one company where, when I asked him, so why are you raising invoice now? It is based on payment. He said, no, my SAP will not allow based on collection. I have to raise a debit note, then only that party will release the payment. So I am raising a debit note. Debit note cannot be raised without a GST component, so I am raising it. I said, no problem. If you are paying in advance, no problem. But time of supply is that. So no problem. So practically, though theoretically we are saying it is based on collection, but in most of the companies they are having a problem in the SAP. So that is their problem, but it is not a problem. It is actually, you could have deferred the liability, but if you are able to pay, if you are interested to pay in advance, no problem. So section 12 subsection 6 and then 13 subsection 6 are over. Yes sir.
How do you apportion the receipt? Like I have raised invoices for the services which are supplied.
Yeah.
Then for a late fee also I have just charged them. I have debited them, right?
Yeah.
They may be round figures like 10 lakhs or 12 lakhs.
Yes, yes.
Is it my prerogative to apportion against only the services initially, then to the against the late fee which I have debited them, or based on the date? The other party has not accepted the debit notes which I have raised towards late fee.
Yeah. That is what government has given you. See, sir, there are practical issues. PO you will sign saying that 18%. But many cases when you communicate to them, they will say that no, I will not pay you. That is why government said you paid based on collection. If you are raising a debit note and if they are not paying, you paid the tax to the government, correct? And subsequently you have to reverse it. How do you reverse it? Can you raise a credit note? No, you cannot raise a credit note. Credit note, section 34, subsection 1 clearly says, credit note can be raised only in 3 cases where these kind of transactions are not there. Defective, goods returned, these are all the transactions. But this will be a problematic issue. That is what I told, paid based on collection. Now, the rate which you are talking about, I understand that the rate, tax rate which has to be applied. Okay.
I am receiving 10 lakh rupees. Whether I should apportion that receipt against the bills which are raised for the services which are rendered, or for the debit note for the late payment by them. How do I apportion that receipt?
Sir, that
based on collection.
yeah.
If I have collected against only the bills which are raised for the services rendered by
Oh, okay, understood. Sir's question is very simple. I have an outstanding of 1 crore and I raised a debit note of say 10 lakhs. But the company has paid 50 lakhs. 1 crore is my liability, tax outward liability, which he has paid, and I raised a debit note on which 10 lakhs is my GST liability. He paid 50 lakhs. Should I apportion this to my main invoice or for this debit note? That's what your question is, right? It is purely factual in nature, sir. If your party is saying that this is against your, debit note, then it will be applied. Here you have to also look at, just go beyond GST law. There is a contract act where they are saying that if there is no clear instruction which is being provided, first in first. That being the case, first it will be adjusted against your invoices, subsequently against your interest. But if you look at the thing, in these kind of cases, you ask them to give a clear instruction and then close it.
The other party doesn't accept the debit note which they have paid. What happens?
That is what you do. One thing, don't raise it. If you raise a performer invoice, you raise it. If they are not accepting it, you have no GST liability. No, that is what the government has given you power. Now, thus we have done with the time of supply. Any doubts? And do you have time for 7 minutes for taking 4 or 5 case studies? All of you are agreeing? Otherwise we can break for lunch. 5 case studies, quick. Yes, sir.
Advances received for supply of goods.
Yes.
GST did not be payable. When the law was introduced, one has to pay.
Yes.
Subsequently, it was amended.
Subsequent, yes.
When from that law came into force?
Very good point. Sir, when the law got introduced on 1st of July 2017, the CGST Act 2017, GST is payable on receipt of advances even on goods. On 13th of October 2017, there was a notification number 40/2017 dated 13th October 2017 where they say if your turnover is up to 1.5 crores, that is they are targeting only the small players. If you are receiving advance, you need not pay GST on advance. This was prevailing till 14th of November 2017 because 15th of November 2017 there was another notification which superseded this notification number 66/2017 dated 15th of November 2017 where they said irrespective of your turnover, advance received on goods exempted. Exempted means you don't have to pay tax.
Yes. Regarding services, it remains in force.
Yes, 1st July till today, services remains the same. Especially look at construction industry, sir, because they are doing works contract as defined under 2 subsection 119, which is as per schedule 2, it is a supply of service. Okay, clear? We'll quickly take some case studies and then we'll close. Case studies means, you have to answer it. I have no answer to it. So, case study 1, goods forward charge. KSK, a bearing manufacturing company, sold bearing for a consideration of 1 crore to Miyota Motors Corporation Private Limited for a manufacturing of vehicles. Is it a supply? Is it a supply? You want to see that? KSK bearing manufacturing company. Don't look at the first one. I just mentioned the sections. Look at here. KSK, a bearing manufacturing company, sold bearings for a consideration of 1 crore to Miyota Motors Corporation Limited for manufacturing of vehicles. Is it a supply for KSK? Yes. Under what section? 71A, 71B, 71C. Only 3. 71A, no. It's not neither an import nor a related party transaction or agent or permanent transfer of disposal of assets and all. So it is 71A. Is it a supply? If there is no consideration, is it a supply? That 1 crore you remove it. There is no consideration. Is it a supply? Is it a supply? They are not related. They are not related. They are not related. Good question. They are not related. They are both are independent companies. 1 crore is not there. GST applicable or not applicable? Go to 71A. What I said? Consideration also should be there. It should be for the business purpose. If consideration is not there, is GST applicable? Yes or no? Not applicable. That's all. Very simple. What is the confusion at that? 1 crore is the consideration, no madam? Assuming that 1 crore is not there, on what value you will tax? That is what 71A clear says. Consideration and it should be for the business purpose. Clear? So 1 crore is not there, not applicable. Who has to levy GST? Is it forward charge or reverse charge? Under which section? 9, 1, 2, 3, 4, 5. There is only one section, 9.1, forward charge. 9394 reverse charge. 95 third party discharging the liability. 91 supplier discharge liability. 9394 recipient discharge the liability. 95 a third party e-commerce operator discharge the liability. So here 91 only will come. When to raise invoice? When to raise invoice? Time of supply. Sorry, it's actually coming to the invoice thing. I will not go to it. I will just ensure that time of supply. What is the time of supply for this? Date of invoice. Correct. What is date of invoice? Within what period you have to raise invoice? Which is given under 31 subsection 1, which another faculty will be handling it. Clear? Clear? Clear. Okay. This is a very simple case study for forward charge. Once you done with this case studies, you are thorough with it. I should not answer. You should answer it. If I answer it, I already answered it multiple times. You should answer it. Sikanji, a consulting firm in India, provided services to Infozen Limited for a consideration of INR 1 crore. Is it a supply? It is actually a service. You see, first one is goods forward charge, service forward charge, same provisions. Is it a supply? Which section? 71A, very good. Is it a supply? If there is no consideration, is it a supply? That 1 crore is not there, is it a supply? Yes or no? I got an answer. No, correct. Assuming that they are related. Supply? Correct? Because you have to go to schedule 1. Correct? Yeah. Now, who has to levy GST? Sikanji or Infozen? Sikanji, correct? Because they are providing the service. When to raise an invoice? That will be taken by another faculty. What is the time of supply? What is the time of supply? Forward charge only. 13.1 or 13.2 will be there. What is that? If the invoice is issued within 30 days, then date of invoice or payment, right? If invoice is not issued, date of provision of service or payment, whichever is earlier. Is it clear? Clear? Am I answering or you are answering? Mic is with me, but I am getting some responses, that is why I am repeating. I am not answering. Now, third case study, transfer to another branch. So, ABC Limited has transferred its goods from Chennai to Gurgaon. No consideration is paid. The company is registered under GST in both the states. Is it a supply? Under what section? I want you to answer. You answer it. Oh, hold on 1 minute. You answer it. 71A is applicable or B is applicable or C is applicable? C, correct? I don't know whether you said C or not, whether I... Okay, C is applicable and C read with schedule 1, para 2. There they said, yes, it is applicable. And who has to levy GST? Chennai branch or Gurgaon branch? Chennai branch, very good. When to raise an invoice? That will be handled by another faculty. What is the time of supply? Before the date of invoice or in case of service? Correct, absolutely. What is the value of supply? I am just moving to some other topic, but still, because once you take a case study, you have to understand everything. I cannot simply say that no, it is not part of my thing. Then that case study will not get a complete understanding. So I'll just take the value. What is the value? Oh, okay. Section 15 clearly says that is a section for value, transaction value, subject to if they are not related and price is the sole consideration. So because they are related, you have to go to rule 28. Rule 28 clearly says open market value. And first proviso clearly says I will give you an option to pay tax on the value of 90% of the open market value. Now, okay, AR ruling is there. Caltech canteen services we already discussed. Columbia Asia Hospital we already discussed. AR ruling Cafe Coffee Day we have already discussed in the morning session. Import of service. Cisco is a startup global software company not registered under GST. It constructed a new building where the design services are imported from a company in USA for a consideration of INR 1 crore. Is it an import of service? Yes? Very good. So which section will be applicable? 7.1? I can hear that 7.1. The remaining I have to fill it over B. Okay, B. And will your answer be different if the house property is constructed by MD of the company for his personal use? Will your answer be different instead of the company if the MD is constructing a personal house property? Will it be still considered as an import or service? Still 7.1b will be applicable? OIDA will not be there because this is not an online based, na? It's a design services. I gave you the same example. I think I should give some film star's name, then only you people will remember. Which film star you like the most? Give one name. Not answer. I'm not asking GST questions, no? Give me one film star, madam. Mohanlal, okay. You're from Kerala. Okay. Mohanlal is a great actor. Recently Lucifer also got released. Okay. So Mohanlal is an actor and he wanted to construct a house property in Cochin. He did the same thing. Assuming that he is not in the profession. He is an acting professional, but assuming that he is a normal individual. This is a purely personal transaction. RCM is applicable or not? 7.1b clearly says import of service for consideration need not be for business. I told you 7.1a business and consideration should be there. 7.1b only consideration required to be there, need not be for your business. Assuming that, what's your name? Your name? Okay, behind boy. Nikhil. Assuming that Nikhil, sorry madam, I just wanted his name. Nikhil is constructing a house property here. Okay. You are constructing in Nandambakam. You are a rich guy, but you have no business. Okay. And you wanted to get this designing services being done from USA. You are still liable to pay RCM because you paid 1 crore liability, 1 crore consideration. It is an import or service. Irrespective whether it is in your business or not, you have to pay GST. Okay, clear? Now, is registration required for the startup and also for the MD? Because RCM liability has to be paid, discharged, so you have to get it registered under GST. Because it is coming under section 24. See, look at these sections, one small line item, see how all it is connected. 7 supply, 24 compulsory registration, time of supply, value of supply, many I removed because of the space constraint. I think when to raise invoice for RCM? When to raise invoice? Subsection 13, subsection 3, right? 3, reverse charge mechanism. When to raise? Based on his date of invoice or receipt of no, receipt of service is not there, that's only for the goods. Goods, 3 conditions. Receipt of goods, 30 days from the date of his invoice or date of payment, correct. Like that, here if you see for the service, that receipt is not there. Second one is 60 days from the date of his invoice. And last one is date of payment. These 2 conditions. So his invoice date plus 60 days or date of payment, whichever is earlier. So I'll move on to the 5th case study. Advocate Hani Salve has appeared before Supreme Court for Pure Ayurveda Private Limited. He issued an invoice for rupees 10 lakh without GST. I gave you a few minutes back, advocate. Hari Salve is not my non-person. Okay, I quoted another senior advocate in the Supreme Court. He issued an invoice for 10 lakhs. This issue we already discussed. Any doubts in this? Correct? Is it a supply? Yes. 7.1a, it is applicable. Who is liable to pay GST? 9.3 will be applicable. Reverse charge mechanism, 13/2017. What is the time of supply? We already discussed 60 days from the date of invoice or other document, whatever the document or payment, date of payment, whichever is earlier. And that's all. We have already discussed this case study. And transfer or disposal of business asset. This we already discussed. RCA is a firm of chartered accountants having NGO at their client. RCA donated in March 2019 a brand new laptop purchased in December 2019. Sorry, that date is 1819. You read it like that. ITC taken on laptop. This also I discussed already. Correct? So these are all the case studies. That's all. So 6 case studies we quickly done it. I hope you answered it, not me. So you got a fair understanding of what you what we are talking about, GST, supply, levy, and time of supply, reverse charge mechanism, forward charge. Don't get confused with anything. Supply, 7, that's all. Levy comes only if there is a supply. Levy, we already discussed how it is flowing. 9.1 forward, 9.2 exempted petroleum products, 9.3 reverse charge mechanism, read with 13/2017 notification. I want you to connect all this. This reverse charge mechanism 9.3 read with the 13/2017 notification, 9.4 connecting with the notification number 7/2019 dated 28th June March 2019, 9.5 there are 3 specified services being notified. One is e-commerce operator, where accommodation services, transportation passengers, and the last one is household services. I gave you an example also, transportation passenger, Ola, Uber and all. And second is accommodation services, Oyo, rooms and all. Third one is, the last one is what? Household services, urban class. I gave you example also. So we have completed levy section also. Then we came to section 8, composite and mixed supply, that is also we covered. And we also discussed about the disputed circular which is issued by the department, which is absolutely absurd and in violation of the GST Act, and it is completely ultra vires to the GST Act, but you can also take the benefit for the freight charges in your invoices. For the benefit, you just understand. And after that we have went to 10 is not handled by me, it will be handled by another speaker, composition levy. And 11 is an exemption section. Your exemption notifications, all your exemption notification, I will repeat, all your exemption notification will come under section 11. Clear? And 12 we already discussed, time of supply of goods. 13 we discussed, time of supply of services. So we are just breaking it now. And thank you so much for being a wonderful audience. I really enjoyed it and I learned a lot. And thank you so much. Hope to see you again. Thank you.
Good afternoon and welcome back to the post-lunch session. The topic for post-lunch session, returns under GST law and GST on job work. The session will be handled by CA Renuka Murli. May I now request Madam to occupy the dais. She is a practicing chartered accountant, presently working as a partner in a leading firm at Chennai since 2013. He holds an MPhil degree in commerce and holds a certificate of eligibility of lectureship by University Grants Commission. Started career as a lecturer in Valliammal College for Women and later served in the Ethiraj College for Women for 6 years. He joined the CA course in the year 2009 and completed within the given period of 4 years. She is a visiting faculty at the Ethiraj College for Women. She is a GST trainer to the Tamil Nadu State GST officers. She is a recognized GST trainer by the Institute of Chartered Accountants of India. She has delivered lectures in various forums in topics of VAT, service tax and GST. With this prelude, I present before you Renuka Murli ma'am. Please put your hands together to welcome the speaker. Over to ma'am.
Very good afternoon to all of you. The strength is very less. I can spend little energy on the way I speak. கண்டிப்பாக கேள்வியெல்லாம் கேட்க மாட்டேன், கிளாஸ் ரூம் மாதிரி, என்னால் தைரியமாக முன்னாடி வரும். In fact, I am here only to answer your questions. Okay. Very good afternoon once again. Thank you for the introduction, Mr. Rahman. I thank the Institute and the Southern India Regional Council for giving me an opportunity to speak to all of you on GST returns. Morning you had a session on registration, right? Okay, fine. This is a post-lunch session. Specifically, they have kept GST returns in the afternoon because we need more of your attention. For the simple reason being, this morning when as soon as I came to the dais, the people who are here must have seen that there was a change in the presentations that was made in right now, because as far as your GST practice is concerned, Unless and otherwise every day morning you go to CBIC website and check the notification, you cannot practice in GST for a simple reason that the number of notifications that come every day decides how we are going to work on that particular day. Right. Just out of curiosity, I am asking you these questions. How many of you took to indirect practice after the introduction of GST? Because the number keeps increasing. One here, out 2. Okay, out of 22, that's a 10%, right? So earlier, people were not talking about indirect taxes much because this introduction is required, because we have to understand how we are going to proceed for the entire 3 hours of overtime. Earlier, each state had its own consultants. For a VAT, there was a VAT consultants. Service tax, even if it is as an all India basis, you had a service tax consultant for each and every state. Excise, that's a separate issue by itself, applicable only to manufacturers. So, with the introduction of GST, with the common PAN number based registration and all those stuff which we have discussed in the first part of our sessions today, the importance of indirect taxes practice among professionals have seen a wide change. With the event of the social media, Facebook, WhatsApp, whatever it is coming up, everybody talks about GST practice. Everybody says I am a GST tax practitioner because the act itself is new. It has opened a new era of practice of indirect taxes for professionals. I would exactly use that word because earlier this much of importance was not given to indirect taxes practice. For a chartered accountant, if you say you are practicing, you talk of only of income tax. You talk of only your income tax appeals. You talk of only your representations in the tribunal. It was only a tax practice, always meant only income tax. But with the advent of GST, indirect taxes itself has become a separate practice by itself for chartered accountants as such. Right. Just to keep you and me remain awake for the rest of 3 hours. Let's do a small exercise and then we'll further proceed. In the upcoming slide, I have got a set of 11 instructions continuously. You have to listen to all the 11 instructions and follow it accordingly, okay? We'll go to the first instructions of the day. Please put your mobile on silent mode. Hope you would have already done that. Let me go to the second instruction. Please open the messages tab in your mobile phones. The third instruction, you can type your name on that. The fourth instruction, you have to type your organization name. If you are a sole proprietor, you can just say it is your own self, no issues. Then if you are a member of the Institute of Chartered Accountants of India, you have to type a yes, otherwise no. Do you practice in indirect taxes? You can type a yes or a no. Have you filed your GST's returns before? You can type an yes or a no as the case may be. Would you like to have a workshop on GST returns? Still you can type an yes or a no. Would you like to receive GST updates? Yes or a no. What software you use for GST? You can type an yes or a no. And the last instruction is very important. This is what GST is all about. The last instruction says, follow instructions number 1 only. That means you needn't have spent all your time for doing all these things, because I started telling you that you listen to all my instructions and then follow. So as soon as you see something on the screen, you immediately start doing it. It is not just to bully you, but just to make you understand that the later the better. Just to prove that to you, we just did this small exercise. So this is what is GST all about, because you have to keep updating yourself. You have to learn and unlearn. Hopefully, if both of us, the group and me, we are going to meet, say, for the month of June, in the month of July rather, I will not be telling you any of these things. I will not be discussing any of these things which we are going to discuss in the first 1.5 hours, because the GST is already changed. We have got a Sahaj return and a Suham return which is going to be implemented from 1st July. So whatever we are going to discuss today is only applicable up to 36 2019. That is the last return the last GSTR 1 return and the last GSTR 3B return, hopefully that you will be filing for June, will be only up to that. After that, from July, the new returns have already taken into place. It should have been implemented by April 1st, but because of some software issues, this is yet to be put on the portal. So July 1st we will be having again another session, because this session is not going to be an end. This session is going to be continuous in nature, because you and I as professionals have to keep getting ourselves updated with the latest trend. So what is the purpose of this session? I have been given 3-hour session to discuss GST returns under GST and job work under GST. These are the 2 topics which have been allotted to me. I would prefer to spend 2 hours on GST returns and 1 hour of job work, because job work we do not have much to deliberate. It has been already pre-decided things, but GST return I want to concentrate a little bit for a specific reason, being 30/6/2019 is the last date for filing your Form 9. Sir asked me whether I will be dealing with Form 9 today. We will not be doing Form 9, because the workshop on GST for 3 days tries to give you knowledge about what the whole of GST is all about. By tomorrow you will have something, a topic on ITC, how to valuation rules, time of supply, place of supply, refund, all those things you will be undergoing. So this is an area where we will be talking about the basics of GST. But being 36 an important date for us to file our Form 9, I will try to relate the monthly returns and where these things will find a Form 9, so that it will be much useful for you. That is going to be the way in which I am going to proceed with the topic for the day. This will tell you what this returns is all about. As far as returns are concerned, in the Act, you have Chapter 9, Section 37 to 48. The rules, Chapter 8, 59 to 84. The forms 3B, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. And the notifications do not end here. I have given the notifications of central tax. You should be knowing that there are 2 notifications. One is a rate notification, another one is an Act notification. Whatever I have given here is only the Act notification and not the rate notification. If you see 2017, 75 notifications, 2018, 79 notification, and 2019, 18 notifications as of today, and it continues. And when we use the term here 17, 18 and 19, though we are following the financial year of April to March every year, this is calendar wise. You have to remember that the notifications that are issued by the government is only calendar wise, because the number 1 starts in every January. Say for example 2017, 75 notifications, notification number 1 will start from 2018 January. So we should be able to, whenever you are trying to apply a financial year return, you should also be able to refer to the previous prior period to identify what are the notifications that have taken place in the previous year pertaining to the current financial year. Say for example, we have just entered the financial year 1920, right? For the month of April, we are yet to file the returns. So let me take the case of 2018-19. For the completed financial year of 2018-19, if you want to refer to a notification, you should refer to 2017, the last, the prior period. You have to just remember, because it starts from January, February, March will apply to 2017. The next periods will apply to 2018 and 19. Please remember that whenever you are going to refer a notification, just remember this point. So with these number of notifications in just 2 years, I do not know, in a matter of 3 years or 5 years of GST, like central excise, we will be depending only on notifications. Neither we will remember, neither the officers remember, neither the clients will remember. This is going to be the situation of GST, hopefully. I hope that this does not continue. Okay. Now. Okay. My slides will be overlapping, and the sheets that you have in the book, you don't have to refer at all, because this has been a regular monthly meeting that is being conducted by the institute. The data that is available in the book will be prior dated. As I told you, whenever we come for a lecture here, it will be updated. I'll just leave the PowerPoint to the institute. You can get a copy of it, or at the end of the session I have my mail ID. So you can just mail to me, I will forward the latest presentations to you. Okay, whichever is convenient you can do. Screen picture. Okay, let him fix the screen and let us continue our discussions. My area of discussion today is going to be only on monthly returns, okay. If you go through the Act, there are so many returns that are given. We will be concentrating on two major returns. One is GSTR1 and GSTR3. All of you by this time know that GSTR1 is a monthly return which is to be filed on 10th of the succeeding month. GSTR3 is a summary return which you file on 20th of the succeeding month. See, the story was other way around. Earlier, when GST was introduced, we used to file 3B returns. 3B returns is nothing but a summary return where you don't give invoice-wise details. You just declare that for a particular month I have got this much of taxable supplies on which I am paying tax. Then you will dissect that and say, this is my interstate sale, this is my intrastate sale, this is my export, like that you used to dissect and say as far as one is concerned. Later a consensus was decided and the government came with telling that 10th is the last day for filing your GSTR1 and 20th is the last day for filing your 3B. That means GSTR1 you will first report what are the transactions that have taken place during the month. At that time you never pay the tax. GSTR3B you file on 20th saying that for the set of transactions which I have reported earlier in GSTR1, this will be the total amount that I am going to report in GSTR3B. This difference you should first understand. See, when you do Form 9, why I am specifically telling this, because when you do Form 9, the first thing that you should reconcile between 3B and GSTR1. Because Form 9 is where you are going to report what are the taxable turnover which the assessee has filed in his income tax returns, because for the year 2017-18, he would have already filed his income tax returns, whether it is a tax audit case or a non-tax audit case, the returns would have been already filed. You are going to match, even this is going to be out of whatever I am going to talk, please remember. Earlier Form 9, it was a consolidated annual return where you have to just assemble whatever you had reported in your GSTR1, 3B and present it to the department online. But after the revision took place, earlier the word used was details of outward supplies as per returns submitted during the year. This particular sentence was changed into details of outward supplies made during the year. This sentence makes a huge difference. Earlier when it said as per returns made during the year, you did not have any option of giving additional information other than whatever you had earlier reported in the returns. But when you use the term made during the year, it means as per books. This is the best part of revised Form 9. So many representations were made to say, what is the big point in adding the 12 months data and giving it as a final return? It doesn't help us, isn't it? Because when you finalize your income tax returns only, you get to know the actual turnover. Because there are so many MSME assessees who do not prepare books of accounts every day. Only when it comes to the income tax, they give you a set of kacha bills on the which you assess, you apply your mind, your knowledge and you prepare books of accounts through someone, and then on the basis of the books of accounts given, you finally arrive at the figures. So, for this reason, earlier Form 9 was, I would say, was not of much use, but the revised Form 9 that you are going to submit now is definitely useful because it says details of supplies made during the year. Wherever there was a term returns during the year, it has been changed to made during the year. So it is required that you have to compare between the returns and books and give that because of this difference, I have got extra liability which I am paying now. There is one application, if you see Form 9, compute tax liabilities. In that you can compute the tax liability and pay it not through Form 3B but through DRC. That is the difference. Any liability which is arising out of filing your Form 9 can be paid through a DR challan, that is demand refund challan. That's what the term that we use. You can pay that through DRC challan. Okay. Right, this is again Form 9. We will go back to the returns as such. Now the slide is available. Monthly return. The regular dealer with a turnover of more than 1.5 crores has to file a monthly return. An input service distributor has to file a monthly return. A non-resident taxable person has to file a monthly return. A tax deductor and a tax collector have to file the monthly return. In this morning session, you would have understood the terms of all these people. Who is a regular dealer, who is an input service distributor, who is a non-resident taxable person, who is a tax deductor and a tax collector would have been dealt by the other persons in detail. So as and when we do the returns for them, we'll just go into recollecting whatever you have learnt in the earlier session. Then quarterly return. Regular dealer with a turnover of less than 1.5 crores and a compounding dealer will file a quarterly return. Annual return, regular dealer, compounding dealer and e-commerce operator. For the regular dealer, the form is Form 9. For the compounding dealer, it is Form 9A. For an e-commerce operator, it is Form 9B. These are the three forms. If for any one of these three persons, if the turnover is going to exceed 2 crores in the financial year, then you have to give a Form 9C which comes under GST audit. So in the screen, if you see, if you are when you use the GST and network website, if you see, annual return, the date will be shown as 36/2019 only for Form 9. So that also is the date for Form 9C. There are no two different dates. Along with Form 9C, you have to submit these annual return forms. If the turnover is more than 2 crores, if the turnover is less than 2 crores, it is sufficient. You can file a Form 9, 9A or 9B as the case may. Final return. What is the difference between annual return and final return? Final return is a return that you give only at the closure of your business. So you don't never use the term final return. Unless the assessee is going to close down the business, he does not have any liability of GST, return filing or payment further. He will have to file a return called final return only at the time of closure of business. Right. On closing business. This is an important point which I wanted to tell separately. If you see here on the screen, quarterly return says regular dealer with a turnover of greater than 1.5 crores, compounding dealer, just compounding dealer. For compounding dealer, you will file a return number called GSTR4. We are going to see it at the later of the day. The regular dealer whose turnover is less than 1.5 crores, please beat me, will pay the taxes month-wise and file the return quarterly. That is the difference. Form 3B, because Form 3B is a form through which you can pay the tax. There is no other way. So a regular dealer whose turnover is less than 1.5 crores will pay the taxes monthly through Form 3B, but file the detailed return only every quarter. That is the difference. That is why you have just categorized under quarterly return. For compounding dealer, it is GSTR4 and 3B only every quarter. He can find out the tax value and pay it only every quarter. But for regular dealer, this is the case. Most of us may make the mistake because if the regular dealer, the turnover is only less than 1.5 crores, we'll assume that it is a quarterly return. Why can't we pay taxes? Please try to understand the earlier regime, the date of payment was different from the date of return. Right? But let it be service tax, let it be excise, let it be VAT. Whatever indirect taxes earlier, the date of payment was different from the due date of payment was different from the due date of filing the returns. Now it is only one. When we mean the due date, it means both for payment of taxes and for filing the returns, which you have got to remember. Right. These are the set of returns earlier in the Act. Because when you start a basic session on a workshop on GST, you should always know what was there, what is there, what will be there. What was there is what we are going to see now. A summary return Form 3B, it is still there, no changes in that. A return of outward supplies, GSTR1 and GSTR1A, there is no GSTR1A, we are filing only GSTR1. But indirectly there is 1A present in GSTR1, I will tell you when we go to the screen. Next one, return of inward supplies, GSTR2 and GSTR2A. We do not know what is GSTR2. It expired even before it came into being, but we know what is GSTR2A and the importance of it right now. And you will know its huge importance when you file your Form 9. Because whenever, every month, the tendency is we always, whenever you purchase something, whenever you purchase a service, whenever you purchase a good, whenever you purchase a capital good, why I am specifically using these terms, you will come to know. When you do any of these things, immediately the input available on the purchase of any of these items, let it be on the goods let it be on services or let it be on capital goods, you try to immediately take it because the act says you can immediately consume the input tax. But we don't spend time to compare whether the input that you have taken in your 3B, whether is it is available in the other party's file which you have not seen, where 2A is going to play a major role. Regular dealer GSTR 3, it has not seen the light at all, we don't have GSTR 3. GSTR 5 is there, it is applicable to non-resident taxable persons. OIDAR provider is still there, 5A. OIDAR is nothing but online information data access retrievals. That is the services, because all those e-commerce services which cannot be defined as an e-commerce will come under here. Best example is Kindle, where you download the data and use it. Another example is the online classes you undertake from foreign universities. Earlier they used to claim that we do not have a place of business in India, right? We do not have a permanent establishment in India. So claiming that as a reason, these OIDAR service providers were escaping from the tax ambit of the country. To curb that, this OIDAR services were strictly brought under the ambit of earlier service taxes they introduced before the GST. Automatically it was completely taken from GST service tax to GST as such. So they need to file a separate return, because for most of them to be B2C transactions. B2B is not possible because individually you download something from the net. It is information of books, Netflix, another example, Amazon Prime Video. These are all examples of OIDAR, online information data access retrieval, whereby through an online portal you are able to render some services to the final persons. Because of the beautiful nature of this OIDAR, it does not come under e-commerce transactions, because when we use the term e-commerce, it is between two business people, B2B. You can never catch B2C as here. That is why OIDAR has been separately brought out as a topic as such. Then tax deductor, GSTR 7, all of you know that 1st October it came into effect, 1st October 2018, where central government, state government, local authority, public sector unit, society registered. The last two were notified on 1st October 2019, where they will be filing a monthly tax returns of GSTR 7, whereby you have to deduct tax at 1%, 0.5% CGST and 0.5% SGST, and give the effect. For the benefit of the people who are here, when a GSTR 7 is filed by the, if I compare with the income tax TDS, you should be able to relish this particular point. In income tax, what do we normally do? Every month we deduct tax, and every quarter we file the return, right? Every quarter when you file the return, automatically the value goes and sits in the assessee's 26 AS, which we are all familiar with. So the problem will be, if at all the credit of TDS does not appear in 26 AS, who is to be held liable? The notice comes only to the assessee, not to the deductor. The assessee has to prove that he has got a form 16 or any data, and he has to prove to the income tax authority telling that my tax has been properly deducted, but the deductor has not given effect because the deductor would not have filed the TDS returns for the purpose of income tax. That particular anomaly is completely taken care here, because here what you have to do, when the deductor files a GST or TDS, and when you know that your TDS is going to be deducted, you can view from your portal and accept or reject the TDS. Only when you accept, the TDS credit gets transferred to your electronic cash ledger. If you reject, it goes back to the deductor. That is the beauty of GST TDS. Earlier, I do not know, the persons who have been already practicing, this indirect tax TDS is there for quite some time. It has become famous only because of GST. Earlier in VAT, you used to have a VAT TDS. When you do under works contract, a VAT TDS was mandatory, but nobody used to follow that because it was due to unawareness. We used to tell our clients who practice, who do works contract, mainly to tell them that no, whenever we ask them, sir, TDS file panting, file panting, they would have meant only income tax TDS, not the GST TDS. The same anomaly will come here. Both are two different things. And the limit, if the transaction is, if an individual transaction is more than 2,50,000 rupees, or a party-wise transaction exceeds 2,50,000 rupees, a 1% GST TDS has to be deducted. So this is regarding GSTR 7. GSTR 8 is for the e-commerce operators. see, the problem here is it might be overlapping, but unless and otherwise I tell this point, we will not be able to understand this GSTR 8. Not all e-commerce operators have to deduct tax. A e-commerce operator who is receiving the sale value on behalf of the customer can only has to deduct tax, not anybody. That is what, there is a difference between that. There might be a person who is maintaining a platform, who is bringing the buyer and seller together. He will be receiving commission. He will raise a bill, get a commission. Whereas there are so many websites where you have to pay the money to you. You do not know. You will go to a payment gateway and pay the money. You do not know whether the payment goes to your seller or whether the payment goes to your e-commerce operator. If the payment goes to the e-commerce operator and then given to the seller, then this particular GSTR 8 will come. But if the e-commerce operator is only collecting commission, he does not take responsibility of collecting the sale value, GSTR 8 need not be filed. Also, for all common understanding, e-commerce operator will be the person who is responsible to collect the sale value also along with this commission. GSTR 999B, just now I have told you. Final return, GSTR 10, it is only when you close the business. And inward supplies of UIN persons. Normally these embassies will play a major role here. They have to file a Form 11. They do not sell anything as such, but any expenditure, any inputs they can use by filing GSTR 11. Okay. These are the dates. I am just skipping this slide because the dates keep changing. Either it is delayed or some postponement is always given. Even this month, because of the portal issue, it is postponed. Form 3B filing is postponed to 23rd. So let us just skip this slide, which is not required. Okay. I am on purpose, just the first 2 points I'll explain. How can you match ITC? Now, you can see in all these slides, there is one A here that only plays a major role. As far as GST is concerned, A does not stand for Apple, it is auto-populated or amendment. Whenever you see the term A, it is always auto-populated or amendment. The second A that you see here is always amendment. Because you have been filing your GST returns for quite some time, you could have come across something called a table 6A and 9A, which I will be showing here. That is where you are permitted to make some amendments in the invoice. Because revised return is not permitted in GST, but the return permits you to file an amendment in your existing return. Okay. This is how you do the matching. I'll just go to the slide and then explain to you. You upload your form GSTR1. Once you upload your form GSTR1, whatever sales that you have made to a particular person goes and sits in 2A of the other party. If you are a compounding dealer who are filing this, it will go and sit in GSTR 4A. Similarly, for return by ISD, you can see your credit in GSTR 6A. All these are live. This GSTR 2A, GSTR 4A, GSTR 6A are very much alive, which you can refer it in the portal. Now this is what happens and why I specifically wanted to tell this is. GSTR form 2A has got 3 parts. Part A, Part B and Part C. Part A auto-populated input credit, which you get it from your GSTR1 regular return. The Act says if the input that you are claiming in 3B is not present in GSTR2A, you cannot take it. It's a very big issue, a debatable issue, a legal issue, because I have bought something. Let us assume I bought this mobile phone, say from Purvika Mobile. I am a chartered accountant business. I am eligible to take input credit of this mobile phone, right? If I give my GST number, earlier it was not so. Because now any input that is used for furtherance of business, the term would have been explained in the morning session. Any input that is used for furtherance of business can be claimed. So my mobile phone is for my furtherance of my business. I meet my clients, I talk to my clients only through my mobile phone. So if I buy a mobile phone in my company's name, which has a GSTN number, I can take credit. So I go to Purvika Mobile, I buy this mobile, I give my number, I make the payment. I get a bill for that. I come home, in the monthly return I take input tax claim of that. Because I have a bill and I have a product also, because it is on the base of goods delivered. Okay, goods must reach the recipient. Assuming that the guy in the shop has lost the bill. Will they be able to report? They will not be report. 2A will not match because unless and otherwise Purvika reports this particular sale in their GSTR 2A, I will not be able to get the credit. This is a very big problem which we will be facing in Form 9. Because you have to have a proof because the Act says it has to pass through only 2A. So if 2A does not come, you have to better inform the dealer to upload the data in GSTR 1. And unfortunately this is a class, we are doing a post-mortem. The last day for, no, I would not do that. March month return if you have not filed up to April 23rd, in the March month return of 2018-19, I am repeating, in the March month of 2018-19, you can report all the missed down transactions of 2017-18. That is the benefit. Earlier, normally the date is 30th September of the succeeding year. The 30th September was first postponed to 31st December. Now they have given the final postponement to 31st March 2019. So if you have missed any transactions, let it be an input. If you have failed to claim an input, that also can be claimed. If you have failed to report a particular tax invoice, you can report in GSTR 1 and GSTR 3B for the month of March pertaining to the first financial year of GST 2017 and 18. If you have filed your return for the month of March, then you don't have a choice. Otherwise, if you have not done so, it is okay if you pay the extra 50 rupees because per day the fine is only 50 rupees. It is okay to pay the extra 50 rupees and include all the inputs and tax liabilities as the case may be. Part C, auto-populated TDS credit. As I told you, GSTR 7 TDS return and 8 TCS return. Only when you accept, you get the credit in the electronic cash ledger. If you do not accept, you will not get it. Right. So this Form 2 to be prepared. No, let us not talk about the last part of this particular because Form 2 is not. Yes, sir.
Not a notification.
Yes, sir.
To say that this we can claim it even though it doesn't match. As you said.
Yes, that is.
That is the notification.
I am coming to that point. It is not a notification, sir. A circular clarification has been issued. Notification was there, a circular saying that if the recipient has got documentary evidence to show that the goods have been received, to show that goods have been, not the bill, but the goods have been actually received. E-way bill will be another proof. So if the documents are sufficient enough and the goods are available, definitely we can take claim of that. That is a circular that is being given, it does not form a part of the act or the notification. Yes, now we are talking about 2A. There is one input which does not come in 2A. Or let me put it this way, your 2A input will be only on the basis of GSTR 1 filed by from somebody. If GSTR 1 returns is not filed, such inputs will not come in GSTR 2A. One example is import of goods. When you import goods, IGST you pay to the customs department, right? This IGST will not form a part of your 2A because so customs department is not filing GSTR 1. Only if they file, because all these 2A credits will come through only GSTR 1. So this is one fine example of inputs which you are eligible but does not find a place in GSTR 2A. Okay, let us proceed to the next step. Fine. So what exactly happens is, the supplier will upload the outward supplies in form GSTR 1. Once he uploads, immediately it gets auto-populated in form GSTR 2A. So the better every month, when you prepare form 3B, it is better that you open your portal, download GSTR 2A, find out what is eligible and take it. If it is not eligible or the other person has not uploaded your regular B2B transaction, then you can inform him that you have not received the credit and still ask him to do that. As I told you, but one out of sharing knowledge I am telling, the regular returns also are going to behave like the TDS return here in afterwards from July 1st. You have the upload, lock and pay system which is going to come. Like how TDS you upload, the other party accepts this, then you pay the TDS deductions, same way. You upload the return, the other party has to accept the invoice, then you make the payment. So this system is going to take care of this clarification that is asked. Whether if only I accept, you are liable to pay the tax. When I accept, I am eligible to take the input credit. This is going to be from 1st July as such. Right now, this is the system that we are following. So now we'll go to summary return. For the benefit, I'm not shown the form as such, but I have just tried to capture certain screenshots of the exact network which we are going to operate every month. So this is the dashboard, that is the term that is commonly used. Details of outward supplies of goods or services, auto drafted details for view only. You can say, as I told you, every month you can go to this option and download the GSTR 2A and verify whether the inputs are sufficiently available to you. Now we will concentrate on monthly returns 3B. These are the questions that are being asked in the 3B. Please remember, it depends on the yes or no that you are going to give here, the tab gets activated. Otherwise, the tab does not get activated at all. That is very, very important. Earlier, by this time, we should have been used to that. But anyway, for the benefit of the audience, I am repeating this. So, it depends on the query. Say, if you say for example, have you received any nil rated, exempt or non-GST supplies during the tax period? Table number 5. Only if you give an yes, you can do some, put some data in table 5. If you give a no, table 5 will not be activated at all. So you should be very careful in giving answers and yes or no as far as this particular screen is concerned. Okay. This is how table 3.9 looks into. The details of outward and inward supplies liable to reverse charge. We'll just go one by one because it's very important. Earlier these tabs were uneditable, but immediately they changed to editable. So your tax value need not match with the tax value need not match with the taxable value of the goods, because this will consist of all the goods, 5% goods, 12% goods, 18% goods and 28% goods, and you are reporting only the summary of it. 3.1a, outward taxable supplies other than 0 rated, nil rated and exempted. Remember, you will report all the outward taxable supplies which are liable to be under GST. It will be an intra-state, it will be an interstate, anything of the, it can be a B2B, it can be a B2C, anything. The entire total outward supplies will be reported in point number A. Point number B, outward taxable supplies. This export itself, I think, will form a part of the discussion, where exports with LUT, exports without LUT, all those stuff will be discussed here. But anyway, whether it is under a letter of undertaking or without a letter of undertaking, export is an export. Remember, the term 0 rated includes an SEZ transaction. So all 0 rated supplies, both exports and SEZ transactions, will form a part of point number B. C, other outward supplies, all nil rated and exempted supplies will form a part here. D. We'll just take 2 more minutes time in this particular line. Inward supplies liable to reverse charge. See, what exactly happens is, all of you must be familiar with this reverse charge mechanism, right? There is section 9.3 and 9.4. 9.3 was alive up to October 14th of 2018. After that, it was not there. 9.4 was there from 1st of July to October, where you had to pay under reverse charge if your total expenses for a day exceeded to 5,000 rupees. That was not there. After hue and cry, they dropped it. But 9.3 reverse charge is there from 1st July, it continues. Example, legal fees. Example, GTA. These are freight. GTA, by mean in short terms, we mean freight. Let us not go into the legality of discussing what is a GTA. Generally, GTA, freight for return purposes. So, for freight and advocate fees, there is a reverse charge applicable. So, if a person operating a freight, just try to understand this particular point. If a person operates a freight, in his invoice, he will say, liable to be paid under RCM, and he will not collect the tax from me, right? So in GSTR 1, in table 4, we will see, is reverse charge applicable, he will put an yes. He will not put a no. Because when he puts an yes in GSTR 1, that means the recipient has to pay the GST, not the supplier. Such things will come here. Because under RCM, you are going to pay and claim it. Reverse charge, whatever money that you pay, you can claim. So, inward supplies liable to reverse charge will be for you being a recipient, whatever you are going to report here, on which RCM is payable by you. Supposing you have paid 1 lakh of rupees of freight, this 1 lakh will come in GSTR 2A telling that it is under RCM, because he will file GSTR1, it will automatically come there. That 1 lakh will report on total taxable value and the corresponding tax rates will mention. Non-GST outward supply, nobody reports. It's a fact. But you will you will find this as an issue when you file your Form 9. I'll come to that later. Non-GST supply here is anything that for which GST is not attracted. Electricity bill, salaries, petrol and alcohol. All these are not under GST. So it can be reported there. See, if you see here, the taxable value column is not highlighted at all because it is not covered under GST.
Excuse me,
Yes, sir.
is it the term which is accepted under the GST, non-GST, like the terminology?
These are the 4 terms used, sir. Nil rated, exempted, non-GST. And nowhere in the Act it is defined, it is only interpreted. It is only interpreted because when we say petrol does not come under the purview of GST, it is a vatable product. When the Finance Minister, Mr. Arun Jaitley, he on a public forum in West TV speaking about the GST, he said petrol is a GST product but kept at abeyance for future. He did not use the term non-GST. Just for it is only interpretation. But for on common understanding, these are the items on which you don't charge GST. So we'll take it as a non-GST item. Just an interpretation only. Okay. Your 3.2 interstate supplies. Here you will report only supplies made to unregistered persons, supplies made to composition taxable persons, supplies made to UIN holders. Supplies made to unregistered person is already there. You have to just report by here B to C is place of supply, total taxable value, amount of integrated tax. You can just report only the total. You don't have to report anything else. Supplies made to composition taxable persons, the place of supply, you have to mention the state and the taxable value. The same thing holds good for supplies made. We will spend some time in this tab 4 because it is something related to all of you understand Tamil, isn't it? Okay, right. Because it is better, when I tell this, it is better to tell this in Tamil. See, there is one saying between தத்துவத்துக்கும் மகாதத்துவக்கும் என்ன டிஃபரன்ஸ் அப்படின்னு ஒருத்தர் கேட்டாங்களாம். சொன்னாராம் தத்துவங்கிறது கேட்கறவங்களுக்கு புரியாது, மகா தத்துவங்கிறது சொல்றவங்களுக்கே புரியாது அப்படின்னு ஃபன்னியாக சொல்லுவாங்க. See, the ITC is something like this because when you just go and work on that, you'll find out what are the amount of complications that you're going to come across, because that is why we as chartered accountants professionals, you have to apply our extreme knowledge and application, because not only a notification you have to refer to the circular, you have to refer to the relevant details to cross this, mainly this B1 as per rule 42 and 43. I do not know how many of you have read that A to M conditions for calculating this ITC reversal. That's really amazing. Anyway, get back to this eligible ITC returns. Okay. Now, as I told you, first point, if you see, it is import of goods. This import of goods ITC, and remember here you are reporting not the inputs, you are reporting only the input tax value. Inputs, there is no place. Earlier, if GSTR2 had been there, you would have reported the inputs. GSTR2 is not there. So only the tax portion you have to report here. Import of goods, you have to report in that integrated tax column. Import of services, same way. Third one, inward supplies liable to reverse charge other than 1 and 2 will be reported here. Fourth one, inward supplies from ISD, input service distributor. All other ISD, all other ITC under 5. ITC reversed as per rule 42 and 43 are a set of rules. So you just understand this logic, that is enough to do a reversal. Simple thing is, what does the government want? The government wants tax revenue. So if any transaction is resulting in a tax revenue, you are eligible to take input on that. If any transaction you are not eligible to take a tax revenue, you cannot take input on it. Very simple understanding. Instead of going to all the rules, just the logic. For resultant supply results in some revenue for the government, you claim tax. If you do not, you cannot claim. One example I can give. Take the example of manufacture of kungumam. Kungumam is an exempted product. For manufacturing kungumam, you need turmeric, you need oil and a few other ingredients. Turmeric is liable to tax. Oil is liable to tax. Other products are also liable to tax. So through this, if the person who is selling turmeric would have uploaded his GSTR1. So the huge amount of input tax credit will be in your GSTR 2A. For him, it is a taxable sale. He has reported that in his GSTR 1, you are getting an input. But remember, what is available in GSTR 2A is not eligible. You have to make a call to decide what is eligible and what is not eligible. Whatever is available, you cannot take. So, being a person who is dealing in Kumkumam, when I see my 2A, I will reverse the entire input tax available to me because I am not eligible for that. I cannot take because my resultant supply is an exempted supply. For Kumkumam, I don't charge any tax or collect any tax. So I cannot claim input on that. So you have to be very cautious in deciding. Just because it is available in 2A, you cannot take it. Out of what is available in 2A, you have to take what is eligibility. Others. Then ineligible ITC as per section 17.5, that 5 things, blocked credits, motor vehicles, then what else, your food and beverage services, then your outdoor catering, then beauty parlors, all those things will come under section 17.5. Then other ineligible credit will form a part of 2 here. There is one issue here. If you report your ineligible credit under D as per section 17.5, your electronic credit ledger will not reduce. Only if you reverse it, it reduces. It's a technical catch in the software as such. So if you open the electronic credit ledger, download and see, you might have an ineligible credit, say from a say food and beverage, for example. If it is there, only if you reverse, your electronic credit ledger comes down with that value. If you do not reverse, it will be appearing in credit ledger, still the same will be appearing under section 17.5. It is a technical anomaly. So this is regarding ITC in detail we have seen. Now coming to Form 9. I am trying to just give you details to Form 9 simultaneously because in Form 9 you are not going to do a reconciliation on this basis because in Form 9 you have to report your inputs under 3 heads. Input on goods, input on services, input on capital goods. This, so you have to revisit your books of accounts. Whatever inputs that you have taken, you have to classify them under 3 heads of input on goods, input on services, input on capital goods. Arrive at the figure, tally that with this particular column. This is what is going to be the very tough task for you when you prepare your Form 9 for the year 1780. Okay, right. Table 5, exempt, nil and non-GST inward supplies. From a supplier under composition scheme, exempt, nil rated, non-GST supply, you just report it here. Table 5.1, interest and late fee. You are already familiar with this particular section where the system automatically calculates your late fee. It does not calculate the interest, but it automatically calculates your late fee whenever for filing returns. Payment of tax. The second column is more important. Paid through ITC. Earlier, you can use your IGST, CGST, SGST. ICS is the order. Now they have made it mandatory that unless or otherwise you exhaust the entire IGST, you cannot use the input or CGST input and SGST. But this is for a very simple reason that the states are losing the revenue because of that. Earlier you can set off CGST with CGST, SGST with SGST, and you can use IGST. But now because there is some problem with the revenue, the government has clearly said exhaust your IGST input, then take CGST and then take SGST as the case may be.
Can it be effect from 9? This change?
I think it is January, sir. I think it is
This year?
this year. Not this year. This year we have started. Earlier year, 1890. The problem with indirect tax notifications is that the effective date starts immediately at 12 o'clock night. Like in income tax you get the time. But now they have started giving notifications with the word with effect from. If that with effect from is not there in notification, it immediately is applicable. Then one finer example I can tell you is regarding this rate notifications. Rate notifications come into effect immediately. All of you must be familiar with tally. Supposing you have created a sales ledger at 12%, which you have been using for quite some time, and suddenly the 12% you get a rate notification and changes it to 5%. The immediate involuntary act of an accountant will be go to the ledger, alter the name at sales at 5%. See the impact it is creating because you cannot compare for the first 6 months it will be at 12%. Next 6 months it will be at 5%. If you have altered the data that way, the entire work is gone. So you should have that intention to advise your accountant or the person to say create another ledger at sales at 5%. If all these issues are done, you will have a problem while preparing your Form 9. Okay. Now this is regarding tab 6. You can see here we have just come to the end of Form 3B. Offset liability is there. You go to the offset liability and take whatever the figures, then you make the final payment of taxes after the credits and all those stuff. Right. This is regarding 3B. This is 3B is a summary return on which, remember it is only with 3B you can make the payment. Without 3B you cannot make the payment. There are persons, assessees, who file only 3B. GSTR 1 they might not file because for the reasons obvious. 3B as such you have regularly filed and paid your taxes. I came to know, I am not sure about it. For bill trading and other illegal purposes they might not file a GSTR 1 as the case may be. Anyway, like we used to always say when GSTR was introduced, the media and everybody said chartered accountants will not have work anymore because everything software will take care. Every day you can upload the invoice in the system will file the return, the system will give you the refund, the system will do that, the system will do this. So chartered accountants with indirect practices will not have any work. Remember the paradox is as simple as always difficult. Whenever they say it is simple, it will never be simple because it will be difficult. Our work so far is not yet started. We have not still started working for GST. You wait and see the minute you file Form 9, the amount of notices and scrutiny notices that you are going to get from the department, that will really put us into toll and we will be burning our midnight oil to answer all these queries, and that is where the real work of chartered accountants is going to start. We are now just filing returns. We are not doing anything else, we are just filing returns. Wait for Form 9 to be uploaded and just wait and watch. Next is GSTR 1. We'll just like how we covered the GSTR 3B, we'll go to GSTR 1 also. GSTR 1, these are the tabs here. 4A, 4B, 4C, 6B, 6C. 5A, there is table 4, table 5, table 9, table 6, table 9E. We'll just go one by one all these tabs. 4A, 4B, 4C, 6B, 6C is B2B invoices, meaning to say you have to just upload all the B2B invoices line item. If you see here, there is one thing here, import EWB data. That is the electronic waybill data. That is going to really, this will be useful for your Form 9. The electronic e-waybill data will tell you. See, when you upload an e-waybill, automatically the invoice gets uploaded in GSTR 1 also. So this data will help you to match the B2B invoices as the case may be. We will just go one by one. Okay, this is 7, B2C, table 8 for nil rated supply. 11A, 11 is tax liability. 11B again adjustment, HSNO summary, documents will spend. We are just going to see all these transactions one by one. So table 4A, 4B, 4C, 6B and 6C. B2B invoices. So all of you must be familiar, if the number of invoices are 500 or more, you cannot do it online. You have to use the offline utility, upload the data, prepare a you upload, you have the Excel, upload the Excel, it will validate, then you prepare, then a JSON will be created. That JSON you upload, wait for 15 minutes, it will throw errors, download the error report, convert into Excel, do the correction, then convert into JSON. See the amount of time that it is taking to upload each and every return. So this is what it has been happening anyway. Whatever the system says only we can do. So this is how you will be uploading your returns. But as such, whether it is a JSON file or whether it is an online file, these are the contents of this particular table 4. You see here, deemed exports, SEZ supplies with payment, without payment. For specific reasons, SEZ, though it is a 0 rated, it happens within the state, that is why the specific tabs are available. You give the receiver's GSTIN and unique identification number. The receiver name will automatically will be auto-populated, that is why it is not highlighted. You give the invoice number, you give the invoice date, point of supply, total invoice value. Supply attracts reverse charge. This is what I told you. When you click on this, supply attracts reverse charge, that means You don't have to pay tax, the other party has to pay tax. So whenever you are for advocates, they don't even have to obtain a GST number, but other people like GTs, they have to click this column to say supply is attracting reverse charge, the other person is going to pay, right? This is regarding and deemed exports also will form a part here. Deemed export is nothing but you don't export directly, you sell to an exporter and it is done through, so we call it a sale to exporters. In VAT regime we used to call the term as sale to exporters, because for that also your refund is eligible. Refund is eligible on deemed exports, so you have to be very careful in feeding the data. Okay, and this data can be amended in table 9A and 6A. If we have made an error here, your invoice number is wrong, your invoice value is wrong, your tax value is wrong, name is wrong, anything can be amended. This whatever mistake. So remember, the data must be available in table 4. Then you can amend. The data is not available in table 4, you have to add only, you cannot amend. Adding can be done only through table 4. Amendment only can be done in table 9 or 6 as the case may be. Just remember that point. So for the, but as I was telling you, if you have a missed out invoice, say for example, August 2017, 31/3/9 is the last day, you have to add that particular invoice. You have to add it only in table 4. You cannot amend it because you have not uploaded the return at all, invoice at all. So how can you amend it? You can only add in add all the data in table 4, 4B as a case. 5A and 5B is B2C large invoices. Large invoices mean more than 2 lakhs. 2 lakhs is the limit. When you do a particular transaction for a customer where the value is more than 2 lakhs, you call them as B2C large transactions. POS, invoice number, invoice data, supply type, total invoice value, taxable value, you will just report it here. What difference does it make whether it is B2B, B2C or B2C large? It is for identifying the other party. The system, the department will be watching to identify who is that who is purchasing, huge sums of money, who does not report his GST turnover. They will be able to identify such parties. That is the purpose. Okay. Then 9B, credit notes and debit notes received from registered persons. You have the columns here if you see, uploaded by taxpayer, uploaded by receiver, modified by receiver, rejected by receiver. All those things do not work. Uploaded by taxpayer. Please provide original invoice number, receiver's GST and debit code credit note number. This is slightly changed because now after the notification, you can have only one credit note for multiple invoices. Earlier, for each invoice you had to give a credit note, but now you can give a consolidated credit note or a debit note for multiple invoices. Accordingly, this particular screenshot is slightly changed now. Here you can give the number of invoices. The original invoice number is there. Now it has become original invoice numbers. Line items you can add for the purpose of reporting your credit notes and debit notes. 9B, credit notes and debit notes received from unregistered persons. You will report here B2CL large, debit note number, the date, original invoice number, note type. Reasons for issuing the note can be reported. The reasons can be so many things. It need not necessarily be a purchase return. It can be for tax difference. It can be for giving a discount. Now you know all the business practices, you can use them to give a credit note or debit note. The purpose is mentioned here because it has to match with the stock. For stock valuation purposes, you have to match these details. 6A, export invoices. Invoice number. I just want to mention one important point here for people who deal with clients who do these exports without LUT. When you do an export without LUT, that means you don't give a letter of undertaking, you have to pay IGST. There is no doubt on that. This IGST that you pay, either directly or using your input tax credit as the case may be, will be directly refunded by the customs department without any application. That is the rule. You don't have to apply for a refund if you do an export without LUT. Whatever IGST tax that you collect and pay will be directly refunded by customs. So what happens is the customs department have access to this particular table 6A. The data that you upload here will be matched with the shipping bill in your IceGate website. So if any mistake that you make here, you can never get your refund. There will be months together, you can always see it. there is something called a track refund status in the GST and website. If you go there and track, it will tell you there are some mistakes. So you have to be very careful in filling the invoice number, the invoice date. See, what happens is port code is not mandatory here. So obviously whatever is not mandatory we will not fill. But this port code is only matched by the customs department. So you have to be very specific as to what port code you give. Shipping bill number or bill of export number, shipping bill date, total invoice value. Here you mention with payment of tax or without payment of tax. With payment of tax you would not have obtained an LUT. Without payment of tax would have taken an LUT. That is why this particular table is very important. That too when you do an export without with an LUT where you don't pay any GST. Then amended B2B invoices, B2C invoices, export invoices. See here, as I told you, financial year invoice, only when you give the invoice number which you have already entered in the website, you can have access. Once you enter an invoice number, then it will automatically say there are no notes to be displayed. That means you have not uploaded any note or uploaded any invoices. If you have uploaded the invoice, the screen will ask you to give all the details. B2C, POS and taxable value. Remember, credit notes and debit notes cannot be given to B2CS transaction. Either you have to add and show or you have to deduct and show as the case may be. 8A, 8B, 8C and 8D, nil rated supplies. Just go through these columns. Intrastate supplies to registered persons. Intrastate supply to unregistered persons. Interstate supplies to registered persons. Interstate supplies to unregistered persons. All these will be as per column. You can, if you see there are three columns. There is a nil rated column, there is an exempted column, there is a non-GST column. You cannot much differentiate between a nil rated and exempted. Both are, you cannot specifically, you have to use your mind to decide what is nil rated and exempted. Normally, on normal understanding, nil is equal to exempt, right? So you can just go by that particular principle. Right. 11A1 and 11A2, this is tax liability for advances. All of us know that earlier when GST was introduced, advance received was to be paid, GST was to be paid both on advance received on goods and advance received on services. In the month of November, they withdrew that advance received need not, GST need not be paid on advance received on goods. Advance received on services you have to pay. That liability you will report it here. This is very important because your outward supplies, 3B, we report the total outward supplies, isn't it? Let me just give an example. For the year 17-18, your total outward supplies in 3B shows 10,50,000 rupees. That's for example. Out of that, 50,000 is the taxable value of advance received. How do we deal that in the books of accounts? In our books of accounts, in your profit and loss account, this 10 lakhs only will be there. The 50,000 rupees will go and sit in the current liabilities because it is only advance received for which you have not rendered any services. This reconciliation you should be able to match with at the time of filing Form 9. Because your turnover as per 3B less advance received will only give you the turnover as per P&L account. If you do not do this reconciliation, it is very difficult for you to file Form 9. And one more reconciliation is regarding sale to distinct persons. The concept of stock transfer is no more. I have a branch in Chennai, I have a branch in say Hyderabad. When I am going to move goods from Chennai to Hyderabad, I can do it only through a tax invoice. That means, for me it is sale, for my Hyderabad branch it is purchase. So I will pay tax here and Hyderabad will take the input of that. I will pay an IGST tax and Hyderabad will take an input. So this is from one packet to another. So in my books, this will not find a place. My profit and loss account, this will not be added as a turnover, but in 3B, this will be added to the total outward taxable supplies. This is one more point of reconciliation. Remember to do it in case of Form 9. Suddenly you get a doubt as to why my turnover in P&L account does not tally with 3B turnover. This will be the two major reasons. One is advance received and the second one is sale to distinct persons. Distinct persons, persons with the same PAN number but multiple registrations. Right. Next one. 11B1 and 11B2 are adjustment of invoice. That is, earlier you have paid an advance for which you are raising an invoice can be adjusted in table 11B, 11B1 and 11B2. Okay. 12. HS1, HSNY summary of outward supplies. This is again an important area. Morning you did registration, isn't it? Registration, did you talk about this HSN issues? Okay. Sir? Morning, what was the session, sir?
Maybe scope of supply, time of supply.
Oh, okay, sir. Okay. Anyway, for the benefit of the audience, I'll touch upon registration now because that is important here. There are two sets of GST SSEs. One set of SSEs were migrated from the earlier tax regime. Another set of SSEs is a new SSE. Okay. At the time of migration, there was one column, tea time, 5 minutes. There was one column which spoke about what are the goods and services that the person is dealing in, where you are required to give the HSN code. The SAC was not available. Service tax code was not available at that time. Service accounting code was not available. HSN code was there. You were permitted to give 5 commodities or 5 services for the benefit. If it is a new SSE, in the application form, there was a tab which asks you to give the HSN code. HSN code is the common code that is used for identifying the goods or services. The Act says, within a month of changing your deal in goods or services, you have to report it in the website. There is one column calling amendment to non-core fields and core fields. In the registration tab in the dashboard, when you click on the registration tab, there are 2 amendments which you can make. One is amendment to core field and second one is amendment to non-core field. There you have to add the goods or services that you are likely to deal with. Because that too, when you are going to be a person whose turnover is going to be 1.5 crores, because the Act says, this area is very important, that's why I am taking much of my time. The Act says, if your turnover is less than 1.5 crores, you don't have to give any HSN code. If your turnover is 1.5 crores or 5 crores, you have to give 2 digits of HSN code. If the turnover is more than 5 crores, you have to give 4 digits of HSN code. And HSN code consists of 8 digits. It is taken from the Central Excise Tariff Act. It has been just taken from that and shifted to GST. Okay. So the first 2 will be the chapter heading, second 2 will be the subheading, third 2 will be the sub-subheading. That is how it proceeds. So if you are going to be a dealer in less than 1.5 crores, no issues. But if, why I am specifically raising this issue is, supposing you put some number here on the product that you deal, and this HSN code does not find a part in your registration, the authorities have every right to send a notice telling that why you are dealing in this particular product without intimating the department. And that's a time limit, 30 days. These are areas on which we will be getting notices on a later day. Right? So be very careful with the HSN notes. So if you are going to add something, please check your registration area because it happens in a minute. You don't have to go to the department, give a letter and all the stuff. Online you can do the change and include the HSN codes that you are dealing with. Okay. Right. Yes, sir.
Is it applies even to our purchases? Like inward.
Yes, sir. Both inward and outward.
Even generally what happens in many industries, they used to give some compliments, gift or something like
Yes,
that.
yes.
Even that need to be included?
No, as such the interpretation is only for the outward supplies. Because on that is a thing on which you pay taxes, but you have to understand that it does not say what is the HSN code you are dealing in outward supplies. It says HSN code dealt with. So you have to give both inward and outward. And the government, the department is not very strict about all these things because it is at the implementation level. But to safeguard your skin, it is better that if you are going into a new product area, say for example, I am not very comfortable with these numbers, but anyway let me tell you, for example, you are a person dealing with chemical products. The head, let us assume 27. So under 27, any number of sub-products you deal with, you do not have to report, you are safe. But instead of 27, suddenly you want to diversify your activities to papers and printing. For that the HSN code is, let us assume it is 18. You cannot deal in 18 if you are not registered with your department.
Even for packing materials that need to be included?
Yes.
So
Yes. Slowly when, this GST Act as such is evolving. The main idea of GST is to curb the black money. to control, to have a control, to have a check each and everywhere. If you see the difference between earlier and the new tax regime, you see the PAN number, PAN based registrations, my account, you can check in GST, all these are only to curb these practices. So the HSN code over a period of time will be made mandatory. The department can raise a query or can ask you as to why you are dealing in a product for which you are not registered for. Because we take a registration for certain HSN codes and certain SAC codes, the department can ask.
Previously, even under VAT, there can be some questions like when you transport some goods, they used to tell that this item is not in your registration
Yes.
certificate. Like that thing again comes here also.
Yes, very much.
So even for compliments, they used to tell that in that VAT regime, we used to show the certificate that compliments is returned, so it should be exempted. Now, at that time even they were telling that specific item name should be there and all.
Yes.
So that is equally applicable.
Yes, very much. If VAT itself is applicable, why not GST, sir? It has become a nationwide tax. Okay, right. Please provide either HSN description of the supplies. Both the fields cannot be blank. HSN code and so comfortably, if you see the first line, HSN wise summary of only outward supplies. You do not have to give the HSN summary of the inward supplies, so you are safe. So for outward supplies, HSN number, description, UQC, total quantity, total value, total taxable value, integrated tax, central tax and state tax. So the system is going to decide whether you have come under the 1.5 crores or above 1.5 crores. So if you are going to come under above 1.5 crores, system will not allow you to submit this page at all. That is the issue because it is an automated page. And now I think they are quite lenient as such. Though these red color asterisk marks are saying that it is mandatory, still you can file your details. This is what the importance of all these areas, because in form 9 there is a column to say what is the HSMI total summary. So that will definitely throw some light on once you prepare. Okay, table. Can we just extend this for 5 more minutes and then go for tea? Is that okay with you? Fine. Documents issued, invoice. Many of us do not give importance to this. But again, this will be a problem for your form 9. Documents issued during the period, invoices for outward supplies, number, serial number, total number, cancelled, net issued and action. All of you must remember that when you go through the act, the rule for maintaining the invoices, every year a fresh invoice has to be issued. The number has to start from a continuous series. That will play a major role in reporting these details. Number, serial number, total number, cancelled, net issued. But for the assessee it is very beneficial. Not only from the department point of view, for an accountant, an assessee, an owner of the business can have full control because he will be able to know what is the total number of invoices issued, what is cancelled and what is reported in GST. In case there is going to be bill trading, in case an accountant is going to make a fault, he will be able to identify this. Then invoices for inward supply from unregistered persons, you can here report here the number, revised invoice number, debit note number, credit note number, receipt voucher. Remember, receipt voucher is the document that you give for advance received. This receipt voucher should match with your tax invoice for setting of your advance received liability. Payment voucher, when you make the payment, refund voucher. Supposing you receive an advance and the service does not take place, you have to refund, you can send it only through a refund voucher. Delivery challan for job work, delivery challan for supply and approval, this we'll discuss under job work heading. Delivery challan in case of liquid gas, delivery challan in case other than by way of supply. 11 years for amending your, those are the documents which you have to mention only the numbers. 11 years for amended tax liability. We will just stop here and continue after our month original POS. Other than e-commerce, you have to specifically mention here in tab 10. Tab 6A, this exports invoices GST or money is not relevant. For a very short period, this money was there, but you have to make some updations in 1A to get the correct benefit. Now it is being done away with. You have to give the invoice number, invoice date, port code, which you have already seen that in detail. Total invoice value with payment and without payment. Okay, 6A exports invoices, there you will mention the taxable value. TDS credit and TCS credit received. This we have already discussed in detail, but this is how your system shows. Your TDS credit, can you see here? total accepted count, accepted value, accepted tax, rejected count, rejected taxable value, rejected amount. All these things will come here in TDS credit. Unless and otherwise you accept the TDS credit, it will not come. And remember, the TDS credit that you accept does not go and sit in an electronic credit ledger, it goes and sits in an electronic cash ledger. You can make the payment only from the cash. It is not an input at all. You cannot call it as an input tax credit. It is a totally different thing. It is a TDS credit. This will sit only in your electronic cash ledger after you accepting the GSTR 7. That electronic cash ledger amount you can use it to pay off your liability. Amendment to TDS credit received, TDS credit received, and TCS as the case may be. You will have something like this. Your TDS credit received, process records will be something like this. The GST of the deductor will come, tax period will come, taxable value will come, amount deducted. Can you see the last column? Accepted, accepted, no action taken. So if you have no action taken means you have to select that, either accept or reject it, so that the benefit will come to your electronic cash ledger. Right. This is how your 2A is going to appear, we are going to see. Your 2A will consist of all these tabs. Your B2B invoices, credit notes, debit notes, amendment to B invoices, amendment to credit notes and debit notes. Your ISD credit, your TDS credit and TCS credit. So if you select on B2B invoices, you have something like this. I just wanted to concentrate on the last column, that is I specifically took this. If you see here, this tells you the B2B invoices, supplier details, supplier name, counterparty submit status, no, yes, no. What does it actually mean? When it is an yes, the party has uploaded the invoice and submitted the GSTR1 return. If it is a no, the party has uploaded the invoices and not submitted the one return. That is the difference between that yes and no. As long as he has uploaded the invoices, the credit will come to you. You don't have to be bothered whether he files a return or not. It is not your headache. That is why this is so. If it is a no, you can check that the GST return would not have been filed. The data will be uploaded in the system. That is why this no, yes is very, very important. If it is a no, it is better that you inform your the other party to upload the GSTR1 properly so that you will get the credit. Because only when it is an yes, you will get the credit. Even though if he has uploaded the invoices, I am sorry, it is slightly misinterpreted here. Even though the invoices are uploaded in the system by the other party, unless and otherwise he uploads the return, you will not get the credit. So if it is a no here, he has not uploaded, the invoices are available, but he has not uploaded the return, you will not get the credit for such invoices. Okay, right. You can ask all these JSON things I have already explained to you. The same procedure you will have to follow for this. This is an offline tool, various offline tools are available. Now for Form 9 also the offline tool has come. For anything above 500 entries, you can upload the data using the offline tool and proceed further. The options are very much available, it is self-explanatory. This is how an offline tool Excel sheet will appear. So if you are going to, so many softwares they give you this offer, comfortable GST filing. You have the WebTel, you have the Tally, you have the Zorro, you have the ClearTax. So many softwares they give that, but remember, software is always garbage in and garbage out. Unless otherwise you tell the correct thing, it is not going to assimilate the information. So your smartness is to put the information correctly in the correct places. If you give the information correctly, it is going to do a hell of a lot of things for you. One example that I can give is Tally. With Tally, you can file your GSTR 3B. If you open the GSTR 3B, there will be one column in Tally telling the number of vouchers for the period, number of voucher matching, number of voucher mismatching. If there is even one mismatch voucher, the system will not prepare the GSTR 3B. That means mismatched voucher will not be considered for uploading your GSTR 3B or 1. So if you do that, that means you are actually omitting those particular invoices or vouchers. So if you are using a Tally, you have to ensure that there is a 0. If there is not a 0, some 15 invoices are, there is a mismatch in 15 invoices, then you have to revisit those invoices and make the necessary corrections. Okay. GSTR 7, which I have already discussed to you, this is how GSTR 7 appears. Return for tax deducted at source, details of tax deducted at source, amendment to TDS details. You give the GSTN of the deductee, receiver name gets auto-populated. Amount paid to deductee on which tax is deducted, whatever tax deducted, just a self-explanatory thing. If at all you want amendment, say for example the deductee is rejected, then you can go back to this, make the necessary alterations and do the corrections here. Then 5 and 6, here this is the account through which you make the payment of taxes. Debit entries in electronic cash ledger for TDS payment will somehow appear like this. This effect will go to the electronic cash ledger of the other party. GSTR 4, quarterly return by compounding dealer. All of you are very familiar that compounding dealer cannot collect a tax. That's a rule. So if you see the entire return, there will not be any provision for individual line collections. Only the total tax payable will be there. Quarterly return for registered person opting for composition levy. Okay. Same thing, 4A, 4B, inward supplies, import of service, amendment of inward supplies, amendment of inward supplies, these are the columns. There is a similar nature which all of you are familiar with, just some important areas just we look into. Okay, just a moment please. Here B2B, supplier GST number, invoice number, total invoice value. Tax value will not be there because you cannot collect taxes from the other party. Okay, inward supplies unregistered, invoice number, invoice date, total invoice value. The B2B unregistered, you just fill it in this column. It is like how you fill GSTR1, similar to GSTR4. This is a session where we cover the entire monthly returns. I have just shown some slides for your reference. Import of services, amendment of inward supplies, amendment of inward supplies unregistered. Then see, whenever there is an amendment, I just want to show this. It lasts only for the original invoice number first. If only it is able to identify the original invoice number in the system, it will permit you to amend. Otherwise, it will throw an error telling that there are no such invoices in the system. That will be the error that will be thrown. Credit note or debit note registered, unregistered, same way. Tax on outward supplies, here only you will just put, because you are just going to calculate, say this is my turnover, on which I am paying the 2%, 1% or 0.5%, depending upon whether you are a manufacturer or a restaurant owner or a trader, as the case may be. From April 1st, 2019, the compounding option is now available for service providers also separately, and for traders 10% of your total income, if it is for the purpose of services, still you can go for compounding. These are the latest amendments with respect to compounding dealers. Amendment of credit notes and debit notes, nothing to explain here, same thing. I'll just skip all these slides. Okay, GSTR 4A, auto drafted, as I told you. How 2A will get all the details, 4A also will give you all the details. This is for TCS, which is to be filed by e-commerce operators. I am just giving the PDF. It is self-explanatory. You do not have any discussions to be made here. Details of supplies made through e-commerce operators, the various tax values. Okay, all these things will be there here. Okay. You can go to the track return status, search by ARN number. The status says filed valid, mode of filing will be there. That will tell you whether you have filed all your returns correctly without any issues. Same thing goes good for tax. View e-filed returns, you can go to that option. You can view or download the PDF form. If you have seen that GSTR now, there is a facility to download the values of GSTR 2A, GSTR 3B, GSTR 1 summary. Very sorry to tell you, certain figures do not match. So you better go by the PDF form and do it manually to add the total of supplies. The data, there are so many errors in the summary data. So please be very careful when you are going to use it for Form 9 for annual return. Then file returns. If you have opted for quarterly, accordingly you have to give an yes or no. Right. These are the proposed GST returns, profile based returns. As I told you, quarterly returns for turnover less than 5 crores. Monthly payment, null returns you can give by SMS. Sahaj returns for B2CS. Sugam returns for B2B, they are going to permit 2 revisions. These are all on the pipeline. Let us maybe wait in the month of July to see what are the other amendments with respect to GST. Now we are going to complete this GST returns. If at all you have any doubts on these returns, you can ask me anything related to returns, so that we will proceed to the next one, job work. Shall I proceed to job work? Job work is an important area of discussions. One example let me give you. Why this assumes greater importance? Because earlier, who are job workers for common understanding? Let us take the case of a tailor. Okay, a tailor who stitches clothes. You have now designer tailors who really charge you a fortune, right? You might buy a sari for 5,000 rupees, you might stitch a blouse for 25,000 rupees with all the artwork and all those stuff. What do they actually do? You approach them, you give some material and tell them this is how my dress is to be stitched. It's no gender bias here, both for men and women. Okay, let it be a kurta which you want to wear it for the reception or some nice sari. It's an example which you can comfortably connect with. So you go to the tailor and to tell them that, see, this is the work I want it to be done and this is the material in which I want it to be done. The design is done by the tailor. He does the stitching, he does everything and makes it into a nice dress and gives it to you. You are giving a material and gives it to you. Then a beautiful example of a job work. Job work is a person who is going to apply his mind and do some activity on the goods belonging to another person. Earlier what had happened was, they never were brought under VAT central excise because they will claim that the raw material does not belong to them. Central excise is for manufacture of goods. When the raw material does not belong to them, how can you call them a manufacturer? So they escape from central excise. VAT. They used to say we are not traders, we are not buying and selling, we are doing some activity. It is not good at all. Service tax, they used to say we are buying raw materials and doing some changes, so we are not liable to pay service tax also. To avoid all these things, they brought the definition of job work under GST. So these are the things that we are going to see. Meaning of job work, a business model, registration of job work, documentation and transitionary provisions. So what is job work? Section 2, subsection 68 gives definition for job work. Section 19 talks about what is the input eligibility for a job worker. Section 141 talks about the transitional provisions applicable to a job worker. 143 talks about job work procedures and 55 talks about delivery challan. Before going to the definition of job worker, the EW bill data plays a major role in case of job work transactions. If you have seen an EWB website, there are 6 options to select what is the purpose of generating the EWB. There will be an option which says other than supply. That means if it is a supply, an EWB bill can be generated only with a supporting invoice. If it is other than supply, an EWB bill can be E-way bill can be generated with the delivery challan. Here this job workers will play a major role. We'll just go see one by one. To go by the definition, means a treatment or process undertaken by a person on goods belonging to another registered person and the expression job worker shall be construed accordingly. So in the given example I can say the tailor is my job worker because the material is given by me. The material is owned by me. Right? So the tailor is a job worker. I give the material to him, then he will do something. So when he is going to do the stitching, he will be buying certain things. I cannot be. He might buy some sequins. He might buy threads. He might buy some color patchwork which is to be done on the particular dress. He will put his money. So when he is going to charge me, the charge will include all these consumable used on manufacturing this particular dress. I will not say manufacturing, tailoring this dress because again it will lead to confusion. So this clearly falls under the case of job work. So if I am a designer, let us not go to see customer based. If I am a designer, I will get the orders, I will do the designing, I will use some software to do the designing, I will show the design to my group of tailors to whom I outsource. They will do the stitching and give back to me. So when I patent it as a design, the patent will be in my name, the design is created by me, so I am the manufacturer, I own the goods. Those tailors can be called as job workers. In the process of tailoring, I will appoint tailor A, for example, to draw the design. Tailor B will attach the sequins. Tailor 3 will make it complete into a blouse or a sari or whatever dress it might be and give it back to me. there are three persons involved. For example, expanding the job worker, I am trying to explain this. Job worker 1, job worker 2, or tailor 1, tailor 2, tailor 3, and then the goods come back to me. So many things might happen in the course. One situation is where sorry, I give it to tailor 1, then it goes to tailor 2, tailor 3 completes it, and I request the tailor, see, I am not able to collect it and send it, you send it from your place to the customer. This is one possible. Another way is, tailor 1 gives it to 2, tailor 2 gives it to 3, 3 comes and gives it to me, then I give it to the customer and make a bill. This is also possible. For buying this material, what I do, I place an order to Mumbai. I buy the material, because after coming the material, I don't have to give it to tailor 1. I ask the Mumbai person to directly deliver it to tailor 1. These are the job working models that might happen in the job work, which you are going to see one by one. And let us see the effect of each of these modules. Model 1, input sent for processing, goods sent back after processing, nobody in between. The manufacturer sends the goods to the job worker completes it and gives it back. It might be the same way, 1, 2, 3, 3, 2, 1. Or it might be 1, 2, 3 and directly, they don't have to give it back to 2 and 1. They can directly give it back to me, the manufacturer. This is simple model. Now, here what happens? Out of these three, we are extending this example. Let us assume tailor 1 is a registered tailor, GST registered tailor, because his income is more than 20 lakhs, he is a GST registered tailor. Tailor 2 is unregistered. Tailor 3 is registered. If these are the situations, the decisions on job worker will slightly get complicated more and more. Let us see. In the first case, in a simple case, manufacturer will claim ITC on the input sent. Okay? And he can send and collect back goods without GST. So when I am delivering or I am sending this raw material of the textile to tailor 1, I don't have to collect any GST because I am not selling. It is not supply. It does not come under the definition of supply. I am giving it and I am going to put it back. So I don't have to charge this particular GST to tailor 1. Okay. So tailor 1, let us assume 2 and 3 are not there for this example. 1 will complete all the work and give back to me. So he will collect GST if he is registered. He will make a bill. Supposing the tailor 1, as I told you, is registered here. The work is say for 10,000 rupees. Standard rate of service, standard rate for service is 18%. So 11,800 rupees he will collect from me. This 1,800 he will report it in his GSTR1. This 1,800 will be input for me and I will take the input. No complications, very simple. If the job worker is not registered, simple, I will pay it under RC. Right? This is what, if the job worker is registered, he will pay the tax, he will collect it from me, pay the tax, report it in GSTR1 and I will take the input. If the job worker is not registered, he will only raise the bill for his work. I will have to pay it under RCM, and after paying it in RCM, I can claim it in my input tax credit. This is model 1. Compulsorily applicable. So that is what is the importance here. Model 2. The manufacturer, as I told you, same tailor example we use. I order the material from Mumbai and I ship it to the tailor 1 directly. Even then it is allowed. Bill to ship to model. Even then I can take the input. It will be directly delivered. The bill will come to my name and I will see that the work is done by the job worker. So still I can send and collect back goods without GST, claim ITC on inputs. Job worker will collect his income for GST if registered. If job worker is not registered, again RCM is applicable. What happens is here, there are so many practical issues involved. How will the job worker bill to the manufacturer? That is where so many issues will come. I will issue it as a package. If I am a registered tailor, let us assume now I am playing the role of the tailor. When I charge, say for example, of blouse for 25,000 rupees, it not only involves the manpower but the consumables involved in making that particular product. So I can only charge a composite supply bill. I cannot bill him separately as say for example, cost of materials, I cannot charge him separately, and cost of services I cannot charge him separately. I have to charge only a single bill of composite supply only I have to take, because say for example the button that I used might cost only 5%. whereas my service is 18% because I am a stitching work that I am doing. So I cannot differentiate and give two separate bills of 5% and 18%. I have to give only a consolidated bill. Right. Model 3. The manufacturer gives to job worker the goods sent. Now I am coming to the last one. Tailor 1, tailor 2 and tailor 3. The act says when you move goods from one job worker to the other, not much of an issue. Just by delivery channel, you just keep moving it. Suppose tailor 3 here, he is delivering the good directly to the customer. Please be with me. If he is delivering the goods directly to the customer, the place of the job worker must be registered either in his name or in the name of the manufacturer. That is where this intricacy will come. Let me repeat once again. In case the job worker is going to deliver the goods directly to the other party customer as per the instructions of the manufacturer, either he must have registered himself as a GST assessee. If he is not registered, you have to include his place of business in additional place of business in the registration. Only then it can be done. Because for e-label, the link is very much mandatory. But from one job worker to other job worker, it is not required. In the case of example that I told you, tailor 1 registered, tailor 2 unregistered, tailor 3 registered. So manufacturer will create an e-label, send goods from myself to tailor. I will send goods from my place to tailor 1. E-label, registration will be the delivery challan. Tailor 1 will send the goods to tailor 2, e-label, delivery challan. Tailor 2 to tailor 3, e-label, delivery challan. And tailor 3 is going to send the goods because your address matters a lot here. When the tailor 3 sends the good directly to the customer, unless and otherwise there is some registration, whether it is his name or whether it is in the manufacturer name as additional place of business, the last transaction is not possible. That is what I have explained here. Only when place of business is registered, all other things remain the same. You can claim ITC on inputs, can send and collect back goods without IGST. Job worker collects if it is registered, RCB is applicable if it is not registered. All those things remain the same. Model 4. Left any other model. Same thing, when the place of business is registered. So these are the conditions. He has to register if aggregate job for the job worker. The threshold limit simply applies. The 20 lakhs limit applies. If it is only exceeding 20 lakhs, he has to register. In the case of interstate job work, then threshold limit will not apply. From rupee 1, you have to get yourself registered. Job worker will pay GST on labor charges if registered. Manufacturer will pay GST on labor charges if job worker is not registered, which I already explained to you. Then there is this notification where this jewellery, goldsmith and silversmith, they are exempted from obtaining a registration. That is one condition here for interstate supply. That is, you get in case of interstate supply of job work, the limit does not apply, but for these people the limit applies. That means not that all jewellers or goldsmith will be exempted. If he is an interstate goldsmith person, if his turnover exceeds 20 lakhs, he has to register. That is the special notification which you have got to remember. Remember people, GST is driven by notifications. We have to always keep referring to only notifications. Input tax credit, manufacturer can claim ITC on goods sent for job work, on goods used by job work. So what is the time limit? Inputs to be sent, 1 year time limit. For capital goods it is 3 years. If not, what happens? The transactions to be treated as supply in the hands of the job worker. This is what is a very important documentation. Delivery challan. The delivery challan normally consists of date and number of the delivery challan, name and address and GST number of the consignor, name, address and GST of the consignee, HSN code and description of goods, quantity, taxable value, tax rate and tax amount, place of supply, signature. I just want to talk about EWB here, that is e-label here. All of you know that the Act says there are no check posts under GST. It is pan-India. You can do a business to a person in Kashmir, you can do a business in Calcutta, the business will develop, market will develop. No officer is going to have a check post barricade and stop you. It is not so. Why they cannot do so? Because outside our ICA Bhavan, when you leave outside GST Bhavan, the officer can immediately stop a lorry, find out what is there, because check post is not an identified place. Each and every place that the department is going to stop you becomes a check post for a simple reason of the EWP. All of you must have heard about this radio frequency identifying device that has been made mandatory, where a radio RFID, we call it, is radio frequency identifying device, which is fixed to the lorry. Supposing you generate an e-waybill, you know the contents, you have to mention the transport number also. So supposing I am sending a lorry of goods from Chennai to Hyderabad. I am not very good in geography, but assuming that this particular lorry does not go directly to Hyderabad, it goes via Karnataka. Just for hypothetical situation. The officer will identify this from his place using the RFID, because he will be able to spot the transport goods moving from one place to another in front of the computer system. So that way they can stop you at any point of time. So that is why I am telling you, don't need a check post in the border of a state. Anywhere it can be stopped and queries can be raised. That is where the delivery challan has to be very clear. When you upload a delivery challan in the system, irrespective of whether it is mandatory or not mandatory, to safeguard your goods, to safeguard your interest, you have to be very specific about the items to be mentioned in the delivery challan. Like again, can you see here, the HSN code and description of goods keep appearing again and again and again. HSN code, you are sending a good which is not listed in your registration, then you are in a suit. You have to be very careful in handling this HSN codes. Quantity, taxable value, tax rate, tax amount, where the transportation is for the supply to the consignee. Why this delivery challan plays a major role, we'll see now. Okay. Delivery challan, now it has to be in triplicate. The original copy is marked as original for the consignee, duplicate for the transporter, triplicate being marked as triplicate for the consignor. You know about this consolidated e-waybill, because in the same lorry there may be so many persons sending so many goods. So the transporter will consolidate all the e-waybills and make raise a single consolidated e-waybill, and that e-waybill you will use it for transporting the goods. Okay. Transitional provisions for job worker. This was a major, creating major issues, because just because GST was introduced on 12th midnight of July 1st, nobody can stop the business and change it. Some work will be lying with the job worker, some work will be in the process of transportation. So these were the rules which were very specific to transitional provisions for job worker. If the goods are sent before 1/7/2017, you might be wondering, we are already in April 2019, why we have to discuss these points. Remember, Form 9 is not yet over. Until and otherwise we submit our Form 9C and Form 9 and 9C, we should be again and again learning all these things, because Form 9 of 2018 you won't have much of a problem. But Form 9 of 2017-18 will have lots of problem regarding this transitional credit. You remember the government said even if you don't have an excise invoice, you can take some 40% of the credit by filing Tran 1 and Tran 2. All these consolidations will play a very, very major role now. For transitional provisions itself, you have to spend separate time to identify whether the credits have been taken properly. Just because the credit is available, if you have taken wrong credit, you are in a soup, because when you do an input tax reversal, the liability of interest starts from the day on which you have taken the input. You are going to file Form 9 after 22 months, right? Not even 22, 24, because June is the last day. Anyway, we will be working only in the last day. So 24 months of interest of 18% for 1 year and 24% for the second subsequent year. Imagine the huge amount of interest we are likely to face when you are going to file Form 9 just because of this transitional provisions. It is not only for job work, it is applicable to all other cases. Processing, testing, repair and conditioning, if you sent before 1/7/2017, received on or before 31/12, no taxes leviable. If it is after 31/12/2017, it is treated as a supply and ITC to be recovered. So if you do not, if the accountant or the person who is handling GST has not given importance to this one, if you have not seen on which date it is recovered, our duty plays a major role. As a GST auditor, you have to give importance to all these dates. You have to see whether, so it is not only the value you are going to check, it is not only the tax rate you are going to check, You are also going to check the dates, because this is one date which you have to remember in June, in 1718. Another date is October 14th, 2017, because only up to October 2014, 9/4 reverse charge was there. After that, reverse charge was not there. So imagine how many things you have to give importance to as far as this dates are concerned. Okay, right. Goods sent for further processing, sent before 1/7/2017, same issue. Further processing, received on or before 31/12/2017, no tax is leviable. Received after 31/12/2017, so you will have to treat it as supply and ITC to be recovered. Consideration rate of 5% for certain job work. Normally job work comes under services, it is chargeable at 18%, but for certain job work it is only a 5% that is being levied. Normally when I deliver a lecture on GST, any forum, I never talk of sections and I never talk of rates, because that morning some rate would have changed and I would not want to give any wrong information, other than giving wrong information. Keeping quiet is better than giving wrong information, so I never communicate. But once I say this, then I would have rechecked that the rate still exists. Printing of newspapers, textile yarns, textile fabrics and garments, jewelry, printing of books, printing of all goods falling under chapter 48 or 49. Processing of hide, skin and leather, all these attract a 5% rate. Manufacture of leather goods or footwear, or food. See, when you see here, this is a problem. Consider rate of 5%. So you have to identify from which date this 5% came into play. Normally job work is for 18%. So from which day you have to do your form 9 only on the basis of these dates. Manufacture of leather goods or footwear, all food and food products. Products falling under 23. Manufacture of clay bricks, handicraft goods. All this will come under 5%. This came by a special notification. See here, this is what I was again telling. For tailoring and manufacture of umbrella, previously the GST rate was 12%. With effect from 13/10/2017, notification 11/2017, central tax 8/2017, integrated tax, GST rate applicable is 5%. So if you are a job worker and manufacturing umbrella, or even if you are not registered, this will apply for the manufacturer. He would have to have paid the RCM at 12% before 13/10 and 5% after 13/10. Imagine Form 9 does not help you to take additional credit. You can only pay additional liability. No benefits is given with respect to input tax credit, just remember that. Okay, rate of tax on services in relation to printing work. This is one thing that you have to remember. Services on goods belonging to another person. Printing of newspaper, books including braille books, journals and periodicals is 5%. Service on goods belonging to another person, printing of all goods falling under chapter 48, 49 is 12%. Any ancillary services in relation to printing is 5%. Rate of tax on service. See, job worker printing, material is supplied by the publisher, the rate is 12%. For printing services, material provided by the printer himself, it is 5% in case of newspaper and 12% in case of other goods. This is the, see how minute they are. You can just not say I am in the business of printing. You have to also decide what type of printing you do, whether you do newsbook and books or whether you do other goods. Normally if you have a client like Menaka cards doing printing of invitations, all these things will play a major role. Special provisions relating to molds, dies, jigs and fixtures, exactly taken from excise as such. There is no limit for bringing back molds, dies, jigs and fixtures or tools. What is this molds, dies and fixtures? This is the template with which they will be using it. Say for example, Vinayaka Chaturthi, you manufacture so many Vinayaka idols. So the mold, they prepare the mold, then on the mold they will apply the clay, get the Vinayaka idol, then they paint it. So that we call it as molds. They are permanent in nature. You don't have to keep it because there will be one person who will be preparing this Vinayaka dolls as such. So the mold will be with him, in spite of him being a job worker, because he will require to do that to continue the process. That is why this exemption is given. That is, molds, dies, jigs and fixtures or tools need not, the time limit does not apply. The job worker can sell them as scrap and payment of GST. Suppose the mold is broken, the particular tool is broken, he doesn't have to send back the broken molds or tools, he can sell it at make a money out of it. If the job worker is not registered, GST can be paid by, he will sell it, report it to the principal, accordingly the principal will take action against that. Clearance of waste and scrap arising during job work. Scrap generated during job work will be supplied on payment of tax. The job worker is registered. Tax shall be paid by principal if job worker is not registered. When the principal and job worker are in different states, IGST shall be charged on scrap. That is self-explanatory, isn't it? Okay, I just wanted to spend time here because this GST ITC 4 is the form to be submitted by the principal for claiming ITC of goods sent to job work. What is so special about this is because this is still live. Earlier the date was 31/3/2019 for the year 17-18. Now the government has extended this date to 36/2019. So 36/2019. Now let me talk about what is this ITC 4. ITC 4 is a form which the principal has to submit to the department every quarter. 10th of the succeeding month of every quarter. That is for April, May, June, July 10th, July, August, September, October 10th, so on and so forth. For September, for the year 17-18, the ITC forms did not come. They were available in PDF. They were not made it into a software form. Now the software form has lot of issues, still has a lot of issues. They are being slowly identified. That is why the time extension is given. So, as I told you, the manufacturer can claim ITC on goods sent to jobber. To claim that, only if this form is submitted, he will be able to claim, otherwise he will not be able to claim. For that, the extension of time is 36/2019. But again the question arises, if he is going to do ITC 4, the last day for claiming inputs pertaining to 17-18 is 31/3/2019. How the department is going to match this anomaly, I am not sure. Okay, this GST 4, how does it appear? Details of inputs, capital goods sent for job work and received back or sent directly to customer. So the period here is always a quarter. See here, table 4, details of inputs, capital goods sent for job work. Table 5, just to a comparison, will definitely you will be able to appreciate this thing. Table 4 talks about details of inputs, capital goods sent for job work. Table 5 talks about details of inputs, capital goods received back or sent out from business place of job work. Why these two tables are separate? Because the date of sending and the date of receiving. If it is goods, the date of sending and date of receiving must be within the period of 12 months. If it is capital goods, the date of sending and date of receiving should be period of 3 years. That is why there are two separate tables, so the date that you enter here matters a lot. You cannot give some blind date because the delivery challan and the E-way bill will play a very major role in case of job work matching of table 4 and table 5. See, this is how it operates. Job worker type, you have to say whether he is registered or not registered. You will have to feed the GSTIN number, the challan number, the delivery challan number, the challan date. Item details, you have to mention what is the nature of goods, goods type, UQC, unit quantity code. You have already come across this term, whether it is numbers, kilograms, meters, square meters, all those things you have to mention here. Quantity, taxable value, rate of tax. Why rate of tax is given is to identify you are not going to pay any tax. You are only sending it through a delivery challan. The value of goods moved, for that only they are just asking this query as to rate of tax. Integrated tax or cess as the case may be. If the job worker is unregistered, the columns differ. You select as unregistered the state code, challan number, challan date, goods type, description of goods, UQC, quantity, taxable value, integrated tax and cess. Right. Details of inputs, capital goods sent for job worker and received back or sent directly to customer. This is under table 5. In table 5, Please appreciate these lines. This is where I just want to spend some time. The job worker type is registered or unregistered. There is no question on that. You enter the GST and IN of the supplier, fine. Original challan number. This original challan number is only important. The challan number that you entered in table 4 will be re-entered here to match the date of sending and the date of receiving. It is not a new number, original challan number here. Original challan date, the date on which the goods were sent to the job worker also will be written here. Item details, nature of transaction, challan number, challan date and GSTIN number. Okay, same thing. That is what is the criteria that will decide whether the goods have been received within a period of 1 year or within the period of the possible practical issues. I just want to take 2 minutes of your time to discuss this. See, supposing I am a manufacturer of vessels. Steel basically is required, right? Steel vessels, just for example. How do you determine the receipt and payments? Or let's take the case of this gold jewelry shops. So many, T Nagar is full of jewelry shops here. Kalyan jewelry, Lalita jewelry, GRT, blah blah blah. How will they send the goods to the goldsmith? Because they only brand it. They give the gold to some goldsmith and manufacture gold and send it. See, I send a bar of 1 kg of jewelry. Will the 1 kg come back to me? No. Maybe 900 grams. The 100 grams might be kept by the goldsmith to perform another job or given by the particular jewelry shop. So how are you monitor the movement of stock or giving it to the department is a very big question, because not that all the stock that you send are not, you cannot identify that. How can I identify a gold bar? Or how can I identify a jewelry which is made from this particular gold bar which you have sent it for manufacturing? These are issues that you have to be very careful in case you are dealing with a job worker, because you have to identify. See why? Because as far as this GST, this is one fine example. Normally, I will tell a story for GST as such. So there was this house where three wise men went to a house to take some food for the day. The wife of the house was there. She said, please come in and have food. No, they said, no, when the family is not there, you are all alone, we will not enter the house. So we'll wait till your husband comes. The husband brings the daughter from the school. He had gone to pick up the daughter. The husband and daughter come home. They saw these 3 bearded wise men sitting outside. So your husband asked the wife, what is the matter? The wife says, these 3 people have come to ask for food. So we have to invite them. I was just waiting for you to. Again the entire family goes out and invites them for food. And they say, before coming into your house, let we introduce ourselves. The first person says, I am health. The second person says, I am wealth. Third person says, I am success. Second person says, it is success. First person says wealth. The third person says, I am love. So he said, only one of us can enter your house and have food. So they have a discussion. So whom to call? Wife says, no, let us call wealth, because we do not have money at home. Let us call wealth. Husband says, no, if you have success in life, wealth will automatically come, so let us call success. Because normally men think of success and women think of wealth. That's the standard paradox that we always use. The child says, no, why are you always calling wealth and success? Let us call love. So they decide to take on whatever the daughter says. So they go out and invite all the 3. When they say we want to welcome love, all the 3 people enter the house. This is normally a philosophical story that says love is always better than wealth and success. But I will apply these 3 analogies clearly to GST practice. This wealth, success and love are nothing but the act, knowledge of the act, knowledge of software and knowledge of accounting. Unless and otherwise you have a combination of 3, you cannot practice well. Let us take act. You are very thorough in act. But when you prepare a return here, when you upload a return, the first thing will be whether the A plus B matches. You will not worry about which section or which thing you are applying. You should be comfortable to use the software. You might have 2 softwares, an accounting software and a GST software. So your integration is there. So your knowledge of fact will not play much role while filing the return. Second one is knowledge of software. You have only knowledge of software. You do not remember all these notifications and the dates. Then you might end up applying, doing a wrong return. Third one, knowledge of accounting. That should be the one. So if you are very thorough in accounting also, unless and otherwise you are able to apply it on a software, apply it on act, still you cannot do. So what is wealth for you might be success for me. What is success for me might be love for somebody. But whatever it is, unless or otherwise the combination of knowledge of accounting, knowledge of software and knowledge of act by itself, you cannot be a successful GST practitioner. So coming back to this. So this is the original challan number which you have to enter, original challan date, and the software still has a problem. I have one client where 500 line entries were fed into the system. Then again 2000 line entries were fed into the JSON file. Out of 1000 entries were wrong. So we had to re-upload the entire JSON file. Now my system shows 4500 entries which I am not able to correct at all. We have gone for a grievance. They have gone for a grievance, yes. One important thing, let me tell you, practical thing. Whenever you have a problem with the GST and software, please remember to raise a ticket in grievance cell. Don't believe on calling the help desk. Whether they help you or not, always you must have a proof that you have raised a grievance, your software does not work. So you don't log into the system. In the GST website, down on the left hand side there is a column called submit grievance. You go to the submit grievance, select the grievance, because these are two issues you will face while filing the returns. That is why I wanted to take this up here. Select the grievance. The grievance will have a drop down menu asking for what for you are selecting the grievance. If you put returns and give a grievance for payment, it will not reply at all. So you have to decide which major head you are selecting. You select the grievance, submit the grievance, wait for the ticket to be raised. The system will say this particular ticket number is successfully raised. Keep a printout of that, because that will be the proof on a later date that because of the issue in GST you did not file the return, because this was the problem with transitional provision. That is why for migrated taxpayers they have given so much of extension, because so many migrations did not happen properly. So this is the thing, that whether it is for GST or one, whether it is for this filing ITC, we have filed a grievance. In the example that I told you, we have taken a screenshot. The screenshot, you have to give it with the screenshot. And when the reply comes, there is another headache. When the reply comes, the reply will say, please provide the following data without altering the subject code of this mail. That will be the information. Please call the help desk, ask them and reply this, because within 24 hours you don't reply this mail, you will get a mail saying the problem is resolved. Even without not being resolved, the mail will say the problem is resolved. So you have to follow these two steps. Apply for grievance. Take a screenshot of the problem, attach it, apply for grievance, see that the ticket number is generated. Follow that whenever the ticket number is generated, see that if you receive a mail something like this asking for additional details, you see that it is provided. Call the help desk and find out that they have received it also. Because this is by practical experience. They had asked me to send a PDF file of some data for a client. I have sent it. So my mailbox said message sent. I did not receive any reply. After 2 days, I got a mail telling that this problem is resolved without it being resolved. So I had to call the help desk umpteen number of times, and slowly they tell me I have to not change the subject line and send it to some other mail ID, not to the mail ID from which I received the reply to the grievance. So you have to be very careful on these particular areas whenever you raise a grievance to the department. Details of input capital is received back from job worker and sent out from business place to job worker. Job worker type to whom we are sending, you have to reply it here. Okay, this is regarding job work under GST. As such, we have come to the close of the session of GST. Right. One important thing, because we are in the process of doing our form 9, just a few important points that I thought I'll share it with you and close my the lecture for the day. You have date up to 36. Let us assume it is not going to be postponed. For every possible reason it will get postponed, but let us assume that it is not going to get postponed, because even if it is going to get postponed, again we have to only suffer. We have to only remember all the 17, 18 data. Imagine Why I am taking this topic now? Because when you prepare a Form 9, you are going to assimilate data for 22 months. Because all the amendments for 17-18 can be done up to this March. So, 9 months of 17-18 plus 12 months of 18-19, 21 months data you have to match with the P&L account for 12 months of 17-18. So that means you begin starting work right now. You first start working on your GST 3B and GSTR1. Sort out all the differences between 3B and GSTR1. The number of invoices that you have uploaded, the value of the invoice should match with your 3B for the tax that you have paid. Point number 1. After you do that, the second step is to match it with the, when I say returns now, there is not going to be any difference. If you have reconciled, 3B will be equal to GSTR1. Match this value with your books of accounts in your P&L. In your P&L, whatever income that you are going to report in your credit side of P&L account should match now. When it matches, as I told you, you will remember the two things. The advance received and sale to distinct person will not form a part of your P&L, so you can do a reconciliation on that. Number 2. This is regarding outward supplies. Inward supplies, you have to rework your tally, rework your webtel, because unless and otherwise, say for example, tally is a comfortable software that everybody uses. Of course, prudently you would have created heads like input GST, input IGST 12%, input CGST 6%, input CGST 6%. You would have created these heads. Did you create a major head called capital goods input, services input or goods input? Because in Form 9 you have to report them separately. Input on capital goods separately, input on services separately, and input on general goods separately. So you have to revisit your accounting. When you start changing your financials, you have to be very careful because these are the financials which have been already audited. So when you are going to for allocating these inputs between goods, services and capital goods, you have to see that the data is not messed up. You have to be very careful on that. You have to revisit and do the calculations separately. Goods, capital goods. Right? With this you will match. So now let us just imagine the debit side of P&L account. Debit side of P&L account will have salary, electricity bill, rent, printing and stationery, postage and telegram, depreciation, so on and so forth. So in these 10 or 15 items, you have to segregate them into 3. What is non-GST? What is GST? First 2. Under GST, you have to divide them into 3. What is eligible? What is not eligible? What comes under RCM? These many segregations are required before matching your books with the P&L account. After doing all these things, the problem will be that your financials will never match with your books of accounts. Because when the auditor will sign, will the accountant take care to make the insertions in the financial account is a very big question, because we are not going to see that later. So your financials, your books, your GSTR 3B and GSTR1 you have to entirely match, and you have to match the notifications also, the pre-notification activities and post-notification activities. So only if you start working on these reconciliation statements from now, you will be able to file your Form 9 at the end of by 36/2019. That is what is a very important thing that I wanted to share with you regarding Form 9. Thank you for your patient time. Any questions, if you have, you may ask me, and this is my mail ID. In case you want to have the soft copy of this data, you can mail me, or I leave the soft copy with the institute. You can get it from the institute. Thank you very much.